Good morning and welcome to Traders Corner's Investors Summit. My name is Anthony Chapman and it's a privilege to be your host today. And thank you for joining us. On our panel today, we have handpicked 7 trading experts to join us who are regarded as some of the greatest trading, investing, and wealth building minds in the industry. They have agreed to share their most consistent and profitable trading strategies with us in a free online educational forum. Today's show is packed with great information and discounted special offers, so let's get started. Our first presenter is a research associate at bigtrends.com, which provides investors with specific real-time stock and options strategies and investment education. Big Trends has been featured on CNBC, Fox News, Bloomberg Television, and a variety of other outlets, including the Wall Street Journal, Barron's, Forbes, Investors Business Daily, and USA Today. Ladies and gentlemen, here to present how we combined high win rate with high reward using weekly options is Mr. Dylan Pittman of Big Trends. Welcome back to Traders Corner, Dylan.
Thank you, Anthony. Thank you for the warm welcome. I'll go ahead and share my screen here. Anthony, I don't know if it's something on my end, it looks like I'm not able to share my screen quite yet.
Okay, let me see. I think you're right. I'm not seeing your screen yet. Can you try now?
Perfect. Looks like it just popped up. All right, you can see it?
Yes.
Perfect. All right, thank you, Anthony. So as Anthony says, I am a research associate or research analyst at Big Trends. So Big Trends is actually celebrating its 25-year anniversary actually just next month. So Big Trends has been around since 1999, as Anthony has said. And honestly, this is one of my favorite presentations to give. This is quickly becoming one of the most popular strategies at Big Trends. And really, it's what I've noticed most of our traders and subscribers of Big Trends have been asking for. You know, they've been asking for, you know, we want low cost options. We want a high win rate and we want to hit those large winning trades. Okay, so, you know, a lot of times, and unfortunately to a fault, and I've been in the same mindset where, you know, it's tough to combine high win rate and high reward. In fact, most of the times, you know, we're starting to see a sacrifice. That's what I've noticed throughout I've been trading for a decade now. You know, it's typically a sacrifice. To get that high reward, we're going to have to sacrifice the win rate. Or if you want that win rate, you're going to have to take those profits quickly, book them quickly to increase that win rate, but the reward is going to be much less. So, you know, after a lot of talking with our founder and CEO, Price Headley, and the other analysts at Big Trends, you know, we actually created this hybrid model, and it's how we've actually combined both high win rate and high reward using weekly options. So if you do have questions, don't hesitate to drop them out in the chat box, or you can always reach out to me at my personal email address, dylan@bigtrends.com. So we're going to go ahead and get started today, but as a reminder, the information provided in today's presentation is based on our proprietary research and is intended for illustrative purposes only, should not be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the bigtrends.com homepage for more information. So we're going to be talking about, like I said, what is quickly becoming one of our most popular strategies at Big Trends. It's using this hybrid model where we are able to combine a high reward and a high win rate historically using weekly options. So we're not trading same week options, we're actually trading options that would be expiring the following Friday. So for instance, if a trade were to come out today, we would be trading the October week 4 or next Friday's expiration. So I'm going to show you what a lot of these past trades have looked like. A lot of these trades, you know, have been able to run for some large winning trades. These trades have been sent to subscribers of, well, what we're calling the strategy 333 options, or the acronym T3O. So I'm going to break down the overall foundation of this strategy. I'm going to show you how it works, the indicators we're using, and then actually show you how you can start getting these new trades as soon as this afternoon. So we're going to go ahead and dive into our first trade, and we're really going to just take a quick look at this before we start breaking down the entirety of the strategy. So you're going to notice right now we just see one band. There's actually two bands. We're looking at an indicator that are referred to as Donchian channels, or on many trading platforms, these are also called price channels. So whenever we're talking about price channels or Donchian channels, the simplest definition is it's just going to mark where a swing high has been over a given set of bars or length. So this is often, and within big trends, we refer to these price channels as a systematic way to illustrate both support and resistance. Okay, if you've been using support and resistance, or if you've at one point been using it, support and resistance is one of the most foundational, or I should say the foundation of modern technical analysis. Support and resistance can oftentimes be quite subjective. Okay, many people draw support and resistance in different ways. Some people draw it through the wicks. Some people draw it from highs and lows. Some people draw it based on closes and opens. Again, all these different variations of support and resistance are, of course, subjective. So at big trends, what we want to do is eliminate subjectivity. We want to rely on something that we can consistently find historically as a true setup. Okay, we don't want to start changing our definition of support and resistance. So we are going to use what are referred to as price channels. Like I said, this is our way to systematically illustrate both support and resistance. So this is a recent trade, actually closed at the end of August on Apple. This is again trading the next week expirations, and we're trading 5 contracts, entering 5 contracts at $1.81. So trading Apple, these are actually just some out of the money options. $1.80, not too expensive, not too cheap for a trade on Apple, trading the following week's expiration. And you'll notice, and this is going to be a large part of today's presentation, pull out my pen here real quick. You'll notice that we're closing 4 contracts, or we're selling a portion of the position there at 50%, and then the remaining contract ended up running. Okay, this is a strategy that is reliant, on these runners to start creating these large winning trades. Okay, so we're actually using a time stop of 5 trading sessions after entry, or 1 calendar week, before we close out the trades if that first portion of the trade hits 50%. So I'm going to talk a lot more about this. We're going to talk not just about the trade management. We're going to talk a little bit more about the specifics of the trading strategy today. Again, you can always drop the questions in the chat box. So in general, the strategy guidelines, just talking about an overall view or just the averages of this strategy, is, the holding period, as we saw on Apple, you're never going to be in a trade longer than 5 trading sessions or 1 calendar week. Okay, we want to give these trades time to breathe. All right, we want to let the system play out, and oftentimes we're not going to see that initial move immediately. Okay, we may need to let it start working for 2 or 3 days before we get that move in our favor. The strategy is simply, like I've said, trading next week options, and even though we are using price channels, as I mentioned, that is just going to mark the highs and lows over a given set of bars. At the end of the day, that is price action. Okay, we're not just using price action to illustrate support and resistance, but we're also using price action looking at gap setups. Okay, so we want to start following where the gaps are. So on average, this strategy has been putting out about 10 new trades per month. On average, about 8, but we've seen up to 10. In fact, I believe we even saw 12 just a few months ago. So historically speaking, we're talking about a win rate greater than 50%. Okay, with average profits that are much larger than the average loss whenever we're talking about this 333 option strategy. So, a lot of traders always asking for more trades. Okay, this strategy does have a lot of frequency, and we don't want to sacrifice quality to get that frequency. So we were able to change our filtering setups to really allow for plenty of new trades to come out and still highlighting the quality of these trades. So this strategy looks at stocks with a positive 10-year profit factor. What that means, and if you're brand new, if you've never heard of big trends, like I said, we want to remove subjectivity completely out of the equation. Okay, we're not looking at Apple based on feel. We're not thinking, I think Apple's going to go higher. We're going to look back not just over the last 10 trades, not just over the last 5 years, but we're looking at the last 10 and sometimes even 20 years, where if this exact setup happened, all right, and we went long and we had this stop and target, how would it have performed over the last 10 years? Okay, there's no I think or I feel. It is all based on what is the data saying. Okay, we're data dependent at Big Trends, and that's how we approach the markets, is being reliant on a systematic outlook on these trades. So these trades are entered Mondays through Thursdays, which means, of course, today being Wednesday, a new trade could come out this afternoon between 3:15 p.m. and 3:30 p.m. Eastern time. In fact, we do have an open trade right now, but there can be up to 4 open trades at once. So trades are exited after 5 days or 1 calendar week at 1:30 p.m. Eastern time if they have not hit their stop or target before then. So why should you even care about this strategy? Okay, this is during these presentations, I don't want to waste your time. Okay, I wouldn't be presenting something that we weren't confident about. So here's a look at the performance of 333 options since inception. So from 2023 until today, October 16th, actually 2 weeks into Q4 actually, using the power of weekly options to capture these major momentum moves, including all winning and losing trades without compounding. We're talking about just over a 224% return based on the model portfolio being 5K and allocating 1,000 per trade. So that's over $11,200 in profits just from 2023 until today. Now, of course, past performance is no guarantee of future results, but this is the most recent performance. Okay, this is over the last 60 days, and actually, I believe this would technically be 61 days, looking from August 16th until today, October 16th. But over the last, well, we'll just call it 2 months, just over $2,100 in profits, taking every winning and losing trade, no compounding, again, the same allocation. And that's the allocation we're going to use throughout today's presentation, is based on up to but not exceeding $1,000 per trade. As always, past performance is no guarantee of future results. So we are looking for a specific setup. Remember, whenever we go through this profit factor filtering, we need to see multiple pieces of criteria setting up for it to be qualified as a trade. Okay, so we're looking for, number one, consecutive gaps in a certain direction. Of course, if we start to see consecutive gap ups, all right, moves higher, then that's going to lead us to believe that there is some buying underneath the surface. Okay, there's action happening in both post and pre-market. Okay, that's something that definitely needs to be noticeable whenever we start to see these consecutive gaps, not just one gap. Okay, we want to see consecutive gaps in a certain direction, so that we know that there is somebody or institutions possibly making these moves after hours. Okay, we hear about these dark pools. Some of this action happens after the market closes and before it opens. All right, we're looking for a daily price channel, a new high or a new low. So we just want to see that these consecutive gaps on these underlying assets are breaking out above resistance, and they're doing so with a push in these post or pre-market moves. And then for the downside, remember, we do take these downside trades or put trades. We're actually using double confirmation with a simple moving average. And then last but not least, we need to see that this specific setup has performed positive historically. Okay, again, not just over the last 20 or 30 trades. We're talking about 5 and 10 years of setups before we start to say, all right, this has a historical edge, and that's what gives us the confidence to send these trades out to the subscribers of 333 options. So when to take the new trades, these trades trigger Monday through Thursday. We don't take new trades on Fridays because of the 5-day time stop. Okay, if you entered a trade on a Friday and we're trading the next Friday's expiration, well, of course, you're going to be exiting the trade based on the system on expiration day. Well, there's not a more volatile time for an options premium than the day of expiration, so we want to eliminate that completely. Some of that volatility is good for us, but we don't want to take on too much volatility or really too much leverage going into the day of expiration. That's why we will only take trades Mondays through Thursdays. So this strategy looks for next week options that are priced at $3 or 33 cents or less, and we use ATRs to select strikes. Okay, so an ATR is the average true range. All that means is, and I'm paraphrasing, but to simply say it, what is the average move that, let's say, Apple would make in a given trading session? So we're going to use ATRs for our option selection formula to decide what option strikes to take. I will say that is really a crucial aspect of trading that is oftentimes overlooked. Okay, we don't want to enter the wrong option strike and take possibly a premature stop out. Okay, a premature stop out not just affects that trade, but I'm speaking based on experience. If you take a premature stop out and you see that name continue to move after your stop, well, talking about trading psychology, it may lead you to get a little bit looser on your stops. Okay, you may start to give it a little bit more room past your stop, saying, well, it may continue to run like that last name that I saw run after my stop. Okay, so we want to make sure that we give a good enough cushion. In fact, we are using a 50% stop on each of these trades, but we need to make sure that we're selecting the correct option strike that matches what what this trading strategy does. Okay, so we utilize a set it and forget it stops and targets, which means these orders are good till canceled. That's what we recommend at Big Trends for the strategy, a good till canceled order, which means once you put on the trade and the stop and target is sent, you can set it as a good till canceled. You don't have to continue to watch the markets minute by minute or even hour by hour. Okay, you can just get a notification whenever that stop or target has been hit, and then additional instructions would be sent as needed. So this is perfect for busy traders who don't have time to sit and watch the markets all day. Of course, if you do sit and watch the markets all day, it can absolutely be utilized by you as well. So why are we trading options that are priced at $3 or $3.33 or less? Okay, this is really kind of the groundbreaking piece that we did with this options model or with this trade management model is it allows us to buy 3 contracts whenever you allocate 1,000 per trade, which is important because we aim to sell 2/3 of our position at the first target level, which is 50%. I'm going to show you the math here in just a moment, but the reason why I say this is groundbreaking, okay, is because oftentimes whenever you think about getting your risk capital back on a trade, you would think of selling half of your position at 100%. That's the most common way that people would go about getting their capital back to let the winners run. Okay, well, hitting a 100% target is harder than hitting a 50% target. A 50% target, right? In fact, it is twice as hard. Okay, so that's how we're able to achieve this historically high win rate is we're going to drop the target down from 100%. We're going to drop it down to 50%. We're going to target 50% on 2/3 of our position so that we can get our risk capital back immediately and still have the opportunity for those runners. So if you were to buy 3 contracts at $300, okay, that's $900 totally invested into the trade. So if you sell 2/3 of the position, so 2 contracts at $450, okay, which is a 50% gain per contract, well, if you sell those 2 contracts at $450, $900 goes back into your trading account, which means this trade is now risk-free. Okay, it's now risk-free, selling 2/3 of the position at 50%. So taking 66% of the position off at 50% makes the trade, of course, risk-free and allows for unlimited upside on the final third of the trade. Now, we saw that Apple trade where we actually entered 5 contracts. Well, we do need to round up in some instances where, in that case, we sold 80% of the position at 50%. Okay, we're going to see different types throughout today's presentation where we start diving into more of these trades. but that is the purpose of the strategy. This is the concept that is really allowed for that high win rate approach and still giving the opportunity for these runners. Now, finding these momentum moves, that's going to be based on the trading system that we're using. And again, it's going to be based on consecutive gap ups or gap downs. And then we want to see that it's breaking out above our price channel. So breaking out above resistance. So here's some recent examples. This is an example on Philip Morris. Now, this is an interesting example. Oftentimes, whenever we think of a name like Philip Morris, we're not thinking of a name that can produce these large winning trades. But whenever we leverage it with, number one, just out of the money options, we can see entering the 111 calls. Well, these are, a couple points out of the money. So whenever we leverage it with out of the money calls and next week options, a name like Philip Morris is more than capable of hitting these 300% winners. Okay, so let's talk about the system. Let's see what the setup is. Okay, notice here, all right, this is the close. All right, we get a gap up. We get another gap up. Okay, we want to see these gap ups happening. In fact, we can even see it here, even though it didn't go anywhere. This is really just some consolidation here. That's 3 consecutive gap ups there on Philip Morris. Not only is it gapping up, it's gapping up on the day of our entry above resistance. Okay, so if we think about support and resistance, okay, if we're thinking about how these work, and if we're talking a little bit about some trading psychology that goes along with it, whenever we start to see a name trading above resistance and it's breaking out, what's really happening is we are now starting to see buyers entering or buying the position above value. Okay, if we were going to draw really quick a chart right here, let's say that this is support. My apologies for my handwriting and drawing. I'm not an artist, but let's imagine that is support and resistance, and we see a stock trading within this range. Okay, we can roughly estimate that is where value is. Okay, typically you want to be a buyer below value and a seller above value. Whenever we start to see these moves happening above resistance and above value, and buying is continuing to happen above value, well, that's definitely noteworthy. Okay, whenever we see it happening and we're starting to see these gap ups, well, that is a signal that there is something brewing underneath the surface. Now, it doesn't mean it's going to continue to run every single time, but it's definitely something that we're coding, and that's what we coded at Big Trends, and that's where we're starting to find these momentum moves. So in this case, we're entering 12 contracts and selling 8 of those contracts at 50%. So what is that doing? That is immediately getting our risk capital back the very first trading session after entry. Remember, we are entering these trades at the final hour of the trading session, which means we entered roughly there around that close. Okay, so the very first full trading session that we're in, we're hitting that 50% target rather quickly. Okay, that's, it gives us that peace of mind, and it really affords you the opportunity to continue to hold the position and let it, again, we call these runners, but it gives you the opportunity to let these run. Okay, so now we have 4 contracts left. Okay, getting that risk capital back, in fact, well over the risk capital there, whenever we're selling 50% there on 2/3 of the position, but we continue to see Philip Morris and that momentum and buyers continuing to buy above value continue to push higher. Philip Morris continues to run higher. Those contracts went from 80 cents to $3.40 in just a matter of 1 week, where these contracts were filled at 325% on the trade, or booking $1,360 in profits. Okay, as a reminder, these are daily charts. Okay, these are daily charts, and we're using these daily charts to, of course, illustrate these momentum moves. So here's another example on Apple. In fact, this trade was taken on the model portfolio back in June. And if you remember Apple there at the beginning to mid-June of this past summer, Apple had that AI event and it just caught a run. Now, there are gaps in this case. I know it's very hard to see, and the bigger problem is that this chart is shrunk down to scale because of this, frankly, parabolic move that we saw in Apple in just 2 days. Okay, this was the AI. Whenever they started releasing their technology for AI that should be coming out on the new iPhone that just came out. I don't know if that's actually updated into the software yet. Regardless, that's beyond the point. It actually caught this move on Apple where we're seeing consecutive gap ups. We start to see buyers, all right, poking their heads, all right, peeking out, buying above resistance, buyers buying above value. Again, that's something very noticeable. Well, what happens at the close? We see some selling, okay, possibly profit taking, but the system is coded where if we start to see that buying happening above value, there's consecutive gap higher. All right, well, that's going to be an indication that we still need to go long. Okay, so getting in at a very good spot there. We actually see borderline little fake breakdown there on Apple, going long the Apple June monthly 195 calls. Again, out of the money options and entering 4 contracts. So again, this is an instance where we do have to round. All right, we do have to round. In this case, we can't sell 66% of 4 contracts. So we're going to sell 75% or 3 contracts of our 4 total contracts at that 50% mark, which means that not only is this going to be a break-even trade if, let's say, Apple just collapsed. Okay, let's say Apple just goes completely down. Those contracts go completely out of the money by expiration date. Those expired worthless. We would still come out ahead on this trade. And again, that's the beauty of this strategy is we're not shooting for 100% winners on the first piece. Okay, now in this case, we absolutely would have gotten it on that first day, but that's what really levels up the strategy and gives us the opportunity to make trades risk-free as quickly as possible to, again, afford us that peace of mind to let these trades continue to run. Well, it continued to run, right? We see 1, 2, 3, 4, 5 trading sessions later, really just some consolidation there on Apple after that 2-day move to the upside, but still getting out at a great spot. Absolutely no complaints whenever we sell that final remaining contract on the model portfolio at just under 23 bucks on that final contract, producing just under 934% on that final contract. This whole trade ended up doing just over $2,400 in profits, and again, just 5 trading days. So, if you're a day trader, this isn't going to be for you. Okay, if you're looking to position trade or hold positions longer than 2 to 4 weeks at a time, again, this won't be for you. This strategy is meant for swing traders who are looking to combine that approach of both high win rates and the opportunity to hit these higher targets or these higher reward trades. All right, so those are all call trades, but the strategy has seen some success with puts as well. Okay, for the sake of time, okay, I've got just about 15 minutes. I can't go too deep into the short strategy. And really, at the end of the day, what I'm covering right now is really just the foundation of the strategy. There's a lot more to it behind the scenes. But again, for time purposes, I can't go too deep into this. So again, we want to see gap downs, right? Since we're trading puts, we want to see that there is now selling in the post or pre-market. Okay, we can see a gap down there. Here's a close, another gap down. In fact, getting in at the close of that signal bar gives us another good entry here on Wells Fargo. Trading those August week 4, 43.5 puts, again, out of the money options, giving us that leverage, entering 15 contracts at 65 cents. So there's no sense in rounding here. We can get out of 66% of the position there. Since we got in 15 contracts, we can get out at 50%, but we didn't, right? We ended up getting a gap down in our favor where those 10 contracts were filled better than that 50% target. In fact, that gap down right off the open, those contracts were filled at $1.21, which was an 86% move on those contracts from our entry. Well, we're still using that 5-day time stop. Okay, we can let these continue to work, see if there's any more selling that's going to happen, and a little bit more. All right, a little bit more on the underlying asset, but we got that time value working against us. Since we're long those puts, okay, they ended up going against us there on that final piece from our first target. We ended up closing out the remaining 5 contracts there at $1.14, which still a solid trade nonetheless, closing that out at 75, just over 75 and a third percent, or $805 in total on the remaining portion of this position. Okay, so as I mentioned earlier, taking 2/3 of the trade off at 50% does make the trade risk-free. So even if there's a loss on the final third, the trade can still generate a net profit. So I like sharing some of these examples. In fact, I've got a great example here in just a moment, but we can see it here on AMD. Now, AMD here trading the 185 calls. I'm not sure if this would have actually hit a 100% target. Like I said, many traders use that rule where if your position is at 100%, sell half and let the other half run. Well, this is an instance where you probably weren't going to hit that 100% target on AMD. Okay, this is where it shows where this high win rate can really step in, and taking off those profits quicker than 100% can give you that opportunity to get that risk capital back, therefore synthetically increasing the win rate. So entering 3 contracts here on AMD, we see, of course, consecutive gap ups and a close above resistance. Okay, we continue to see those buyers stepping in, a full breakout underway here on AMD. And then 2 days later, selling 2/3 of the position there, just over 50%, going from 325 to 488 on these out of the money options on AMD in just 2 days. Okay, so the peace of mind there to, of course, just be patient. Unfortunately, AMD almost bull flagging here at new resistance, starting to see that consolidation there. That time value starting to eat away at that option premium. Okay, it's going to happen, right? It's going to happen. You know, the second, or I should say the final third of the position won't always end up being a multi-100% winner. Okay, in this case, we're actually taking a loss on the final piece of the trade there for just over 25%. And this ended up just being in total a $240 gain in profit. Okay, that's okay. All right, we're going to continue to look for new opportunities, but you know, even though that final third didn't work out, we can still, you know, we're rest assured, still came out with a profitable trade, allocating 1,000 per trade. If you were able to allocate the full 1,000, which wasn't the case here, we're talking about a 24% winner trading AMD. Okay, solid nonetheless. But if we can't take off 2/3, like I've been talking about on the trade, we will of course round up. So here's an example on Microsoft, and this is one of my favorite examples. Again, traders like to use selling half at 100%. You certainly wouldn't have gotten 100% here on Microsoft. Okay, this isn't a super strong move. Okay, just we didn't see buyers continuing to push higher. We ended up seeing some profit taken after some consolidation here for a few days. But here on Microsoft, we ended up seeing a rather large sell-off on that final piece. Okay, but we sold three contracts. All right, 75% of the position at 50%. So this is, you know, almost, we'll call it almost a max loss, right? Actually, we'll just call it for the sake, a full max loss. Selling 75% of the position at 50% ended up producing still $135 in profits. Again, that's not what we're looking for. We wish that those final pieces would always just continue to run in our favor, but that's not trading, right? On that final I should say quarter of this position, ended up being a max loss. Okay, but being quick to take these profits, okay, being quick to take those targets, all right, is going to increase the win rate. That's what we've seen historically, and in this case, it just ended up moving against us. All right, take that, move on, and look for those new trades. But of course, just because we're quick to book these profits at a 50% target doesn't mean that there's never going to be a losing trade. Okay, we saw it here on Bank of America. You know, just the most subtle grind higher, never really got that move to the 50% target, trading those 43 calls. You know, it took 3 trading sessions, but eventually that time value just kind of got the best of us on this trade. And these ended up being closed actually over a 50% stop there, just under 52 2/3%, which produced a $520 loss. Okay, you know, these losses are absolutely manageable. Okay, the final piece of a winning trade is allowed to run without a stop loss or a final profit target, which is why this result or this approach has resulted in some massive winners like this example on Wells Fargo. We'll actually look at this again. Okay, Bank of America, these losses right here. All right, a $520 loss for a trader allocating 1,000 per trade, right? It's absolutely manageable. Okay, we can handle these 50% stops because, all right, we're quick to book our first profit. All right, we're quick to get that risk capital back, and we've seen time and time again historically where these trades have continued to run. Okay, so that's always been a thing where if you have that high win rate, oftentimes your risk reward has to be skewed to be able to create that high win rate. Okay, this is the beauty of this strategy. We've created this hybrid model where we try to hit that high win rate rather quickly, and then we have the opportunity for these larger winning trades. And we're actually going to look at one right here on Wells Fargo. Okay, here's a large winning trade here, trading the December monthly 45.5 calls. Okay, this isn't anything new either. Okay, these large winning trades is not anything new on the final piece. Like I've shared, we'll look at that performance graphic again, but just in the last 60 days, we've seen winners of 175%. We've seen winners of 200%. We've seen winners of 300%. Okay, this is not new. All right, we continue to see these final pieces of the position continuing to run. So entering 16 contracts at 59 cents, again, that's based on allocating but not exceeding $1,000 per trade. That 50% target hit, boom, right there the very next day. All right, gap ups and breaking out above resistance. That's what we want to see whenever we're trading the strategy. We're looking for that momentum. We're looking for buyers to be buying above value. Again, like I've said, that is something you should absolutely take note of whenever we start to see buyers buying above value. All right, well, 11 contracts closed at that 50% target, actually just under 51%. And then we have that peace of mind where this trade is now risk-free. We're going to be patient. We're not going to be quick to start booking profits here or even here. Okay, this move on Wells Fargo, entering at 45.5, we're talking about an intrinsic value there of give or take about $2.50 premium. Okay, that's already a large winning trade, going from a 59-cent entry to about $2.50 of premium. So I can give or take about a 400% move on that option premium just on intrinsic value alone. Okay, those large winners are great. Okay, we want to book them really quickly, right? Whenever we see a 400% winner, you want to book it. The system and our research has shown that 5 trading sessions is the sweet spot before we start closing these trades. Okay, so if you've ever fallen into that trap, it's one of the 4 trading fears that Mark Douglas talks about: leaving money on the table, right? Leaving money on the table. It's of course, a great trade is a great trade at the end of the day, but we don't like leaving money on the table. That's the purpose of this strategy. We want to be able to get as much as we can. We may not sell at the top, right? We're not always going to sell at the top, but in this case on Wells Fargo, we got actually the top here, getting out on the 5th trading session for a 722% winner, where this trade produced $2,400, $2,460 to be exact, in profit in just 5 trading sessions. So we do send these alerts real time to our subscribers. Like I've said in today's presentation, I've only been able to scratch the surface just for time purposes, but we do send these trades, these actual trading signals, to subscribers. And when the strategy triggers a fresh signal, here's how you can actually get these trades. In fact, a new trade could be setting up as soon as today. So 333 options. This is the strategy we've been talking about today. Whenever we're talking about 3 months of these trade alerts with a few trading resources, the settings and rule sheet, which is going to break down the entire criteria of the trading system. Okay, you're going to know the indicator length we use for those price channels. You're going to know how many gap ups or gap downs we need, the additional price action filtering that goes on behind the scenes. And then of course the option selection formula that I've mentioned is crucial for this strategy. You're going to have access to all of that in a PDF document. You'll be able to download, print it out, do whatever you need to do, but you would have access to the entirety of the strategy. You'd have access to our founder and CEO, Price Headley. He does weekly video updates where he recaps the trades taken from the prior week, the exact reasoning for getting in and getting out of these trades. He'll break down some commentary as well with those trades. Like I've said, Big Trends will be celebrating its 25th year anniversary next month. Okay, Price has started Big Trends in 1999. He's been trading for over 35 years now. You'll be able to see his decades of trading experience in these video updates every single week as a subscriber of 333 Options. Last and certainly not least, you'd have access to our analyst team, which includes myself, Price Headley, and a couple other members of our analyst team. You'd have access to the dedicated email address we use for any questions you have in regards to the trade alerts or trading in general. All of that's included today, and the retail price is $591. Okay, I think we'd all be in agreement that's a justified price considering, not just the performance figure that we saw since inception, since 2023 until now. It's a great value considering just what the last 60 days of trades have done. Again, just over $2,200 in profits in the last 60 days alone. Great value considering that. But think about just what one trade could do. Okay, one trade alone could easily cover this $591 price point. But today we are discounting it substantially, and that $591 price point is based on the $197 a month retail list price times, of course, 3. Today's special package, all right, 3 months of these trade alerts, all right, with those trading resources that I just mentioned. Okay, today and then today only until midnight, the price is $177. Okay, $177 whenever you go to the link members.bigtrends.com/triple. Okay, this is your introductory price point. Okay, we're not going to make you pay $591. We want the system to prove itself to you. Okay, we're confident in the system. We want the system to prove itself to you. That's why we're letting you get in at the lowest price we've ever offered at $177 for 3 months. Again, you just need to go to the link members.bigtrends.com/triple. Don't do www. It is simply just members.bigtrends.com/triple. All right. Again, we talked about the retail price of $591. It's a great value considering what one trade could do. Now, this is a larger winning trade, of course, just over $2,400 of profits. We've seen time and time again what some of those smaller winning trades have done. Okay, $591 for 3 months is an incredible value considering what let's just say what an average trade has done. Okay, so again, performance just over, or I should say since inception from 2023 until today, using the momentum, breaking out above resistance, finding those gap ups. All right, buyers buying above value, just over $11,200 in profits, 224% return based on an allocation of up to but not exceeding $1,000 per trade on a 5K account. Of course, past performance is no guarantee of future results, but even in the last 60 days. Okay, in the last 60 days. So again, this is a 3-month subscription for your introductory offer. Well, just in the last 60 days alone, over $2,100 in profits. And again, technically it has been 61 days, I believe, from August 16th to October 16th. But nonetheless, last 2 months of trades, just over $2,100 in profits based on that allocation of up to but not exceeding $1,000 per trade. Again, past performance is no guarantee of future results, but today's special package, right? 3 months of trade alerts, and you are getting those 3 trading resources as well. The settings and rule sheet for the 333 options, the entirety of the system broken down into a PDF format you would have access to download, print off. You would have access to Price Headley's weekly video updates. Last and certainly not least, access to the research team through a dedicated email address. Any questions about the trades or trading in general you may have, all right, you'd have access to us through a dedicated email address. Again, not at $591, but today and until midnight only. All right, it's $177 for 3 months of these trade alerts whenever you go to the link members.bigtrends.com/triple. Okay, again, members.bigtrends.com/triple. Okay, I want to thank you for tuning in with me today. Thank you, Anthony, for that warm introduction. There's a lot of great traders coming on here in just a moment, so I'm going to go ahead and pass it off to him. But again, your link, members.bigtrends.com/triple. Thanks for tuning in.
Thank you, Dylan. We appreciate you being here. Very exciting strategy, holding weekly options for 48 hours or less in this trading environment. That makes sense. We've put his offer in the chat box there as well. Ladies and gentlemen, if you are interested in receiving real-time stock and options alert and education to profit from significant market trends via the use of weekly options, then Mr. Dylan Pittman of Big Trends has an exciting solution for you. We've put his link in the chat box, and you can always find Dylan at www.bigtrends.com. Thanks again, Dylan. It's always a pleasure having you on Traders Corner.
Thank you, Anthony.
You're most welcome. Ladies and gentlemen, we have a great lineup today, so let's keep the ball rolling. You may have seen our next presenter on Fox News, Fox Business Network, RT America, Cheddar TV, or CBS News. She is an expert stock market analyst and the founder and owner of an international educational company where she teaches people how to successfully trade the stock market. Her trading methodology is based on one strategy called Golden Gaps, which pinpoints institutional money in the stock market. Here to present trade momentum and gaps is Melissa Armo of the stock Swoosh. Welcome back to Traders Corner, Melissa.
Welcome. Can you hear me?
We can hear you. Thanks for being here.
Wonderful. Let me get set up here. Okay, I don't know what I'm doing. Oh, there. Okay. Can you see my slide?
Yeah, we can see your slide now.
Perfect. Perfect. Well, let me know if you can see me and hear me, everyone. Perfect. I'm going to get started here. Any questions, you can just plop it in the chat. And it's great to be here today. So today I'm going to talk about trading on the side of institutional money and gaps. This is a good topic for today. Why? We've had a lot of money coming into the market, even in the last few weeks. Markets run up. Q's almost made another brand new all-time high. The SPY did. And of course, it is the start of earnings season. Earnings season actually officially started on Friday and continues for the next 6-7 weeks. And of course, we have the election in 19 days. So it's going to be a very interesting time to trade. And again, if anyone has any questions, you could just plop it in the room. I do appear on TV. I talk about the stock market. I talk about the economy. And again, it's an exciting time to trade because if you know what to trade, you can make money. Again, a lot of people have been trading for a very long time. I've had my business now for a long time as well, over 10 years. And one thing that I found is everybody wants to make money, but a lot of people just don't know where to go and where to start or what to focus on. And that's what we're going to talk about today. If you have questions, you can reach out to me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can also follow me on Twitter, Facebook, YouTube, or Skype. So I have the stats in here for the live trading room. $714,076 for the year. We're up. This is through yesterday. We actually had a nice trade yesterday in Apple. I will go over it. My average risk on my day trades is around $3,000 per trade. These are trades on margin. I run a live room that I call the trades live every single day. If you want to come and you want to be a part of the room, you would sign up and learn my method. I also do options. And again, options for the year, I'm up more because I'm risking more of my options trades. These are the stats for the options, all the winners, all the losers. And again, over 2.6 million for the year. I risk around an average of $8,000 in my options. So I risk more in my options trades. Why? I like to do some things that are expensive, and I'm also holding my options longer than my day trade. So for the year to date, this is again through, I guess what would be 9.5 months. We're halfway through October, 3.3 million plus. So it has been a good year. I will tell you, we're going to talk about today that I'm mostly short, and I do sometimes go long. Again, we went long Apple yesterday, but I'm mostly short. So I specifically am looking every single day for gaps, and that is again what we're going to talk about today. But like I said, the US election is only 19 days away. It's crazy. It feels like we've been talking about it forever, and now it's almost here. The time to learn how to trade is now. Why? Because we are going to have a lot of big moves, and as a day trader, as an active trader, and again, I'm doing the weekly options, so those are fast trades. But as an active trader, I'm always looking for the big move, and we are going to have big moves. Again, where are we going to go? Who's going to win the election? Nobody knows. but you have to be poised and ready to get in it and get in the trade and get the move before it happens. So let's talk about it. How do you make money in the market? You become an expert. You become an expert in one thing. I live in New York City, and I went over the weekend to the New York Botanical Gardens. I'd never been there. And I saw some expert pumpkin carvers. This lady here, her name is Sarah. She's actually in Halloween Wars right now, the current episode of Halloween Wars on the Food Network, if you watch it. She's an expert in carving pumpkins. Fabulous. Great job. She won the contest actually that day. Again, this is what she has chosen to do. Anytime you want to do something, you have to become an expert in it. Otherwise, you're not going to be successful. Trading is one of those things where there's so many people that want to do it. There's so many people invested in the market, so many people in and out, even active retail traders, and they're all over the place. And they never really get good at one thing. And so then you wonder, well, of course, they're not making money because they're not good. So in order to make money trading, all you have to do is find one thing and get good at it. It really is that simple. And in many of the days, again, when I showed you the stats, you can go look back, we only did one trade a day or two. That's it. So in order to become successful in the market, you have to become a specialist in one specific strategy. And I look for institutional money, or what I call power money in the market. This brings momentum and opportunity. And every trader on every level must learn the skill set. It can be acquired through education. And again, like I was talking about, I find a lot of people just want to jump into the market, think they're going to make all this kind of money. You're not going to make money if you don't know what to do. It's really not the kind of thing where you can just say, oh, I'm going to go do it. It's like if you were a doctor, you wouldn't just say, oh, I'm going to go perform surgery on someone today. No, it's not like that. You really do have to learn it. Now, this is the trade that we did yesterday. Again, this was Apple, it was a long. I just want to show you here. We entered the stock at 233.30. I knew Apple would make a brand new all-time high yesterday, which it did. Ran up in the morning, exited 235.18. It actually went all the way up, way over 237, but here was the trade. This is a 1-minute chart. This is a daily. We entered here, got the rally, poof, and I got out. So again, I'm risking what you would call an advanced trader risk. You can risk more, you can risk less. Made $4,700 on this trade. This was a trade on margin. So you would have had to have a margin account in order to make money in this trade, unless you wanted to do, for example, an option. Now, we did do an option in this as well, I'll tell you, and I'm going to show you that in a minute. But if you decide that you want to do day trades, again, the trading room, I'm calling the live trades in the room, the entry, the stop, and the exit. So if you were in the room yesterday, you would have gotten this trade, okay? So we did an option. Now, options as well, okay, are you pay the cost, you don't need a margin account, you can open up a smaller account with options than it was required for margin trading. So a lot of people like to do options because of the fact that you can open up an options account with as little as $2,000. Now, here was the Apple trade. Again, send it out in the morning. I have an options newsletter. Let me show you the timestamp on here. Let me just move this here. You can see here 9:22. So I sent that out right before the open. Again, this was the Apple 235 calls, ran straight up, ran over the high, nice call. Price for the option was $1.60. Again, an advanced trader risk of $9,600, you could have made $11,400. So this is what I did if you wanted to risk less. I like to use a beginner risk of around $1,000. You could have taken one contract. You could have spent $160, okay? Either way, it was over 100% return on investment, which is what I try to look for in most of my trades. It was at 119. So this was a really nice push up. And again, here is the daily. So again, I was talking about institutional money. I'm talking about momentum. In this case here with Apple, this was a call or a long in the room because it got bought. So the stock got bought with institutional money. Actually, it started to get bought here even the day before. You could have done it yesterday or 2 days ago, I mean. Stock closed here, gapped up, rallied, closed here, gapped up, poof, ran all the way up. Again, this was yesterday. So you could have bought a call on it or you could have done the day trade, okay? So again, I'm looking for one thing a day. If I can find it, one thing, one trade, that's it. And if I do it, I get in and out quick and fast and I'm done, okay? So again, the benefit of looking for institutional money is that I am gonna get the big moves, okay? Because institutions are the ones that are making the big moves in stocks in the market. And when I say institutional money, I mean hedge funds, big banks, okay? Any questions here about that? We good? So how can you earn a living trading? Number one, you need a winning strategy. You have to learn how to do it first. You're not going to make money if you don't know what to do. You just won't. Number two, you need a supportive mentor. So I try my best to be a support system for people. You do when you follow. Again, do the trade, follow me in the live room. And then number three, become an expert in one thing. Implement the strategy, get good, and then add size to win big. So of course, if you're doing well and you're making money, the only difference between making $1,000 a day or $5,000 a day or whatever has to do with your quantity of your share size or the number of contracts. If you're doing a good trade, again, you could do one contract and make money and make over 100%. It's the idea you have a certain cash, and everyone is working with certain parameters. A lot of times people say, well, I can't do it if I don't have this much money. That's not true. If you have a big account, you're still going to lose money if you don't know what to do. So if you have $1 million, you're going to lose it if you don't know what to do. So you still have to learn it. You still have to learn it. Everyone is in that same category. You know what I mean? So how do you make money in the market? Again, you've got to get the direction right, and you need a winning strategy. And my strategy is called Golden Gap. So what is a Golden Gap? A Golden Gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. You can take the trade in the direction of the gap. You do the trade as a day trader option. Again, I like to do both. You can do both. It's whatever works for you, but you have to get the direction right to win. If you get the direction wrong, you're going to lose. Here's a chart of BA. This is back from the beginning of September. If you've been long bowing, you're losing. The stock has fallen off a cliff, okay? Down 20 points from September. Again, many red days, many red bars. Institutional money has been selling Boeing. Now, why? It doesn't really matter to me. Again, I'm looking at the gap and making decisions based on technical analysis, okay, based on the price action. That is what I do. And every time I'm looking for a trade, I'm looking at the daily chart, and I'm looking at and rating and reading the gap in the daily chart. Now, what is a gap? Let's take a look at Boeing. A gap is the difference between the close and the open. So every day, the stock market closes at 4 o'clock and opens the next day at 9:30. So in this case here, Boeing closed here at 4 o'clock and gap down and open at a lower price. Okay, closed here, gap down, fell, boom. Okay, so again, you've got to get the direction right. I know this sounds so simple, but actually this is one of these things where many people just don't even realize how simple it is to do well. The caveat is to determine and be able to predict the direction, to get in the trade early enough to get the big move before it happens, okay, for the direction. And that's what I do by reading the gap. I'm trying to determine who is in control, the bulls or the bears, okay? If the bulls are in control, you want to be long. If the bears are in control on that particular day, whatever day you're having to be trading, again, you want to short if you want to make money. So again, what is a gap? A stop gap on the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next, okay? And there's gaps every day in the market. Now the market is closed Saturday and Sunday. So again, we close at 4 o'clock Friday, and then Monday morning at 9:30, we have a gap. Now, here's the cues. I don't trade the market every day. Sometimes I do. You could have gone long the market, actually here, market closed here, gapped up, rallied, almost made a brand new all-time high. This a couple days ago. Again, I'm looking at the QQQs. Market's been strong, so strong this year, very bullish. SPY did make a new high recently. We had bank earnings in the last couple days that were very good. Moved the SPY up, okay? And again, this is a daily. So you need to focus, and that's my point. You need to focus, and my focus is gaps and shorting. Now, I will go long low, like I said. We went long Apple. I have no problem going long if I don't find any good shorts, but I do really prefer to short. So what do? I find gaps in the morning, and then I rate them. And then I rate them with a 26-point checklist. If the gap rates 20 points or more, I take it in the direction of the gap. If it doesn't, I don't do it. If I don't have any gaps that rate good, guess what? I don't do any trades. Again, if you look at the stats, there are some days where there's no trade, and that's okay. Like today, for example, in the market, I looked at the market gap this morning. I said, this is a nothing burger here today. It's a nothing burger gap. Again, we sold off yesterday on this news, that news, whatever. Market's trying to figure itself out now today, kind of like a rest day, no trade. The rating system helps me determine who's in control, and that's how I make money, and that's how you will make money too if you come and learn it from me. Again, a lot of times people are all over the place trying to figure out what to do well after the market has opened. You will not make good decisions if it's after 9:30 and you're trying to figure it out and trade on the fly. You've got to be prepared and ready to go way, 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 way before the open. I mean, I get up at 6 o'clock in the morning and I'm ready to go and know what I want to do. Sometimes that early. So gaps happen in the market on a regular basis. However, there are some gaps that are better than others. And then there are some gaps that are nothing gaps, like I said, like the market today. And then there are some gaps that are just powerful displays of institutional money. The most important gaps in the market, though, are gaps that signify a change in direction or a big move in the same direction. And again, we get those too. Apple was a good example of that. Apple's been strong. NVIDIA, we did NVIDIA along in the last few weeks. Understanding which gaps are meaningful and which gaps are not meaningful in the market, though, will help you to know what to do and when a change is occurring. And that's very important. And then you know how will the power money flow to pay you? Because again, if you're following the footprints of institutional money, it's going to be a lot easier for you to have, number one, big moves. Number two, get filled in and out. We're trading stocks that you know, companies, you know what they sell, what they do, how they make money. We're not doing low float stocks or cheap stocks or penny stocks or things that don't have any volume. We want to do stocks that have large moves, big moves. And again, institutional money moves stocks, it moves the market. And that's why it's so important. If you're going with the crowd of day traders and trying to buy every dip or whatever the case may be, or short resistance, you're not going to have the same success rate as someone like me, okay? And again, institutional money is in control of the stocks in the market at all times. Even if you think it's not, it is. It is. So if you learn how to read these big positioned footprints before the momentum occurs, you will take the position in the right direction, and it's going to be so much easier for you to make money. And then obviously all you do to make more is, guess what? Add size, okay? But for a lot of people, they have a hard time figuring out how to read it, how to find it, okay? And knowing how to read it is essential. And you really can win big trading on the side of power. You know, Boeing was another one. We're going to look at that chart again in here where you can really see how the stock has just been tanking. Any questions here as I'm going along so far? We're doing okay? Everybody see the chart? Everybody can hear me? Oh, here's Boeing. Like I'll say, made sense? Okay. So again, we were short Boeing all the way back at the beginning of September. Look at it. Beautiful. Boom. Again, many days in here you could have shorted this. We did this one. We did this one. We did this one. Okay. And again, so when you look at this, you say, oh, well, that's interesting. Looks like they're dumping it. It's being sold off. Again, the why is neither here nor there. It doesn't really matter to me why. If that's something that you're interested in, fine, do the research. I don't have time to do that in the morning. I just want to make money and get the trade, okay? So becoming a successful trader and investor really requires becoming a specialist, kind of like the pumpkin carver, in defining where the institutions are buying or selling a stock. And again, I prefer to short, but we will go long. And I do that by reading the gap. So comprehending how to read, define, and trade with this power, it will just have such a huge positive impact on your profitability as a trader. You just have no idea till you start doing it and you start seeing it, and you've seen how I'm able to predict it so often. Now, this was when we did this with snow. This was snow earnings back in August. Cost of the put, we did puts in this, was $350, and we got out of it, made 100%. Now, where was the snow gap? Let's take a look at it here. So again, stock closed here, gap down, open, rallied, dropped. So we did the 120 puts, we were aggressive, we were early, we got it before the strike, fell all the way down, went $5 through the strike, fell. Again, nice trade. You can be in and out. A put is a short. So say if you have a retirement account, if you're able to buy puts and sell them, you could basically do that and trade your retirement account, because again, you can't short trades on margin in your retirement account. You can't short in a retirement account, but you can buy a put. And again, people are doing options, people are doing day trades. We also did a day trade in snow as well. Again, who was in control of the snow? The bears. Okay, that's why we got such a nice extension here and a big fat red bar. I was talking earlier and I was talking about, learning and having a mentor. Understanding why something is happening, it just will help you make money. I explain why in the class. And for so many people, this is so important. They just don't understand. They've been trying to trade for years. They don't get it. Why is this not working? Why didn't this work? Why did this work? They want to know. People are anxious and they're curious, okay? If you're one of those people where you're like, if I understand it, I will do better, then that is very, 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 very important. And again, it's one of these things where if you get it, if it clicks for you, then you're going to have the best chance of success. And then all you do is add size. So what do? I use a 26-point checklist. The checklist tells me what to trade and in what direction. So if the gap breaks 20 points or more, I take it in the direction of the gap. And again, I focus on shorts. So this is what I teach in my class. I teach a class on my method once a month. The class for October is this weekend, Saturday and Sunday. This is the meat and potatoes of what I do. This is everything that I know. And then again, you can follow me in the room and take the entries. So how did I get into gaps in the first place? Because I did a short, the first short I ever did where I made a lot of money was in a gap, and it was in Netflix. It's interesting that the price at the time, Netflix was nowhere near the price that it is now. So it's kind of interesting. In fact, I think Netflix earnings are tonight. Actually, I think Netflix is tonight. But once you get into something and you see the power of really shorting in the gap, you will just be so amazed by it. And if you've lost your excitement and momentum to trade, you will get it back again as soon as you start making money. So again, why gaps? Gaps are the most powerful show of price action in chart. Gaps have large moves, and gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. And when I trade, I'm looking for in trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward. So think about it. I mean, you're like, okay, if it's big institutions, big money that move stocks, then I want to be with them. And you're like, okay, if I'm in the right direction, I'll make money. Sometimes people are like, well, I wasn't disciplined enough. No, even if you have the worst entry possible and the worst exit possible, if you're in the right direction, you're going to make money, whether it's an option or a day trade. Most people lose trading because they just flat out do not get the direction right at all. It's really that easy. It's the easy part is that, understanding that. The difficult part of learning it is what you come to learn from me. How do I know that BA is the right pick today, that it's going to fall, that it's going to move, that it's going to have a big move, or any day that we happen to do the trade? Again, I don't follow fundamentals, but if that's what you want to do, if that's what you're interested in, fine. I just don't have time for it. But either way, if the fundamentals don't match up with the gap rating, you go with the gap rating, you go with the price action, okay? It's technical analysis. That's not making the choices, but it's in the gap. So a big flow of money going in a certain direction is what moves the market, stocks, creates momentum, and sets a trend in charts. When you're really looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. And even if you think it's not, it actually is. So number one is learn. Number two is what? You need to support a mentor. You do it, you trade, and then you follow me, and you follow me in the room. And again, you can ask questions in the live room. You can ask questions after the class. You can call me. You can email me. I'm a real person. I live in New York City. The fact is that a lot of places when you sign up and take a class, you can't even get to the person that's actually teaching the class or call them or talk to them at all, even after the fact. I want people to stay with the program. There are people with me for more than 10 years still in the room. They don't need to be, but they like the support. I make it easier for them. And the point is to try to make it easier for you to start making money and learn it and do it after the class. So this is the last 2 weeks in the trading room. I showed you yesterday's trade. Monday was closed for the Columbus Day holiday. So the last 2 weeks in the room with an average risk, these are trades on margin with around $3,000 per risk. We're up for the last 2 weeks, 62,945 with an 83% win ratio. So there were 12 trades, 10 winners, 2 losers, and again, 62,945. This is, you have to be able to take the trades and you have to be able to risk around 3,000 per trade. Now, what if you can risk less? Fine. You still should be getting an 83% win ratio. You can risk more. The idea is to follow me in the room. So these were all the trades we did. I'm going to go over them quickly. Anthony, I don't remember how long do I have to talk? 45 minutes or an hour, if you can let me know in the chat, Anthony. So September 30th, we did Boeing. Then we did BA, which stopped. Apple, that was October 1st. October 2nd, we did Tesla, took a stop, took it again. NVIDIA we did on the 3rd, and then Amazon on the 4th. Then what did we do? We did the 7th, I was off. The 8th, we did NVIDIA. Then we did Boeing on the 9th, Boeing on the 10th. If I see something, I like something, I will stay on top of it. I will absolutely stay on top of it, especially if I see the direction following through or going in a certain way. And then we did Tesla Friday and JPM, which was earnings. So, and JPM was a long, which we're going to go over in here. Anyways, let's look at the first BA here. Well, not the first one, but the one here we're talking about, this one. We shorted at 152.30. Again, did an add. Average price was 152.75. Boom, got the drop. Again, trying to look for $1 more, 151.70. Profit was 73.50. This was a nice trade. So this was here. Again, stock closed here, gap down, open, drop, fell, boom. You're in, you're out, done. And again, try to do the trades fast. That was a short. Then we did here, I got stopped, did it again, 10-1, I got stopped in the bow and actually was up, but I didn't get out. And then I did Apple. This was this particular day. This was a big one. Stock closed here, gap down, fell off a cliff. Entry was 225.60, added the 225, got the drop. Again, trying to look for a big move, $1 or more. This was more than $1. Big trade here, 11,600. Again, if you want to do a put, you could have bought a put, got the drop, got out, done, boom. Again, I'm doing puts and I'm doing day trades. Then on 10-2, we did Tesla. So I took a stop in the first Tesla, lost. I used stops, limit order stops, and I did it again. And I had a really big trade here then in the afternoon. This is in the Tesla. And again, this was October 2nd. We've been very interested in Tesla. We were in this here. We did puts in this here. I don't know if you can see this here. This chat is on it. There we were in puts in this when this gap down then on Friday. I've been liking Tesla lower. And then we did NVIDIA, 10-3, we did NVIDIA long. Again, we've been watching this. Stock closed here, gapped up, rallied, could have gone long NVIDIA, could have done a call. And then we did Amazon long here. Stock closed here, gapped up. We actually got this rally here. It was October 4th. We got in, got out. Again, dollar out. Boom. Whether you have 1,000 shares, 2,000 shares, whatever. Nice trade here in the Amazon. Then I was off on the 7th. Then on the 8th, we did NVIDIA long. Again, I'm looking for $1. It's the pick. It's finding the right pick. You could have actually gone long in here. We bought it here, got the rally up, in and out. Again, it makes it so much easier when you're only looking at one thing a day. Also, then you have less chance for losses too, if you're only doing one thing a day. Then we did Boeing here, was the 9th. Talked about this gap. This was a really good one. Shorted at 150.90, 5,000 shares, got out at 149.10. This was a beautiful trade. 9,000, closed here, gap down, boom. That was it. Look at it, sell off, go with it. And then we did here, the same thing again on the 10th. It was a nice trade. So again, really, really, really looking for one thing a day if I can find it, maybe two. We did the Tesla here again. The short, I was up more in this. I didn't have a good exit on this. It's actually fell all the way down. It was a much, much lower than this on Friday. But I did get out of it with profit. And then we did JPM on Friday too. I moved this. This was this long. And this was a rally up here Friday. And that was a gap up here in earnings. Stock closed here, gapped up, and had a big fat green bar. Again, when you're in something, if you're long, again, you want a fat green. If you're red, you want a fat, if you're short, you want a fat red. Okay, but you got to find the right one to do it. You've got to find it. Make sense? And again, that's the whole point of learning the rating system, to be able to, it's like trying to hit a bullseye. So I don't hit a bullseye 15 times in a row, like a day between 9:30 and 4. I hit the bullseye, done. Shut it down, boom, that's it. And really, the longer you trade, if you're trading all day long, the bigger your chances that you're going to lose. You're just going to give money back. So I just focus in the morning. So you have to be available between 9:30 and 10 a.m. Eastern time in order to trade with me, because that's when I'm taking the trades. That's when I'm getting in. That's when I'm looking for the moves. Okay. Any questions here so far? Oops. We doing good? Anyways, I was talking earlier about people and what they focus on. For as long as I've been teaching people, you know, a lot of people started out with a great attitude about trading, but then they start to trade and they lose money and they don't know what to do. And then they kind of go off the wayside and they start to feel negative. You need to go into the market and risk money expecting yourself to be successful. If you expect yourself to lose when you take a trade, then you have to shift your mindset or take a break, okay? When I get up in the morning and take a trade, yes, I put stops in. Yes, I put the limit order stop in and I assess my risk. But the fact is, I expect myself to win, okay? If you expect yourself to be successful, you'll have a higher chance of making it than otherwise. So again, think positive about doing it. And one of the things about being in the room that is so important, like I said, is we chunk it out in the room, and it's really the support system. So you learn it, you do it, you have a mentor, follow me, and then number 3, you become an expert at one thing, which I talked about at the beginning. It's the focus. It's the focus, 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 focus. So many people jump around from thing to thing to thing. Bitcoin, futures, I mean, all over the place. If people are doing too many different things and they never get good at anything because they want some get rich quick thing that's never going to be there for them. And even the Reddit, the meme stocks, and everybody went crazy about a couple years ago, that was an anomaly, and most people lost in those. Some people are still in those and they're never going to go anywhere and they're down and they're just going to lose. There's no such thing. You have to really learn it and you have to get good. But the timing it takes can be faster than you think. If you don't get good at something and start to focus on something and start to learn something, you're never going to get there. I have people that have been trying to make it as traders and trying to make money in the market longer than I'm alive. And they just jump around to too many things, just wasting time. So don't waste any more time. You really can learn it. You really can do it. And Michael's saying chaos, it is chaos. It is chaos if you're all over the place. I get up in the morning and I know what I like or what I don't. Like I got up this morning, I looked at the market, I said, no, this is a nothing burger here today. There's nothing. Or I might get up tomorrow and be totally in love with something. Again, I'm pretty sure Netflix is out tonight. I don't know what Netflix is going to do, but I'm going to be watching it. And it's going to gap. Could be a long, could be a short, could be nothing. But I have a feeling Netflix is going to have some kind of play in it tomorrow. So I'm really good at predicting the directional bias in a gap. I specifically have an niche in shorting, but I'm good at doing it for longs too. And again, this is something that you just have to get in your head, that if you can get good at one thing, you can make money. I know, I'm sure you've heard this. This has been going around here lately, 2024. A lot of people in those TED Talks and things have been talking about leveling up. You've got to get good. This just applies to everything in our life, not just trading. Go for it, do it, learn it, get good. So many people want to trade on the fly. They just want to trade on the fly, do this, do that, turn on CNBC, take whatever trade. No, if you are not interested in learning, if you don't want to get good at all, you're going to lose. I'm just telling you, there's too many people that are trying to take a bite out of the apple. Way too many people, okay? Getting good is the only way you're ever going to make money. There's too many people out there, too much money flowing into the market, and people are all over the place. And you only get conviction if you get good. It's the difference between the winners and the losers. Otherwise, you have no conviction, okay? And this isn't about having no losses. I have trades that lose. I just got done showing you 2 weeks. We had 2 losers. That's why I use stops. Otherwise, I'd risk my whole account in every trade. That's ridiculous. Nobody can do that. Doesn't matter how much money you have. But I know and have 100% conviction in myself and my system and my method that if I take this trade, this has a high level of chance of working, okay? There's no 100%. You want to put the, you want to put the risk to reward in your favor, and that's where the gap rating comes into play, or the 20 points or more, okay? And then the higher the gap, then the higher the chance of it working, okay? You love the focus on intention awareness with the key insight. Thank you. Yeah. I mean, again, it's the same as any career. that actually you could possibly potentially make a lot of money, whether you're a CPA, whether you're a doctor, whether you're an accountant, whether you're an attorney. People learn, they go to school, and then they have mentors. And then they have a support system to ask questions to, and then they do it, and then they get good, and they do it over a long period of time. So many people are trading for a long time, sometimes, like I said, longer than I'm alive, but they've been doing too many different things, so they're not good at anything to make money. You know what I'm saying? So why is shorting the way to go? Shorting is the way to go for me specifically, and I focus on this because a lot of day traders don't know how to short, aren't good at shorting, so this has become a niche for me. And also, stocks fall faster than they rally. Look at yesterday. We sold off yesterday. There's a couple different reasons, but mainly we sold off yesterday. It happened quick, fast, big. Panic comes in fast. No one's panic buying anything really right now. A lot of people are like, about the election. The fact is, stocks fall so much faster and bigger than they rally. And again, I will go long. I will go long, but panic is something very powerful, and you really should learn how to short, particularly between now and the end of the year and going into the election cycle as well, because there's going to be a lot of volatility. So for me, it's about working smarter, not harder. I don't want to trade all day. I got out of my mortgage job and decided I wanted to day trade because I wanted to work from home, and I didn't want to work 7 days a week. I was doing mortgages working 7 days a week. You know, I trade in the morning. I'm done in the first half an hour of the day. I watch my options. I check them at lunch. I check them before the close. That's it. That's it. It's about working smarter, not harder. You don't have to be locked into a screen for 6.5 hours a day trading. And then again, that can just make you go bonkers too. All right. So getting back to what I was saying about consistency, be consistent with your risk. Be consistent with your trade choices. Be consistent with your strategy, okay? One of the cornerstones to everlasting trading success is consistency over time, okay? And again, I have had a business now for 14 years, teaching nothing but gaps. So I'm not only consistent in my trading, but what I teach. I'm not teaching Forex. I know a thing about Forex. I don't care. I'm doing this, I'm making money, and I'm getting good, and I'm getting better over time. And you will get better over time too. If you could go 6 months out or 1 year out, and someone said in 1 year from now, you can make 62 grand in 2 weeks, would you do everything that you could do to make that happen, to be able to make that kind of money? Yes, you would. So many people, again, just aren't willing to put in the time. And I'm not saying it has to take a year. I'm saying it's going to take as long as it's going to take for you to focus on it and do it. But I am here to help you call the trades and answer your questions. And that's what you need. In order to be consistent, a person needs proper focus on what counts. And for me, I focus on stocks that are being moved and controlled by institutional money. And again, how do I determine that? I rate the gap. So you've got to know what to do, and you will learn it in the class. You will learn to find what stock to trade. It's institutional money, or what I call power money in the market, and we're figuring it out before the open. So I get up in the morning and I rate the gap. And you could do it as a day trade, you could do it as an option. And this is really the only way to make big money, because if you're trying to play low float stocks or penny stocks, they just don't move that much. It's too much risk. They don't move that much. And things with low volume are very dangerous to trade and spreading. And this is a chart here of NVIDIA. I know they sold off yesterday, but the fact is we've been going long this, and it's just been a great example here because this continued up, 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 up. This is a late one where it has late earnings, but this will move with the market. Okay, NVIDIA is kind of like the new Apple, where if NVIDIA has a move, the market, and when I say the market, I mean the QQQs haven't moved. In fact, NVIDIA has, I think, a more powerful hold on the Qs nowadays than Apple, actually. Any questions here so far? How are we doing? So anyways, what will you learn from me? How to become a professional trader, how to find gaps and rate them using the checklist. Gaps have to be qualified. You can't short every bearish gap. You can't go long every bullish gap, and vice versa. Gap fills don't work. It's not that simple. It's not just one thing. It's never black and white. You have to look for and go through the points. And the checklist tells you what to look for in the price of the stock. And as you're doing it and learning it, you're hopefully in the room and you're getting the trades and making money. And then again, it's like a layering. You're like, okay, I get this, but I don't understand this. You're like, okay, now I'm starting to get this. And then over time, you just get good. So the system tells you how, what, and when. How to make money in the market, trade a strategy and system, that's profitable. Golden gaps are highly profitable strategies because they focus on momentum to trade. What stocks should you trade? Gaps that rate 20 points or more, like I said, and you trade the gap in the direction of the gap. When do you trade them? Early in the morning in the open when they set up and trigger, and you must have a structure in place to make any money at all consistently. It's about the consistency that many traders lack in their systems. And like I said, you know, it's even a lot of educators are not consistent with what they teach because you can't be good at everything. You just can't. Like I said, the doctor is a good example because you could say, well, you would go and you would, if you want to become a physician, you have to have a focus, whatever you want to do. Okay. Someone that is a liver transplant doctor or something like that, surgeon, he doesn't know how to do other things. And that is very specialized. I knew a guy a long time ago that did that. Really just unbelievable, amazing that people can even do things like that. But very, very, very specialized. And he makes a lot of money. Oh, somebody there's a liver transplant doctor. No way. Wow. So again, you know, it's like trying to hit a bullseye when you want to get the trade. Like when you're open up somebody and, you know, you're performing surgery on them, you got to get it right, or hopefully get it right. So anyways, how do I know ahead of time where stock will go? I rate the gap. That is what I use, and I say, this gives me the confidence, this gives me the conviction. I'm not just listening to somebody on CNBC and saying, oh, poof, you know, Kramer said it's a good long. Why? I don't know why Kramer likes it. Kramer doesn't know. Very often I'm doing something against Kramer, whatever he's saying. I'm shorting, he's saying to go long it. You know, he's looking at long-term stuff. I'm looking at short-term active trades. So I'm trying to get the momentum today. I want to make money today. I want to make money this week. Friday expiration options or next week. Quick, fast, okay? I use a 26-point checklist. This checklist tells me what to trade and what to look for every day. So the rating system is a 26-point checklist that measures gaps by rating them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day. Number two, a big move in the day. Number three, early confirmation of the bias in the move between 9:30 and 10, and precise entries with follow through, and a good risk to reward target potential, which of course you want. So you need a plan of action. You say, okay, between now and the end of the year, I'm going to do this. I'm going to risk $500 a trade or $1,000 a trade. I'm only going to do gaps to rate 20 points or more. I'm going to create a money management plan for myself. My goal is $1 out of everything. Follow Melissa in the room. Again, do day trades, do options, whatever. I did a live class actually in September. I'm not planning on doing another live class, but this is me. I did do a live class in New York City in September. It was great to meet people live, and you can do it with a supportive mentor. Even though the class this weekend is online, you can do it. I'm here for you. Again, I'm a real person that's been doing this for a long time. Does anybody recognize this man here in this picture? I was at lunch on Sunday, and look who I saw at the restaurant I was in. Again, I live in New York City. Anyone recognize who that is? I was like, oh my Lanta. Anyone recognize who that is in the picture? Hedge fund manager, CNBC, ring a bell. No one recognizes who that is? Wow. No, none of you people must watch CNBC. It's Bill Ackman. He was having a restaurant. He was having lunch in the same restaurant as me. The point is, he's worth $9 billion. The point is, he worked very hard to get to the point in life. He's successful, okay? You can do it. You learn from successful people. Surround yourself with successful people. Follow successful people, okay? That is what it is. You know, I have a YouTube channel, and I have, you know, ads pop up on my YouTube videos, this and that. Something popped up the other day for a subscription service for $27 or something for like the whole year. Do you really think, again, common sense, that any trades you're going to get from a $27 subscription service for a year is actually going to make you money? No. Think about it. Again, like so many people want to make money and trade, but they don't use common sense. I think they can do it without learning. They think they can do it on cheap subscription services or classes, anything that's good, we're going to have to learn it, understand it. It may be a process, there may be a learning curve, and you're going to pay for it. And then you can move forward and you just focus on it and you just do it. I can't believe no one recognized this was, I knew, as soon as I saw him, I knew it was him. I can't believe no one recognized it. He's on CNBC all the time. Wow. Anyways, it's a hedge fund manager. Any other questions here? So be practical and professional when you're thinking about doing this. It's very important. And again, the system used to find the right gap each day is a golden gap 26-point checklist. This is what you will learn in the class. This is what you will learn from me. And again, the class is this weekend. Howard's saying he's used to seeing him in a suit. Right. Well, again, you know, people are living their lives, you know. But when you think about it, the market has billions and billions and billions and billions and billions of dollars in it. You're just looking for a small piece. Remember that. You're just looking for a small piece. You may not even want to be a billionaire or a millionaire, just a small piece. And so it's totally realistic. It's just that you're not focusing on the right thing if you're not profitable. And again, you could be trading all day, which is dangerous too. Like I said, you do the one trade in the morning and you're done. So empower yourself today to learn what to do, how to do it. And again, the Golden Gap course is a complete system to use to trade. All the pieces of the puzzle I teach in the class, the 26 points, the entries, the exits, the targets. And the class, like I said, is this weekend. It is an online class, a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. If you want to learn and come and sign up for the class, the deadline is Friday, which is in 2 days, October 18th. The class is the 19th and 20th, 9 a.m. to 5 p.m. Eastern time. Again, I'm in New York, so this is Eastern time zone. Class is online. Class tuition is $69.99 US dollars, and I am doing a welcome fall special. This is Central Park, beautiful. I live along the park. The fall special includes the market report subscription for 1 year free, the trading room for 1 year free, and the options newsletter subscription for 1 year free. So whether you want to do both the room and options is up to you, but you get both of these with the fall special if you sign up by Friday and then you do the class this weekend. And the tuition again is $69.99 US dollars. If you're interested, you must email me for sign up forms. You cannot get them off the website. And again, the special ends the 18th. This is a good special because you can trade, you can get the trades tomorrow if you sign up today, and you can get the trades all this earnings season. So this is a really good class to get in and learn it and then do it, because Apple, Microsoft, Amazon, Google, Tesla, Boeing, all the big ones that we love, everything is coming out in the next couple of days. So we want to be, and like I said, Netflix is tonight. So we want to be able to make money and do it, and you will learn as you go and you're doing it. And again, if you work somewhere where you can train and get online, fine. If you work from home, either way. For me, I always wanted to work from home and continue to do that, and it's really a nice lifestyle. But the fact is, you are closer to realizing your dreams than you think. This is real, you can do it. This is a sunrise here in Central Park. Beautiful picture, beautiful view. And I'm telling you that I've taught people, they're doing it, and people are doing well. Again, everyone is a different learning curve, but I am here to help you. And that's one of the most important things. I think that's one of the things that differentiates me, that I'm willing to actually talk people and help them. That only benefits me if you stay with the program. And that's one of the reasons, like I said, I have people that have been with me for a long time. But you've got to start seriously thinking about it. Think about your future. Think about taking it seriously and really wanting to give it your all so that you can be successful and do it. And again, like I said, 19 days away from the election, gonna have a lot of volatility, could be up or down. Gonna have a lot of great trades with earnings season. Now is the time you want to trade. Now is the time to make money, and then you relax over the holidays. Any questions from anyone else about anything else? I'll go back here with my information. Any questions from anyone about anything? If you're interested, you can email me at melissa@thestockswoosh.com. And again, I think Netflix is tonight if you want to watch it. You can go to my YouTube channel in the Stock Swoosh and look. I have a lot of videos there, actually, of Central Park as well. I just got back from taking a walk in the park, actually, before I popped on here. Any other questions from anybody? How's everybody doing today? Any familiar faces out there, new faces?
Hey, Melissa,
Hi.
we're about at time.
Oh, good. Wonderful.
Yeah, thank you. So the
I
Bill
didn't
Ackman.
know.
No, it's okay. I apologize. It's my fault as well. So yeah, Bill Ackman is like the opposite of Carl Icahn. Aren't those two foes?
I don't know. I don't know, but if you
Okay.
know.
One was pro Herbalife and the other one wasn't, I think. Both
Oh,
are
you're
icons
talking
though.
about that. That was a couple
Yeah,
years ago.
that
That
was
was
a
a couple
couple of years
years
ago.
ago. Yeah.
Thank you
Interesting.
so much. Yeah, thank you
You're
so
welcome.
much, Melissa. All right. Thank you, Melissa. What a great presentation. And thank you for sharing, so many personal experiences in your journey and everything else. And I want to thank you for making such a generous offer to our audience today. It's always great to have you on Traders Corner. Ladies and gentlemen, that was Mrs. Melissa Armo of the Stock Swoosh, an expert at trading gaps. Feel free to ask her questions and she could type them in to you back. And she's an expert at trading gaps. If you're interested in learning a rules-based strategy that has the potential to garner fast profits, trading just 30 minutes a day with incredible precision, then you could find Melissa's special offer in our chat box, and Melissa can always be found at thestockswoosh.com. Thanks, Melissa. We always enjoy having you here, and thanks for joining us today. We hope to have you back on Traders Corner. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro trader resumes and brings you only the most credible and qualified educators to participate on our venue. And our next presenter is no exception. She specializes in helping people to day trade with confidence and ease. If you have the desire to learn to day trade successfully, that simplifies the process by completely breaking down the art of identifying high probability trade setups. Here to present Become a Profitable Trader, Get Back to the Basics of Day Trading is Marina, the trader chick Villatoro. Welcome back to Traders Corner, Marina.
Hello. Oh, thank you for having me.
You're most welcome. Thanks for being here.
Sure. Can I have a, I don't think I have an opportunity to share my screen, right? I'm not sure.
All right. Let me help you with that.
Hi, everybody. I'll be up in just a sec.
Can you try now?
Yeah, hang on a second. Okay, cool. Can you see my screen?
Yeah. And can you see questions or anything like that as well?
No. Can you give me
No?
that
Okay.
opportunity,
I'll
please?
do that as well. You're welcome. And feel free to start.
Okay. Hi, everybody. All right. I just want to say hello and thank you for taking your time out to be here. I see that we have my question box open. Hello, Michael. Hello, everybody. All right. So let me just put this to the side and let's jump in and have fun. I am Marina, the trader chick. And today I want to talk about stuff that we forget or overlook. And I believe that once we kind of get back to understanding some of the more fundamental stuff of trading and the markets, that's when we get to soar. So before I begin, I want to just do a really quick intro. I'm Marina, the trader chick. I actually am living in Barcelona. I am an expat. I've been an expat for over 20 some years at this point. And I know that every time I mention being an expat, I always get a lot of people who are interested in also living in a different country, different places. So please just write me personally because I'm really happy to help with that. And you guys could trade from anywhere too. Before I was a day trader, I was actually a fitness instructor and a travel writer. So why is that important? Because a lot of people have this belief or this concept that you cannot be a trader unless you come from a software background, from a math background, economics background, financial background. None of those are true. Okay, I was a fitness instructor, and so you could do it regardless of what you did before. And of course, we could trade from anywhere. That's really the coolest part of all, right, about trading. So before I jump into the presentation, I have the entire presentation for you guys for absolutely for free. You could go and download it at makingofadaytrader.com. Go and download it right here, makingofadaytrader.com. And let's begin. So what in the world is day trading and why is it not investing? I have so many people that come to me that when they hear that I say I'm a day trader, they're like, oh, I want to invest. So I always say we trade to invest, because unlike investing, with day trading, there's several huge differences, right? First and foremost, kind of like what Melissa was saying, that you don't want to diversify. You want to really become super specific, right? Like that heart surgeon or the kidney surgeon, they make a lot of money because they have fully focused, right? The same with trading. You don't want to diversify. You want to really stay on board, right? It's kind of like a music student. So imagine your child comes up to you and they say, Mama, Papa, I want to learn how to play a musical instrument. You're like, super. Which one? Well, I want to play the piano, the drums, the violin, and the flute. And you look at them and you're like, well, you got to pick just one because they're all so different, right? So the same thing when you are trading. You cannot be playing all four instruments all at the same time. It's absolutely impossible, right? The more you fully understand what you're playing, the better you will get. I always make an analogy with Liberace. We all know who Liberace is. Love him, hate him, I don't care. But we all know that he was an absolutely brilliant pianist, right? So what does that mean? It means that he focused on just the one thing. I'm sure if he picked up the guitar, I'm sure if he touched the drums, he'd probably be a master at those two, but he just knew what he was the best at. And one thing I realized is when you finally master one instrument, you could start to make real money, not be, wondering or worrying, how come I'm not consistent? Why am I not winning? Why am I doing this? And once you master that, then you could certainly move on to the next. Investors don't care if the companies that they are investing in are making money or if they're losing money. Well, why? Because we don't care if the market is going up or down, right? Because why? Because we make money going up or going down. It does not matter. As long as we understand what is happening in front of us, that's what we fully could understand. Okay, guys, so ready to bust those myths in day trading? The thing is, it's too risky, right? That's what you hear all the time. You know what? How about you give your kid who's 14 years old keys to your car and just say go, never teaching them how to go about it. Will it be risky? Yeah, it'll be crazy risky. But what if you took time for 6 months and taught them how to drive the car, taught them how to turn everything on? What do you think? Do you think that would be risky? Not so much, because they have a really good idea of what to do. They have a strategy for driving. They know when to stop. They know where the brakes are. They know where the parking is. They know, they have understand. The thing is with trading is that 99% of people don't ever bother to learn a strategy. They just literally donate their money to the market and then they say that it's risky. It's not, okay? The other big thing is that you need $25,000 to start. Guys, today, starting with $500 is okay, regardless of what market you are trading. Regardless, okay? You do not need that. That is a myth that has to go away. And like I said before, you don't need to be a math whiz or with a financial background. It's just the way it is. So the other thing is that it's stressful and chaotic. Well, if you have this setup, I mean, wouldn't you get completely stressed out? I have one chart. Why? Because when I look at this, I just get so stressed, massive analysis paralysis, and the reality is no human brain can manage this. It is completely and totally unsustainable. Okay? This is not how it should be, guys. You could use one monitor and it is all you truly need. The other thing is, this is a massive misconception that you need massive softwares, indicators, and algorithms, but the reality is you don't, right? Once you get your platform, once you get a good platform, and you do need a good platform, right? Because you cannot be a Formula One driver in a minivan. You need to have a really good platform. Those platforms, they come with tons of software. They come with tons of indicators. Okay, so that's all you truly need. You do not need to be buying extras at all. And the other thing is news. Look, if you're sitting there and watching news all day, it's not going to make your trading any better. Why? Because the majority of the news is pushed through agendas, right? It's pushed through the people who are giving you this area. And then the market research really does not help you much because all of a sudden the stock that they're saying is fantastic is tanking because you really don't have the full goods. However, if you are a technical analysis trader, you could overlook this and just do your thing. And this, okay? Trigger happiness. Guys, this is the thing, and this happens to everybody. Imagine putting in all these trades. First and foremost, even if you are making money with this amount of trades, you're going to be pummeled with the commissions, okay? That's just the reality of it. And really, this is just too stressful. This is not good. Nobody does this. Think of a trader as a big game hunter, right? It's a really good analogy because big game hunters, when they go for the day, they aren't going to be shooting every single little insect or bunny that hops in front of them, right? They're going to sit and wait for the really good, strong trades, the same as the trader. All right. And usually the most radical way to trade is conservatively. So we only hear about the super amazing wins, but we rarely hear about the massive losses, because when you're an aggressive trader, you will have massive losses. However, if you are a conservative trader, if you have a very strong strategy, guess what? You will be consistently winning, and small profits daily bring you big profits yearly, and it becomes a very consistent, profitable lifestyle. FOMO, fear of missing a trade. Guys, this is such a huge thing. Look, a lot of times people might be a little bit distracted and they look at on the screen and there's a trade. Oh my goodness, they start to chase that trade, right? And then what happens, of course, when you chase the trade changes direction on you, and all of a sudden you are now freaking out. So you remove your stop. So now you are stressing, you lose your money. Boom, what happens next? You go into revenge trading. Here is the secret. There is always another trade coming. It's kind of like saying you're going to go to the ocean, go to the, for surfing, and you miss that trade, that once wave. Does that mean there's going to be no more waves ever again? Of course not. We all know that there's going to be thousands of other waves coming. It's the same thing with the market, because if we miss that one trade, we might as well just finish forever. That means that there's no trades coming. Don't chase trades, guys. There's always another trade coming. So the other big thing is what to trade, right? If you're going to do the one instrument that you're going to start with, you need to know what to trade, right? And on top of that, you need to understand what truly works for you, okay? Because some people might enjoy one thing versus the other people might enjoy another thing, correct? So let's talk about the different markets out there. Forex. We all know about foreign exchange, right? So what is Forex? It's literally when we're pairing two currencies against one another, and that's what we're focusing on. Again, Forex, there's so many different currency pairs. I really recommend choosing one or two and sticking to those, because then you get really understand. Equities, you really want to, like there's over 5,000 equities in the US market alone. So when somebody tells me they're doing equities, I'm like, no, you're not. That means you are really not professional, because pros will come out and be like, yes, I do big caps or small caps, sectors. I really only focus on tech or medical or entertainment, right? So you really want to focus on a specific sector, even the big caps or just the small caps, or even just one particular stock. Amazon, Meta, Tesla. I mean, these stocks move. There's a lot of volatility behind them. Futures. All right. I personally love futures. But again, if I'm going to ask you, what do you trade? And you're telling me futures, commodities. So I'm going to say, so you're trading soy, wheat, E-minis, the Russell. None of these work the same. So it's really better to choose the one, because then you could focus. You cannot be in 4 vehicles all at the same time. It's impossible to do that. Options as well. Focus on the options. Learn the ones that you really want to master, and then you'll go with it. And crypto, right? We all love crypto, or we love the idea of crypto. Again, crypto, there's over 6,000 altcoins and projects. Bitcoin is one. It's one out of 6,000. Do you really want to do all 6,000? Do you want to just do Bitcoin? Do you want to just do ETH? I mean, you need to focus and understand. Okay, one thing that I will definitely tell you not to do is leverage on crypto. Crypto is still super erratic, and it could do one quick move and not only stop you out, it could wipe you out if you are leveraging. If you're not, you can still lose, but you will definitely not be hit as hard. Okay, I want to talk about brokers. I get so many people that write to me and they're like, oh, I just signed up with a broker and now I need to start trading. I'm like, well, what do you want to trade? Because if you want to trade futures, you want to be with a broker that focuses on futures. You want to be with, also if you want to do crypto, you need to be on a crypto exchange. That is something you need to understand. But what's the most important thing of all is a lot of people say that they want to get a margin account. People don't understand the whole point of brokers. Their business is for you to either borrow money, lose money, take money, whatever. A margin account is literally like a loan shark account. It is them lending you money to buy even more stuff that you don't know if it's going to be good or bad. Why do you need to borrow that money? Why? Just have the money that you have, and this way you do not need to borrow, because if you do borrow, which is a margin account, you could lose, you still end up paying interest and giving away everything else. Not worth it. Commissions. Okay, a lot of instruments you do need to still pay commissions. I know with equities you really don't, but the majority of the others you do. So if you're going to be with a broker and a platform that focuses on equities, but you want to do futures, they're going to charge you a lot more. So if you want to do futures, focus on a futures broker and everybody, because then you get the lowest commissions and the best fees. Platforms, guys. I'm going to say it again. You cannot be a Formula One driver in a minivan. You need a good platform. Day trading lingo. So this amazes me remarkably how people, whoever is in the room right now, whatever your business is, your job is, sport is, whatever it is that you do, there's a certain lingo to it, right? No matter what you're doing. It's the same for the financial markets. If you don't know what is happening, even in the basic lingo, you will be losing money. First and foremost, intraday trading. That means you are literally in and out of your positions within the same day. That does not mean that you're holding it for the following day. That's already swing trading. So you need to understand that, because then you can understand the time frame that you are going to be looking at. Bull market, it literally just means the market is going up. Bear market, market's going down. Sideways trend, there are 3 trends, right? We've got the up, the down, and people forget about the sideways trend, and that is one of the more important ones. Also, if you are a pro trader, you want to focus on the profit target as much as the risk management. Why? Because greed will get you. Ego will get you. So we want to put in a profit target, right? And we want to make sure that it hits the profit target. But if you have multiple positions, great. You could get one position out and then continue on to the next profit target. But you need to be very strategic. You need to understand. And you need to have a risk management in place. You cannot have a mental risk management in place. It's literally the same as saying you are going to put in a mental seatbelt on your child when you are driving, that you will not click it, because you'll save them if an accident happens. No, you won't. And it's the same thing for a risk, okay? Back to the charts, guys. I'm going to repeat this again because so many people don't know how to use charts or don't use charts at all. Your charts will have indicators, okay? Like I mentioned earlier, you do not need to spend any money on those indicators. They usually, you have hundreds of indicators, universal indicators that come with most platforms. All right, trending markets. Again, we've got the upward trend, downward trend, and the sideways trend, and that is the most important of them all. This amazes me. I have so many people that put in a position and they're asking me, why did I just lose? Why did I lose? I was going up. I'm like, because you put it opposite. When you are buying a position or going long, that means you are entering low, exiting high. Okay, this is a buying. That means you are entering low, exiting high. The opposite is selling. That means you are literally doing the opposite, okay? That is when you are shorting the market, when you are entering high, exiting low, and you're taking the profit in between. This is selling, shorting a market. So you're literally entering high and exiting low. You need to understand that. The other really important thing is the difference between a market entry and a limit order. So when you are watching the market and you don't really know what you're doing, all of a sudden something may look kind of good, you're entering right away. That's called market entry. That means an amateur has just entered the market. Why is that an amateur? Because the market penalizes you for that. Because if you want to enter at a certain price point and you're just going market entry, it takes 25% away from you, the market, literally. You lose 25% before you even started, just on the entry. But if you are a limit order, that means you are placing your order where you want it to be filled. The price target, the price where you want it to be filled. If you don't get filled, big deal. Like I said before, there's always another trade coming. But at least you're letting the market know this is where I want to go. And then the market understands that you know what you're doing. You have strategized, and it does not penalize you, that 25%, which is called slippage. Okay? And it's the same for the stop. You want to put in your stop. You don't want to be market exiting, okay? Because again, you will lose 25%. So let's say you want to get out at $1, but the market is like, I'm gonna take 25% away from you right away. That's slippage. You need to have your places in place. I mentioned technical analysis. I personally am 100% technical analysis trader. I don't watch the news. I don't care about the news because the news doesn't matter. What does matter is what the market is doing right there in front of me. And that is only done through technical analysis. That is understanding what the market is doing in front of you. And the coolest thing about technical analysis is that it's free. It's literally free. It is what you can understand with the market. So here are some of the most important technical analysis that you could possibly use. Resistance and support areas. Okay, when you have a strong resistance, which is a ceiling, it is the ceiling of the market. You know that it is a place where the market has hit over and over again. You have drawn in that area. It shows that the market is not breaking through. So don't get in. Wait until it either breaks through or changes direction. And the exact same goes for the support area, which is the floor of the market. It's the floor of the market, right? And it hits over and over and over again. It's the floor of the market, the support area. Guys, if you're seeing support or resistance, don't put your money in the market. It's pointless because you don't know what the market is going to do. All right. My personal favorite, I absolutely love reversal patterns, and they're free. That is the most beautiful thing. What are reversal patterns? It's double tops, triple tops, double bottoms, triple bottoms, and head and shoulders. So when I'm seeing a reversal pattern, does that mean it's going to reverse? Highly probable, but not 100%. So what do? I sit out. It's really important to understand the action of sitting out versus constantly wanting to get in. When you sit out, you could focus on what's happening. And when the market really gives you that confirmation, that's when you want to get in because that's when the real money is done. Divergence. Divergence for me is my holy grail. That is when price action is doing one thing and your bottom indicator is doing the opposite. What it's telling you is that the market is slowing down, it's losing its strength. It is completely coming to a dead stop for now until it gives you that extra energy and extra strength and extra confirmation. And when you see divergence and a break in divergence, that's when you know what it's all about. All right, I'm going to put this all together. Again, mentioned earlier, making of a day trader. Go and get your free presentation right here. So when you put it all together, when you've drawn in your resistance area, you could spot the breakout trades because the breakout trades we all know are probably some of the most popular trades out there. So when you are spotting the breakout trade and it breaks through, boom, you want to be ready for it, right? You want to be ready to grab that trade. So how does this work? So for instance, like I mentioned earlier, I have two sets of indicators. So when I see that strength, when I'm seeing that movement, when I'm seeing that breakout, that's when I can put in my order waiting and it can be filled for that breakout. But if I don't have my areas drawn in, I'm going to miss all of this and I'm not going to understand what is happening in the market. Okay, look, guys, we have absolutely everything that we need to take action, right? Everything. We have these amazing presenters all the time, different summits, different events. There's a lot of really great YouTubers, gurus, classes, everything, right? We have everything that we need to take action. But at the end of the day, how do you know that you are doing it right? How do you know that you're doing it right? Because all of this is great, but the real question you're probably asking yourself is, how do I get started? How do I even get started, right? How? Where do I begin? And this isn't from beginners only at all. I actually get this question more so from seasoned traders than anybody else. Why? Because they have been doing it and they're still inconsistent and losing money. And a lot of them ask me, how do I be profitable consistently? And I have to admit, the majority of the times, it's literally just lacking those basics. And I look at the basics as the bricks of our foundations, right? You cannot be putting in a window if you don't have bricks and a wall holding it up, right? It's not possible. So putting in your basics will give you that foundation, and this way you are able to manage any market at any way that it's moving, and that is you literally from the basics. So it's like getting into the car and not knowing where is the steering wheel, where is the gear shifts, where is the brake, right? Those are your basics. But you have to remember, when you first enter the car, you didn't know where they were. Someone taught you. And a lot of times, especially in the financial markets world, in the trading world, it's as if though we are born with this information, right? Like we are born with these basics. And I have found that it's really difficult. Imagine, I just want you guys to imagine somebody who has never been in a car enters your car and you're like, all right, buckle up your seatbelt, it's going to save your life. And they're like, buckle up my seatbelt. What is a seatbelt? Where is it? What? Oh my God. So if you don't know because no one's taught you, it's never going to happen, right? So you need to learn these basics to start with. And this was my own personal sad truth. I mean, I spent over $20,000 on my trainings, and every single time I was asking questions about, can you please explain divergence? Can you show me how to do the resistance area? Or really basic questions. I was always treated as if though I was born with that information, or even worse, completely ignored. And that was why I struggled. I struggled for years losing money, and I ended up losing almost $4,000 in 5 minutes after losing a lot of more money over almost 2 years. And at that point, this particular time, I just quit. I was done. I was so frustrated. I felt so defeated. I felt like just that I just was not able to do it, and I quit. I quit. But here's the reality, guys, and I know that everybody in this room feels the same way, that we are all bit by the trading bug, right? And it never stops itching. And do you know why? And this personally happened to me. Do you know why? Because deep down inside, we know that we could do this. I quit. I walked away for almost 4 months, but I have to admit, I was watching others and I'm like, if they could do it, I could do it too. I know that I could do it. And that's when I returned. At that point, I had 3 monitors going on, and I decided to remove 2. I have 1 monitor. I went to 1 chart. I removed everything. It was in price. It was just naked price to action all together. And then I slowly started to truly understand the basics of what the market was doing. And once I started to really understand and decipher the basics and listen to the market, everything changed for me. Everything changed for me. And I have to admit, the basics has saved my life. And a couple of years back, one of my students goes to me, you know, Marina, your trading philosophy and strategy is really similar to Coach John Wooden. I had no idea who Coach John Wooden was at that point. So, of course, I looked him up. And I don't know if you guys know who Coach John Wooden is, but he was a legendary basketball coach. I mean, this guy was legendary coach, okay? He trained the best of the best, okay? And his entire philosophy was, when in doubt, get back to the basics. I mean, this guy had 10 NCAAs, 88 national championships. He trained superstars. Yet every season, the beginning of the season, regardless of the wins that they had and he has had, he goes back to the basics because ego is a real thing. And he knows that a lot of times egos can get the best of you. So when you go back to the basics in basketball, how to tie your shoe, how to roll up your sock, how to dribble the ball. Because if you're on the court and you forget this basic move, your shoe could be untied, boom, it slips, you could hurt your ankle, sprain your ankle, and you're out for the whole season, regardless of the amount of NCAAs or national championships you have under your belt, right? So going back to the basics is so important. And today I have that special offer for you guys only. And that is my introductory course, Bootcamp for Day Trading. You guys could do this on any apparatus, on your laptops, your tablets, iPhones, Androids, desktops, laptops, anywhere. Okay. And I have this for you guys, one-time fee, one time only, $97. Okay. I want us to all go here for Bootcamp for Day Trading. You guys are taking this time out, so just take a few minutes, please, and go here with me. Bootcamp for Day Trading. Bootcamp for Day Trading.com. Go here right now to follow along to see all that you're going to be getting in the course. So what can you guys get for $97 that brings you the same return on investment? You guys like to play golf? Before we moved to Barcelona, my family lived in Guatemala, and we really like to play golf. My husband and I, when we first began in Guatemala, we lived there for 14 years. It was like $29 per person. We moved 2 years ago, and it was $119 per person, okay? You want to go out for lunch? Sure. Today, 2-3 people is $97. You cannot even take out your entire family anymore. So let me break this down for you guys, what you guys are going to get in Bootcamp for Day Trading, okay? Bootcampfordaytrading.com. You're going to get the simplified trading package. Also, what I found really, really holds a lot of people back is understanding the platform and setting it up. I am giving you 30-minute platform tutorials, so and almost all platforms work very similarly, so that we could just get and jump right into the tutorial. I mean, to the trading itself, right? The tutorial helps you get it going. Boom, you are ready to trade. Then we really dive deep into dissecting the markets, the uptrends, the sideways trends, downwards trends, reversal patterns. You really get in there. All right. This is probably the best thing you could possibly do, right? Understanding reversal patterns, support resistance areas, and divergences. And these are simple, they're easy to grasp. And once you do, you're going to have aha moments. And I guarantee it will completely take your trading to the next level. All right, because divergences, like I said, are my holy grails. And we're going to master the breakout trade, because once you understand how to spot it, you are going to be able to totally get into all the breakouts. And the cool thing of all, you'll avoid the fake out breakouts. All right, guys, and you'll get unlimited access to this curriculum. The whole value is at $1,600, but I have a special just for you guys. So before we move on, I just want to give you a few students' testimonials, because I have students from all over the world. And the coolest thing of it all is that you can do it from anywhere in the world. All right, Michelle, best money I've ever spent. Best money I've ever spent. I love the boot camp. Derek, you are the only mentor that truly checks the work. Adrian, I'm enjoying the boot camp. I am learning so much. But I wanted to remind you guys, remember in the beginning, I asked you, how do you know that you're doing it right? How do you know that you're doing it right? So I want to share something really important with you. I am offering in this one-time fee, 1 month, one-on-one mentorship with me, unlimited coaching with me for 1 month. This way you don't have to wonder, am I doing it right? Am I seeing it right? Is the chart correctly set up? Is this the right way? You will have that communication with me, one-on-one, unlimited, guaranteed. So that is included. And that alone, to be honest with you, is quite priceless, right? You'll have me behind you, because having a mentor could be what can take you to that next level. And I know that it's helped me personally in so many endeavors. And you get the best for last. I have a live chat room that you will be participant in for free for 30 days membership. All right, all of this valued at $2,600. You guys get that special price, $97. Bootcamp for daytrading.com. Bootcamp for daytrading.com. Bootcamp for daytrading.com. Go here right now. And again, this is all that you guys are going to be getting in the course. One-on-one with me for 30 days. In the live chat room, you'll be able to go where we implement, go have the live trades. You are in there all the time. All right. And the whole course is literally worth less than one trade, because I know, and you know, it's what, $200 to $400 per trade that we normally put in. $97. This is going to 10x your return on investment. So you could have 100 of these dinners. But one thing that I have to let you guys know is, because of my mentorship, I'm only open to 25 spots, because I really want to focus on you guys. I want to give you my full attention. You only get 25. I only have 25 spots, and normally they get sold out pretty quickly. So I'm just letting you know, 25 spots, and I have enough bandwidth to be able to totally focus on you guys. All right, so I want you guys to go here to your browser, put in Bootcamp for Day Trading, and this is what you're going to be seeing right here. Bootcamp for daytrading.com right here, and put it in. This is the order form right here, and you can see right here, $97. If you want to do a payment plan, I do have for 2 months, $59 each. However, you get the entire everything all immediately when you make the very first payment. All right, so just put in Bootcamp for daytrading.com and we'll get started. All right, guys, let me know if you have any questions at all. Let me know if you guys have any questions at all, and I'm so happy to help you. Bootcamp for daytrading.com. And I just wanted to say thank you, everybody, for being here. And thank you to Anthony for having me. And let me know if there's anything else, and I'm happy to help.
Thank you, Marina. Another amazing presentation. I love how you simplify everything so anyone can understand and succeed at the art of trading. Great information. Thank you for taking time out of your day to join us today on Traders Corner, and for making such a generous offer for our members. Ladies and gentlemen, that was Marina, the Trader Chick Villatoro. And we've put her special offer link in the chat box there. So if you haven't already, feel free to go to that link and start filling out your information and everything. You can also find Marina at thetraderchick.com. That's thetraderchick.com. Marina, we hope to have you back on Traders Corner. Thanks again.
Thank you. Bye, everybody, and thank you so much for being here.
You're most welcome. We really appreciate you. At the top of the show, I mentioned that we had a great lineup, and next up is certainly no exception. He is a 20-year veteran day trader of the E-mini futures market and swing trader of stocks. He grew up in the Chicago area and now lives in sunny Scottsdale, Arizona. When he's not in front of the computer trading, you'll find him outside hiking, riding his mountain bike, and exploring. Ladies and gentlemen, here to present day trading the E-mini futures on 1-minute charts for maximum profit is Mr. Tim Racette of EminiMind.com.
Hey, thanks so much. Appreciate you guys having me, and we'll be getting started here in just a minute. If you're able to, there we go. I can get my screen up here, and we'll be ready to rock.
Thank you, Tim.
Try that again. There we go. Okay. Well, thanks everyone for tuning in. We'll get started here in just a minute. We'll give everyone another 30 seconds or so to join in if they're waiting for the bottom of the hour here. And we'll be talking about day trading the E-mini futures today, and lots of good stuff to go through in the next 45 minutes or so.
Hey, Tim, I wanted to ask you one question.
Sure.
Am I pronouncing your last name correctly?
It's Racette. I don't know how you-
Racette. Okay.
Yep.
All right. Thank you.
And are you good for me to just jump in when we're
Oh, yeah, we're ready for you.
Okay, perfect.
Yeah.
All right. Well, thanks everyone for tuning in. Thanks for having me. We appreciate taking a little bit of time out of your day to expand your trading knowledge and hopefully pick up a few new skills and tools to improve your trading. So my name's Tim Racette, and I blog over at EminiMind.com, or at least that's how it started, a blog. I guess now it's just considered a website. But we're going to spend our next 40 minutes or so talking about day trading the E-mini futures, something that I'm very fond of and have been doing for a long, long time. And even more specific than that, we're going to be talking about and using examples from the S&P, E-mini S&P, the ES, and using a 1-minute chart to help maximize profit and kind of give you an edge as a individual retail trader. Now, the nice thing about kind of my general philosophy and the way that I go about trading the markets, you don't have to trade the same market or even the same time frame. So you could transpose the strategy or concepts here that I'm going to talk about to different markets, different time frames. You could pull different pieces, like the way I trail my stop, and apply that to the trading strategy that you're already using. You don't need to use the same charts that I use, or I don't have any proprietary, indicators specific to a very specific platform. So that's the nice thing about keeping it simple. You're able to kind of move around to different markets and expand across different time frames as well. So what we're going to cover today, we're going to go through 3 basic trading techniques that you can use to day trade or swing trade or do other things with on different time frames. But in general, we're going to talk about the 1-minute candles and places to put on your trades that are most likely to gain momentum. We're going to talk about the high low bar and low high bar strategy for the placing of the trade, the entry. And then we're going to talk about a really effective trail stop technique that I first started using for swing trading, or developed, you could say. I'm sure I'm not the only person using it, but pretty basic that I used for swing trading. And then after a couple of years of swing trading, I started to incorporate day trading in maybe 2007 or so, 2006, 2007. Started adding day trading in, and just kind of adapted my general overall strategy to the smaller time frames. So the most important piece for me, and what drew me to trading, probably drew you to trading as well, is to be able to live a very flexible and financially free life. So getting to that point where you're not tied down to a specific location, being able to generate, enough income to sustain essentially indefinitely by trading, and being able to kind of go anywhere and do the things that you want to do on your own time. So whether you like golfing, or if you have kids or grandkids, or it's just you and your spouse, or you're single and you just like traveling the world, pretty much anywhere where you've got a internet connection, and reliable internet, and a reasonable time zone to wake up and trade, you're able to do it. So I would consider myself, like, the amount of time I spend now trading is much more limited than when I first started. So even though you classify me as a full-time trader, I'm really focused on the morning 90 minutes to 2 hours, but usually about the 90-minute mark, I'm done for the morning. If I'm in a trade, I'll continue on in that trade, but I'm not going to put any new trades or initiate any trades over the lunch hour in the afternoon. I find that the morning gives me the best bang for my buck. I can be super focused, and then I can pull back and get away from the screen, so that the next day I can be recharged and refocused and come in and trade again. So that's what's worked super well for me. And for those that are unfamiliar with myself, like I said, my name's Tim Racette, and I've been trading since about 2006. And I had I guess you could say some helpful benefits, if you will, or like an unfair advantage growing up in the Chicago area where you're close to proximity-wise to Chicago Board of Trade, Mercantile Exchange. Tom Sosnoff and Thinkorswim was kind of coming of age in the early 2000s, so got to get to know those guys. And Infinity Futures I traded with for a long time. They've since been bought up by Ninja. Now I execute my trades on Tradeovate, which has also been bought up by Ninja. I still use Thinkorswim for my charts, but a lot of these trading platforms and things, and just trading individuals are going to be in these hubs like Chicago and New York. So when you're in those areas, it's easier to find. I mean, there were trader meetups, and I had access to the Board of Trade and got to go down to the trading pits for a while and spend time down there, kind of shadowing or just kind of being mentored, if you will, by some of these pit traders. And then they turned my friend and I over to some friends that were trading on the screen up in Lake Forest, and then they kind of helped mentor us and developed our kind of trading philosophy that we use today. So there's a lot of good things, I guess you could say, with the world we live in now and the access to online information and YouTube and all that kind of stuff. But there's also, it can be very overwhelming, and there's a lot of junk out there too. So keeping things as simple as possible is kind of the big picture that you'll want to take away from the ideas that we're going to talk about today. So I primarily day trade the E-mini futures, specifically the ES. I do also swing trade stocks, but for the most part, day trading is my main go-to. They do make a nice pairing. So if you come from a swing trading world, or if you like to trade options, and you're thinking, should I add in some day trading? Day trading and swing trading make a nice pairing. I do all of my trade management for my swing trades, positions that I have on. I do that right at the close. If I'm gonna put an option position on or buy puts as a hedge, I do all of that at the close, right in the last 10 minutes, and then the day trading is done in the morning. So there's not a lot of overlap intraday with managing the two of them. I've had the pleasure to present and speak at a number of traders expos and some of these online presentations, which is great to whether it's in person, getting to meet folks, or just chatting with people over the interwebs. Nice to intermingle with other traders, because otherwise, it's just you, and maybe you have a friend where you live that is a trader, but a lot of times it's just you. So it's hard to talk and relate to your spouse or your partner or friends about trading. They have no idea what you're talking about. But then outside of trading, I spend a lot of time outdoors, ride mountain bikes, hike, do all kinds of stuff away from the screen that really helps to kind of clear my head and stay grounded and focused when I am in front of the screen. A lot of my light bulb moments or things that have clicked over the years have really come from when I'm out on a bike ride or just out on a walk. You don't have to do any extreme sport, or you don't even have to play sports to gain the benefits of kind of that dopamine hit. And if you just get outside for 5-10 minutes and go for a walk around the block, that can do a lot to kind of get the creative juices flowing and keep you in a good, just kind of overall mental state. So I spent most of my years, like I said, growing up in the Chicagoland area. Now I live out in Scottsdale, Arizona. Went to ASU, and then just kind of got hooked with the Arizona winters, and have been coming back and forth ever since. So spend about 9 months here in Scottsdale, and then the other couple of months of the year we get out of the heat and go up to the Black Hills in South Dakota and have a house up there too. So it's a nice place to live for 9 months out of the year, that's for sure. All right, let's talk about some chart setup and specifics with the details around how I trade, and we'll go from there. So as far as chart setup, like I said, you don't have to use anything specific, a specific platform. This is just my Thinkorswim chart setup for the 1 minute chart. There's not much to it. I have two monitors. So the left monitor is my charts, some basic watch list with the index and the indices, and then the futures below that. And then down the left, I'm not going to talk about too much, but this NYSE tick chart is something that I use for intraday trading. And then on my right chart, I have my trade ladder, and I just keep a 5-minute chart up on my Trade-of-8 platform. So the ES trade ladder, and that's really it. And then I have I just use Excel for my trade log, and make some notes in there throughout the day that I can review later. So the first thing that we're going to talk about are, the candlesticks, and you don't really need to overcomplicate your charts. You could certainly look at trading, on a bar chart, but we're just going to talk about basic hammers and inverted hammers for the time being. And that candle type is a really useful candle pattern because it gives you an indication that at one point during, in this case, if we're looking at a 1-minute chart, at one point during that 1 minute, we had a big red bar. If it's going to be a hammer, there was a point where we had a big red bar. There was selling, sellers were in control, if you will, and by the end of that 1 minute, the sell orders either dried up or there were more buy orders than sell orders, so price was pushed back up, and you end up with this hammer, just meaning that the body's pretty small and you have a tail or a wick sticking down below the body of the candle. Sometimes the open and close are the same. That's what's called a doji. And but the main thing is that you have this tail that sticks down below. Sometimes the tail lines up at a prior low. You call that a double bottom. But other times, like in this example, we're just kind of, if you look at the chart, okay, yeah, basic uptrend, higher highs, higher lows, and you've got these couple of hammers here that are in context with that trend. So in an uptrend and looking at double bottoms, that could be a start of a trend. Those are two good places to look for hammers. And then if we turn the chart upside down and we talk about an inverted hammer, that basic candlestick is just the hammer upside down, a body that's a little bit lower in the range of that candle, but the tail or the wick is pointing to the upside. And ideally, that tail or wick sticks up above the other candles around it. So you may have a double top, but you also might just have a series of lower highs and lower lows in a downtrend forming with this tail sticking up above, and then the body of the candle kind of in the bottom third of the entire candle formation. So by focusing our efforts on the NYSE open when it comes to day trading as kind of step one, that helps to kind of put a set of bumpers or a frame around, a box around our trade window to help limit our risk so that we're not just having the urge to trade at any odd time. Because with Globex trading 24 hours worth of trading, essentially, we could be trading 5 days a week around the clock. And if you do that, there's just a lot more open-ended risk, and there's a lot of times where the market is not doing anything. And when you have that NYSE open, that's where the most volume is, the most activity is, the most news, and that's just going to be the best opportunities to find good, fast-moving, high momentum trade setups. So if the hammer is the signal or the signal bar, if you will, for a long entry, the idea between the idea of the high of low bar concept for the entry is to be getting long above the high bar. I'm sorry, getting long above the high price of the low bar in the pullback. So what that looks like, if we skip to the next one here, HLB, high of low bar. So essentially what we're doing is buying above the highest price, so one tick above the hammer, and that's one tick above the high price for the H, and the low bar just means it's the lowest bar in the pullback. So if we're in an uptrend and then we get this pullback, where in this case we get a couple bars that make a new low, if you will, the candle makes a low that's lower than the prior candle's low, the hammer ends up being the lowest of those bars. So we've got a big green bar and then 2 red bars and then the hammer. Well, the hammer is the lowest bar in the pullback. So buying 1 tick above the high of the low bar is just another way of saying we're kind of buying when the momentum is now resuming the uptrend. So high of low bar, we use that phrasing, high of low bar, because you could also have a candle type that might be a spinning top or a bearish engulfing or a bullish engulfing pattern. There's all kinds of different candle patterns and shapes, and some can signal bullishness, some can signal bearishness. If you filter out or begin trading by just looking for hammers and inverted hammers, that is kind of step 2 of how can I limit my risk and filter where I'm looking for trades. So if I have this time window of 90 minutes after the NYSE opens, and then step 2, I look for hammers and inverted hammers, and I'm under the assumption that I'm going to be getting long above a hammer and short below an inverted hammer, then that once again helps filter a lot of the noise and movement that I'm seeing, and I can start to keep it simple and make sense of it. So a high price above the low bar is HLB, and then for the flip side, getting short below the low price, 1 tick below an inverted hammer, is going to be the LHB, low of high bar. And so looking for that downtrend to start bouncing and looking for the highest bar in the pullback. And that in this case is going to be the inverted hammer. So I like to set my initial stop outside of the entry candle, and I like to use a 4-point candle as kind of my max candle size. So if you look at prior bars, candles that came before it, if you're seeing a lot of candles that are 3 and 4 points, and then you get a 4-point hammer, okay, this candle is kind of in the realm of the same size of prior candles. But if we're seeing 3 or 4 point candles, and then all of a sudden we get a 6 or 7 point hammer, that's going to be very, very large, and that would mean my stop would be 6 or 7 points away from my entry, and that's getting fairly large. You're taking on extra risk by doing that. So in most cases, with volatility in the upper teens, you're going to see lots of candles in the 2, 3, 4 point range, and that's a really nice window. So if you just kind of set a 4-point max, it's just another way to kind of filter out some of the really large trades that may end up working, but you have to take on more sizable risk to reap those benefits. So initial stops are pretty easy. It's easy to go in your platform, set a bracket order, and whether you have a profit target or not, but just setting a stop and being able to click on the trade ladder, get in the trade, and the stop goes out, and if it gets hit, you're out of the trade. But with a lot of so if that's the easy part, what happens a lot of times is traders end up going to a situation where now the trade starts going in their favor and they don't have a plan to get out. And so you either say, oh, well, I'm up a point, I don't want to turn this into a losing trade, so I'm just going to move my stop to break even, and you get taken out right away. Or it starts to move, you're up a point or two, and you just kind of panic and hit the flatten button. Or you're looking at the chart and, oh, it's starting to slow down, let me get out of the trade, and you just hit sell market or whatever. And without having a clear plan, you're really just going to end up with trades that could have been big winners that you just get out too early. So when it comes to managing the trade, there's a couple things we can do. The first one is a trail stop. And essentially what I like to do with trailing my stop, as kind of diagrammed here, we'll walk through it. And it's called trailing the swing highs or the swing lows. So if I'm long, and this could be done on a daily chart, a 15-minute chart, 1-minute chart, it really doesn't matter. You can use this approach on different markets or time frames. So if I'm long, putting my stop below each swing low in that uptrend is a really good way to stay in the trend for a long time. And this works super well with swing trading daily bars. Intraday, there are lots of trends that can start and last, a half hour, couple hours, and the market's not just going to go in a straight line. It's going to kind of undulate or stair step its way up. And so by getting in on some type of hammer long with my stop below the low, what I like to do is leave my stop below the low, especially if you're trading the ES, giving it some wiggle room around your initial entry is going to allow you to get to those winning trades. If you're moving your stop too early, you're only 2 points in profit, and you've already got your stop at plus a half point to cover commissions, you just end up getting taken out, and it's just kind of death by 1,000 cuts. So if you have the wherewithal to leave your stop alone, even if you're 3-4 points in profit of unrealized gain, what I like to do is wait for the swing high to form. And what that means, in order to create a swing high, you need the market to pull back. So give it 3, 4, 5 candles to make its run up. And if it starts going your way, and if you're long and you put a new high in, you have to let the candles pull back and break that swing high to solidify the swing low. So in order to develop a swing low and have it be an official swing low, you have to kind of take out the swing high before it. So in order to be able to tighten your stop below each swing low on the way up, you're essentially letting the market rally a little bit, and then you have to let it pull back and make another new push higher, and then you can bring your stop up and put it underneath that swing low and just repeat that process. It breaks highs, pulls back a couple candles, 4 or 5 minutes later, we're kind of turning up again, and you just keep bringing your stop up underneath the next swing low. And that way you are staying with the trend as long as we hold the swing low. And if we go back to just the very basics of what makes an uptrend, higher highs and higher lows, well, so then you say, okay, well, if higher high, higher low, higher high, higher low, that's the uptrend. When does the uptrend fail? Well, when you take out the swing low. And so, okay, if the swing low breaking invalidates the trend, well, then that would be a good spot to place my stop and get out. So you're kind of pairing the fundamentals of what makes an uptrend versus a downtrend, and when is the uptrend failing with where you're going to place your stop. So that works super well. You have to have a little more patience to sit tight, and there's going to be times where the market goes a couple of points and reverses, and you end up getting taken out for your for a full stop out. But then there's going to be other trades where it just bounces, pulls back, bounces, pulls back, and you could be in a trade for an hour and you're just methodically raising your stop. So then you say, oh, well, that's nice when the trades run, but not every trade, like I said, is going to run. Some of them just go a couple of points and 3, 4 points and then reverse. So we'll talk about that here in just a second. So the second trail stop approach is to be a little more aggressive and trail each bar. So if we are long above a hammer, let's say, and so in this example, if we go back, you got this like larger red bar here, and then this doji hammer, kind of 2 hammers in a row, and you start to bounce, and then you pull back. And then you get this run of 1, 2, 3, 4, 5, 6 green candles in a row. So what I like to do, if I'm trailing the swing lows on the way up, what I will do is put my stop below the entry candle, let it bounce, let it pull back. And then if we get 4 candles in a row that all are green candles that make a new high, I will come in and start trailing each bar after that 4th one. That way I'm not just letting the profit on the trade be 8 points away from my stop and let that nice winner turn into a loser. So if the market starts to run, and I like to use 4 bars, that way it gives it enough time to kind of signal, yep, that's really 4 minutes on the 1 minute chart. So it's not that much time. It can feel like a long time sometimes, but after that 4th bar, I just come in and start trailing each candle until I get taken out, which would mean like this red candle here breaks the prior candle's low. That's gonna kick me out of the trade. So just trailing my stop by a tick behind each candle is a really good way to do that. And so let's see, I'm going to back up just for a second. And so when you get these situations where the market is running really quickly, and it's just like every candle's making a new high, it feels really comforting to be able to tighten your stop, basically every minute. You're bringing your stop up to the next candle, the next candle, the next candle. And you can take that approach right out of the gate and tighten your stop immediately on the entry candle, and then the next candle, the next candle, the next candle. But what the trade-off then is you're reducing your risk right out of the gate very early, but you're also limiting the potential for a larger profit down the road if you have a little bit of a pullback and you kind of get shaken out. So what you can do, what I like to do, is break my position in half. So trading, at least 2 contracts, but in general, multiples of 2. So if you're trading, let's say 6 contracts, then I would split the position in half and manage 3 of the contracts one way and 3 of the contracts another way. So what you can do is set a smaller profit target of, let's say, 3 points. If your candle is 3 points, like the size of your candle is 3 points, and you have a 3-point first target, that's going to at least give you a 1-to-1 reward to risk, and you're doing that on 1/2 of the position. And then from there, you have, if the market just goes 3.5, 4 points, you've locked in that 3-point profit. So now half those contracts come off, but then you have the second half of the position to stay in and see if the thing goes to be a bigger winner. In this way, you've got your bases covered. If it just goes 4 points and turns around, okay, you've taken a little profit, maybe you take a little loss on the second half of the position, and you walk away with break even or maybe a little bit better. But at least you had the opportunity to catch an arbitrary fixed target, and more importantly, the opportunity to catch that big swing. So that way, it's like when you're stepping up to the plate, you're not trying to change your swing, and if you try to murder the ball and hit it as hard as you can, you usually don't end up swinging very well. If you step up to the tee and you try to murder the golf ball and hit it 350 yards, it just, you end up duffing it. So if you use the same swing, the same trail stop, trade management approach every single time, then you don't have to play this game of, oh, should I trail or should I have a fixed target? And it takes away a lot of that psychological strain. And yes, you're taking off half your contracts for a smaller profit target, but what you'll find is that if you get that little quick win under your belt, now it starts to feel like, okay, well, worst case scenario, I'll walk away with break even. And okay, now I've started to tighten my stop, and it gives you the ability to hang on and be a little more patient and get to that bigger winner. Otherwise, if you're just sitting in a trade with your stop still at that initial level and the trade starts to run, you can have it can be enticing to say, ooh, I'm up 5 points. Maybe I'll just hit flatten here and get out. And maybe I'll just close out the trade for 5 points. Well, what if it goes for 20 points? This way you don't have to think about it, and you're not micromanaging the trade quite as much. You're using the same approach and kind of systematically going through your trading in a more repeatable process. There's always going to be curveballs and funky things that happen, and all of a sudden the market spikes or drops or does this and that. So there's enough excitement, if you will, or challenges that can come up to where you want to keep your trade ladder and your execution and all that stuff as simple as possible. Because sometimes these candles will form, you'll get a hammer and then you have like 5 or 6 seconds and then the candle is already punching through and that momentum is starting to take off. So, you got to be very focused, which is why 90 minutes is a good time window. And then you gotta know exactly where you're clicking on your trade ladder, having your bracket order set up. So you wanna spend the time, in a practice or sim environment, just testing out your trade ladder, getting super comfortable with it. Then you can, now there's the micros. So you can trade a couple micro contracts and get the feel for placing trades. Yeah, there's real money, but you're essentially risking nothing. You're not going to make, you're not going to get rich trading the micros, but the objective of the micros is just to be able to be in a real environment with real money and essentially have hardly any risk. And then you can work your way up to the minis and start with 2 contracts. And then, as you get to even 4 contracts, you can start to see some decent winning trades and, a couple of winning trades and all of a sudden you're in the thousands of dollar range and the money can start to seem a little bit more meaningful, if you will. So when we get a high or low bar, or when we get a hammer, just buying above the hammer and then looking to manage your stop in one of those ways. Like I said, you can just trail each bar out of the gate, and that's going to help reduce your risk on the trade very quickly. Your average winner is going to be a little smaller because you're going to get shaken out of some trades that had you trailed swing lows is going to give you a bigger return, a bigger profit on that one trade. But you're also going to have a smaller dollar loser because you're not taking full stop outs. You're reducing your risk by bringing your stop up underneath each candle. So there's a lot of different ways to get to a positive expectancy. And you could have a 30% win rate, but if your average winner is 5 times your loser, you're going to come out ahead. You could have let's say you could have like a very high winning percentage. You get an 85% winning percentage, but if your average winner is less than your average loser, you could drive yourself into a negative expectancy. So that's where, like, sometimes people like the idea of scalping, and it's like, oh, I'm going to have a 1-point profit target and I'm going to have a 85% win rate. But if those stop outs are now 5 points and your profits are only 1 point, you really have to take into account all 4 variables: your average dollar winner, your average dollar loser, and then your winning percentage and your losing percentage to really get a clear picture. So finding something that resonates with you and kind of jives with how you're going to be able to execute the most effectively is where I would kind of lean towards. So I won't get into too much of the NYSE tick today, but the main concept behind the NYSE tick is just looking to go long in low ticks and short in high ticks. So a lot of times you'll get situations where you have like a double bottom or a double top where the tail of an inverted hammer is kind of aligned with a prior high. And that's a really good place to look for trade entries, is in this case going short. I like to mark the 30-minute high and low. That's these 2 gray lines on the chart here. And so after the first 30 minutes roll by, so the NYSE open is 9:30. So then at 10 o'clock Eastern time, you've got the first 90 minutes or first 30 minutes established. I'll just put a mark at the 30-minute high and the 30-minute low. And those are really good places to look for trade entries. If we're just putzing along inside of that 30-minute range, well, then by definition here, we're range bound. We're not really going anywhere. If it's a really tight range, you definitely want to be extra cautious. If it's like a 30-point range, okay, now we've got a lot of room to trade from the top of the range down to the bottom of the range, fading highs and lows. But if the range is only 6 points, well, by the time a trade sets up, we could be halfway through the range, and you really want to stay out of the middle of the range. But then conversely, if it's a trend day, go find a half dozen trend days in the last couple of weeks and mark the 30-minute range, like just put it on a 30-minute chart and look at the first 30-minute bar. At the end of a trend day, that thing is way down there. And so if you get 30 minutes to roll by and then the market moves higher from there, and we don't even make an attempt to move lower inside of the 30-minute range, now we're 45 minutes in, and here we go, we're above the 30-minute range. That's a really good sign that we're going to go into a trending environment. Or even maybe you break above the 30-minute range and then you come down and retest it. That prior resistance could then be support. And so the 30-minute high and low are really two good areas to look for. If you were to use the first hour's range, a good chunk of the morning is already passed. So that's where 30 minutes is kind of a nice time window. So to kind of tie everything together, when it comes to the entry, we want to be looking for hammers to go long, and we want to be looking at places like double bottoms, a halfway back, the bottom of the 30-minute range, a long above a hammer in an uptrend where the trend is already established, versus something like a double bottom could be the reversal of a downtrend. 21 exponential moving average is kind of a nice moving average to have on an intraday shorter time frame chart. And then pairing the nicey tick going long in low ticks is kind of the idea there, and going short and high ticks. So if a hammer is the long entry, then on the flip side, the inverted hammer would be the short entry. And again, it could be some kind of halfway point, 50% retracement. It could be at a double top. It could be the 21 EMA. You start to make a downtrend and then you bounce up to the 21 EMA. That's a good place to look for a short, for an inverted hammer, and then looking at the high nicey ticks as a place to get short. And then from a stop perspective, beginning with your stop outside of the entry candle. So if you're getting long above a hammer, your stop is below the low by 1 tick. And if you're getting short below an inverted hammer, then your stop is above it by a tick. And then the third component, when it comes to managing a winning trade, trailing swings is going to give you the biggest profits over the course of many trades. By trailing swings, you're going to be in the trade for a longer period of time. You wouldn't want to do this trail stop approach if you're only trading a few days a week. You really need to be trading all the time if you're going to have a trail stop approach that relies on, or that allows you to give up the medium-sized winner to potentially see the very large winner. So if your data set's made up of 600 trades over the year, and 50 of them are 20-point winners, well, if you took out 10 of those, well, that really changes your, or even, 10, if you have 50 winners and you take out 10 of them, that takes out a good chunk of your data set that is there to offset those small losses. So if you're only able to trade, Tuesday, Wednesday, Thursday, or you got kids and it's just kind of a couple days a week you can trade, I wouldn't encourage trailing swings, because you might miss the trade or not be there on a day that it was a bigger home run, and then you end up just bagging the losses and without the winner. So in that case, if you're only going to trade a couple of days, then you want to be looking at, how can I reduce my risk quickly? I'm going to trail each candle, and I'm not going to have as big of an average winner, but that's okay, because I'm trying to be more consistent since I'm going to miss some of those days. So, but if you are trailing swings, waiting for 4 bars in a row to then switch to trailing each candle is a really good way to kind of have the best of both worlds. And then splitting your position in half, and you can add the third component of a smaller fixed target, is a really good way to lock in some profit, give yourself some opportunity to still reach a bigger profit target on the second half of the position, and you can kind of take away some of the psychological strain of having to think, oh, well, how should I manage this trade? Because you end up just thinking about the last couple trades and trying to copy what you did there, and then you're always kind of on the opposite foot. This trade, you use a fixed target on the whole thing, and it ends up being a big runner. So then you say, the next trade, I'm going to just trail my stop only, and it just goes 4 points in reverses. So you just end up kind of getting frustrated and being in a downward spiral. So that's what I've got for you as far as the trade strategy is concerned. I've got a bunch of other free articles and stuff and videos over on the EminiMind, weekly trade recaps, and we got a Discord room and whatnot. But otherwise, finding something or a trade strategy that makes a lot of sense to you and resonates with you is what I would encourage you to, spend time going deeper on and focusing narrowly on one market and one time frame, versus expanding to be too broad and too wide. So, you can pick through some of the articles and videos over there at EminiMind, and if there's a topic that really resonates, spending the time to really master that, as opposed to try and take in all the information that's out there in existence, is going to do you a lot more good. We do have a live trading session, and I do a little bit of one-on-one mentoring, but for the most part, I'm just spend my time trading. And then like I said, what started as a blog, I think in 2009 or 10, has just kind of evolved to be what it is now with the like I said, the Discord and trade recaps and things like that. So thanks everyone for tuning in today. I want to wish you the very best in your trading, and we'll talk to you all soon.
Thank you, Tim. That was incredible. Great information. Ladies and gentlemen, if you are interested in mastering a simple, powerful strategy for day trading the futures that clearly identifies your entries, how to implement sound risk management and trail stop techniques, then Mr. Tim Racette of E-mini has a solution for you. You could find a special offer in the chat box. Tim, thanks again for the information and making such a generous offer to our members. Come back and see us on Traders Corner. Well, ladies and gentlemen, that brings us to our next presenter, who is an extremely gifted trader and software developer who became interested in day trading as a college student. He has over 14 years of experience with programming on the NinjaTrader platform. He is actively day trading futures, focused primarily on NQ. He was able to achieve $30,000 in payouts in a single month with Apex. He enjoys connecting with his clients and bringing their ideas to life. Here to present Define the Plan, Follow the Plan is Mr. Joel Wyse of Affordable Indicators. Great to see you, Joel, and welcome back to Traders Corner.
Anthony, what's up, man? Thanks for having me.
Hey,
Man, that
thanks
was
for being
incredible, Tim. I don't know if you're still here, if you can hear me, but really enjoyed seeing some of your trade setups. And I hope we can talk soon. There we go. Now I am by talk soon, Tim, I mean I hope I can meet you sometime. Let me go ahead and share my screen. I just got permission to do that. Give me a moment. Okay. We should be good now. Do you guys see my screen? Go ahead and hit me in the chat, a few of you. I'm going to pull the chat up to the side as well, so I can see your questions and interact with you guys. I don't see a question section. But anyways, is my screen good? Can you guys see my screen, Anthony?
Yes, you should be able to see the questions now. That was my mistake. There you go.
Cool. Now I see the questions. Thank you. And I got some yeses from Billy, Chris, Peter. Thanks, you guys. All right, I will be watching for questions. I want you guys to ask me anything. I really take a lot of pride in transparency and just being authentic with you guys. And so, yeah, I'm just looking at another question here. Anthony, if you could address that, that would be great. I think it's from the previous event. So let's get rolling. Again, my name is Joel. Haven't been here in a while. It's good to be back with you guys. My presentation today is titled Define the Plan, Follow the Plan. And so I give myself 3 titles here: CEO, developer, software developer, futures trader. All the software that you see today, I personally developed on the NinjaTrader platform. I have a team that works with me now. David came back recently and helps me with technical support. He's also trading the E-mini, so I told him to get in on this last session with Tim. And whereas I'm focused kind of on the NASDAQ, but I'll talk about that as we get into it. My dad also works with me. I'm going to show you guys a few pictures here on this next slide. Picture of my office. This is where I work. This is where I'm presenting from today. It's funny. In fact, today, right now, my dad's here replacing the HVAC system, which went out. So I'll have a brand new heat pump and HVAC system installed here. He's finishing up today. I think he's pumping it down if there's any HVAC nerds / traders in here. So yeah, this is my office condo. Here's my desk. Again, this is exactly pretty much what it looks like today. I got my iPad down there with my calendar and schedule and then charts and things. So I really did like Tim's presentation. I see that he's left, but in the same way that Tim does mountain biking, I want to show you guys I'm into the sauna and the cold plunge. Chris, no, I'm not related to David Wyse. Completely different Wyse. Same last name, no relation. I suppose we're probably related if you go back a bunch of generations somehow. But yeah, we haven't really talked about that. But I know who David is. But yeah, this is my sauna and my cold plunge. Again, just a discipline that I've picked up. Just like Tim talked about mountain biking, I think you guys should pick up some kind of an outdoor hobby just to clear your mind, stay sharp, get the dopamine levels up, because we don't really want to count on placing a trade for our dopamine hit, right? We want to be clear-minded and be sharp when it comes time to trade. So I'm going to keep moving here. I just want to show you guys a few of my credentials just to be fully clear. I haven't traded much this year. I've just had some other challenges. I've been focused on the software side of my business, but here you can see verified my Apex trader funding payouts. I've gotten $30,000 total in payouts, and hopefully we'll be getting back into trading this fall as time allows, get the company organized, get some help with other responsibilities. And that's what we're going to talk about today. I'm going to show you guys today exactly how I plan to trade if and when I get back into trading over the next couple months. So take it with a grain of salt. I haven't actually traded in a while, but when I did have some success. And I truly believe that's what my customers want to see. They know I'm a great software developer, but they also want to know that I'm a great trader. So let's look at a trading plan. And this really is incredible because, like I said, I've been here today. Excuse me 1 second. Man, I just got some sinuses and just wanted to cough and didn't want you guys to have to hear that. I loved hearing the trader chick. I came into the webinar during her presentation and then also Tim, but a lot of my concepts here line up with what they're saying. So that makes me excited and confident. You know, I think you do want to, if you're looking at a trading plan, this is what I have for now is 6 big things to keep you, I guess, zoned in, right? This isn't like a trade setup. This is like the plan. And so as my presentation says, define the plan and follow the plan. I want to help you guys define a plan. And you guys can come up with your own answers to each of these 6 numbers, but let's just take a look real quick. So I think you need to define trading hours, right? Just like what Tim was talking about. He trades, I believe, for just 90 minutes or maybe even less than that, right? And so in here, I've got an example that I don't trade until 5 minutes after the market opens. So I'm letting the market settle out before I'm allowed to trade, and then I'm done trading within 2 hours. I think, you know, David, who works on my team, he's been trading 90 minutes. He says he's doing 9:45 to 11:15. So whatever it is, define your trading hours and stick to it, right? I don't think it's really helpful to trade all day long. In fact, I don't think any of us would want to do that. If I'm successful, I want to trade and be done and enjoy my afternoon doing other things. So moving more quickly through these, I don't want to get too wordy. Think about your maximum trades. Like, what's the most trades you're going to allow yourself to take in a day? I think that's important to prevent over trading and kind of force yourself to be selective about the trades that you're taking. What markets are allowed, right? So you're not just gambling in 4 different markets. I think it's probably best, just like Tim has become an expert in the E-mini, S&P, to become great and proficient at 1 or 2 markets. So select your markets and go for it. And maybe you're here, like Marina said, and you're struggling. Maybe you can pick a new market and just focus on one new market for a month and see how that goes. You know, contracts allowed, big problem for lots of traders. I talked to lots of customers. In fact, I've got over 3,000, I think 200 customers in my website database now that bought one of my products. But a common problem is just trading too big a size, right? So define that in your plan, write it down, put it on your desk so you follow it. And then the last 2 related: language, no cursing, mindset must be positive, right? Guys, I really believe, and someone even pointed this out, that it's biblical, right? It's like, as a man thinks in his mind, so is he. I think that's in Proverbs somewhere. I wish I would have had it actually ready, but I'm sort of off the cuff a little bit. But I truly believe that how you think is what is going to become your reality. So if you're thinking, man, this is impossible, this sucks, I don't think it's possible, the prop firms are ripping me off, like, if that's how you're thinking, that's not good, right? And along those lines, if you're cursing as you're getting into a trade, things aren't going your way, also not going to work for you, right? So that's just something I want to encourage you guys with, is to adopt a positive mindset, align yourself with other traders who are succeeding and who are positive. And I think that's going to be a big part of your trading plan. So hope that's helpful. But like I said, I think the majority of this time I do want to look at the charts. I don't want to just be going through slides. So we're almost there. Let's continue with a few questions. So I want to ask you guys, and so we can all relate and be on the same page, right? Have you ever missed a trade entry because price is moving too quickly to get the order placed? Do you struggle with trade exit decisions, such as following your plan for target and stop loss orders? Would your trading plan results improve with predetermined areas where a market reversal can be expected? I didn't mean to move. I kind of lost my place. I'll move to that slide. I want to move back. I don't want to skip over this question, right? Do you struggle with trade exit decisions following your plan? I think that's a big part of our plan, right? Even Tim talked about it. How are you determining your stop loss? He talked about below or above a bar. I actually have a tool that will do that for you, and I'll show you guys, right? Again, with this question, predetermined areas where a market reversal can be expected. Would this help you out? Yes. And this is what's so cool about today. Like, I feel like every presentation is different, but if I think about the Trader Chick and what Tim had to say, both, and I think Trader Chick specifically talked about support and resistance. Very important to have those predetermined areas defined so you can look to do business with the market when you can expect a reversal. You guys cool with this? One last question. Do your trading tools make day trading easier or more difficult? And I know it sounds crazy, but a lot of people are using tools that make life more difficult. Some of you guys' charts, well, not you guys, but my customers, I look at these charts and I'm like, you have so many things on here. Like, how can you even make sense of this? Right? So I'm going to propose today, and hopefully I'll be rebranding my company soon. It's a little bit of an hint here, but I'm going to propose today that it's time to start trading futures with excellence. No more silly mistakes. Okay? So what do I mean by no more silly mistakes? We have a trading plan, right? We have a time window. We have a maximum number of trades. We're not over trading. We're not trading more contracts than we're allowing ourselves to trade, right? That's what I want for you guys. Excellence. So today I'm going to showcase my most popular NinjaTrader add-ons for trading futures with excellence. So in the chat, I just want to know, is there anyone here that doesn't use NinjaTrader in the chat? Like, you haven't used NinjaTrader. You have not. If you would just put in the chat, that's me. I would love to hear it. I think most of us here are familiar with NinjaTrader, but who knows? To be sure, think or swim. Thanks, Chris. You know, back in the day, Chris, when I used to trade station, cool, Johnny, I've written for both of those. Back in the day when I was more of just a programmer, now I feel like I'm a developer and build tools and, of course, aspirations to trade futures for a living as well. I've written for both of those platforms. I would convert from Thinkorswim to NinjaTrader, Chris, so I'm familiar with ThinkScript. And TradeStation, I feel like that's just the beast. That thing has been around longer than probably any trading platform, Johnny. So Nate, that's what I hope to show you. To be completely transparent, we're going to get into that right now. Actually, I'll read your question. So here's the main topics for today: fully automated support and resistance. I'm going to show you guys a tool that I have for that. Second, trade setups with risk management practices. And third, chart trading features for all trading. So just looking at the time, we're going to wrap this up by 3. We're going to have the next presenter come on, and we're going to get into the charts right now. Now, it's perfect because Nate just asked a question that I want to address. He says, what is the profitable indicators that you currently have on your website for NT? Thanks for asking that, Nate. And I'm going to show you guys my website at the end of the presentation, but I'm also going to right now put a link in the chat so you guys can go to my website right now, and I'll give you my offer at the end. But Nate, this is going to be a link to the offer for today. And give me one moment here. So yeah, Nate, great question. So looking back at the slides, as far as trade setups, this is what we're going to look at on the charts. I'm going to get to the charts after this slide. Discretionary trading with semi-automated entries. What do I mean by discretionary trading? I don't currently recommend or believe in automated trading. Let me ask you this. How many of you guys have bought an automated trading system, back tested it, worked with it, and in the end, you were left feeling disappointed, ripped off, scammed, whatever the language is, okay? Why? Because automated trading systems work for a while, but the market's always changing, right? So I do, and my dad pushes me with this, I do want to get back into back testing, automated trading, you know, taking a setup like what Tim gave us and like checking every single reversal bar to see if it's profitable. But today, thank you, Ricky, no experience with auto trading. I would be careful, my man, because a lot of systems, I mean, yeah, I need to keep moving, but again, like, why would I sell an automated system for 2,000 if it works that great? I would just trade it. I would just put it on my accounts, my prop firms, and trade it myself, right? So anyways, we're going to be talking about discretionary trading tools today. Obviously, I'm selling you guys tools as well, like things that I've coded for the NinjaTrader platform, but nothing is fully automated, okay? We're also going to develop some trade setups together. We're going to look at my charts and think about some trade setups. And then lastly, I'm going to show you specific chart types and indicators. So there's no secrets here. I just want to give you guys hopefully some indicators and value, some things that I think will be helpful as a manual discretionary trader. All right, so let's get into the charts. I'm going to close this out. All right, these are my charts, and much like Tim, I'm also using primarily a 1 minute chart. Also look at 5 minute charts and sometimes as well, but for the purposes of today, with one screen, I'm just going to be showing you guys a 1 minute chart. Can you see my charts? Chris, as far as learning NinjaTrader, there's a few things on my website that's going to help with that under the About menu. You can take a look at that. And then again, Ricky, thanks for saying that. I'm watching everything you guys put in the chat here. Any questions, you can let me know. All right. So to get started here, we're going to take a look at the NASDAQ. And as I said, I'm going to give you guys specific chart types and indicators. A chart type, in this case, is 1 minute. I've used range, I've used Renko, I've used all sorts of different chart types, but today, and I think what I've found to be most effective, and certainly Tim seems like he knows what he's talking about as well. He's on 1 minute. I think Marina does tick charts, but whatever it is, we're gonna look at 1 minute. Johnny, I do not develop custom indicators anymore. Usually the answer is no. Occasionally the answer is yes. It just depends, but I just don't have time typically. All right. So let's go over the indicators that I have in this chart window. Okay. So we'll just go back to when the market opened here at 9:30. We'll start with the EMAs, right? So I believe in exponential moving averages. That's kind of what I'm focused on. All right, so here you can see right here, this gray one is the 8 EMA. That's an extremely fast EMA. Rarely am I placing trades off of that, but it is on there as an option, okay? This red area is a 20 and a 50 EMA. If you guys are taking notes, 8, 20, 50 EMA. The red area here is space between the 20 and the 50, okay? And we'll talk about some trade setups. I just want to go through the indicators first, right? Because you guys could literally build a chart just like this. All right. Up here, the white line is a 200 EMA, okay? And then continuing on, see this line switching between red and green? That's the order flow VWAP. So I'm using the VWAP that comes with NinjaTrader. You guys can also find a free VWAP. I believe just search Google if you don't have the order flow plus. But all right, so let's repeat this: 8, 20, 50, 200 EMAs. What about the other shaded red area? That's a 5 minute 20 EMA. So I've written this indicator to make it super easy to put the 5 minute 20 EMA on your chart. You can see every 5 minutes this jumps, right? So at 10 o'clock it jumped, then it moves around slightly. 10:05 it jumps. Why is that? Because when a 5 minute bar closes, that close is then being added into the calculation of the 5 minute EMAs, right? So again, 20 and 50 5 minute EMAs. I'm glad my voice is good enough to get through this today. I have not been in such good shape, but I'm feeling good. So that's the EMAs. We talked about the VWAP. What else are we seeing here? And again, Marina and Tim discussed some of these concepts. I want to show you, right? So I have my key levels confluence indicator, which is what you're seeing on here, that's drawing these grayed out zones. But we're primarily focused on yesterday's levels. And this is a indicator that I'm offering you guys today called my key levels confluence indicator. It's gonna combine highs, lows, opens, closes, Fibonacci, what else? Oh, pivots, whole numbers. And when these things overlap, you get a zone. So as an example down here, this timer is also on a part of my chart trader automatically. So we're counting down each 1 minute bar. But down here, you can see the low from 5 days ago, the high from 19 days ago, along with the whole number combined to make a zone. It didn't quite come down to the zone. Now listen, guys, I'm not here to cherry pick, perfect entries and exits in this webinar, right? I don't have screenshots of charts. This is today's price action. We can look at this. It blasted right through yesterday's low. So maybe we would have gotten long down here and taken a loser off of yesterday's low, right? I'm not trying to cherry pick anything. Okay, let me just be clear about that. Support resistance is hard. This is not easy. All right. So, but as we look through this chart and we start to look at moving averages, I believe moving averages are also basically, they act as areas of support and resistance, right? So I'm using these EMAs to determine the trend, right? But also to determine areas where I might want to do business, right? And truthfully, I would have probably taken a loss right here, okay? I was not trading today. I told you guys, I'm kind of focused on the software company. I want to maximize the potential of the tools that I built. I also have a trade copier that I'll show you guys later. So if you trade with prop firms, you know you have a need for a trade copier, right? So, that being said, I probably would have went short right here. Why? Because I love this, right? I've got a high right here, okay? I've got yesterday's low. I've got the 20 in the area between the 20 and the 50 backing me up, right? So if I went short here, it doesn't really matter how you look at this. It was probably a losing trade. Now, I could have been up in the trade, but I'm not going to sit here and say I would have taken 10 points on this. Maybe I'm short and put my stop up here and took a small loss. But the idea is, as we develop trade setups together in this webinar, we're going to consider some ideas of when are we allowed to go long and short, and what is the trade setup? How does the trade setup develop? Is that cool? John, did you write an indicator for the 5-minute EMA on a minute chart? Yes, I did, John. That indicator makes it easier for you to put multi-time frame EMAs or SMAs on a single chart, right? So you're not having to add secondary data series. It's all doing it within the indicator code. John, that's, to cut to the chase, man, that's $115 today. And thanks for saying that, man. I think it has a lot of value. So I appreciate you chiming in on that. John, do I know you? I see your last name. Oh, I think you might be an existing customer. But anyways, so let's take a look. So as we continue on the morning, I mean, this shoots up here is very difficult. Didn't stop at the 50. It found resistance here at the, okay, John, you texted me about wealth charts then? Or is that you? So this shoots up to the 50, 20 EMA. We also have the VWAP here, right? So another trade that I would be looking at, and you can see a pattern in the way I'm thinking. Hopefully you guys can start to see a pattern in the way I'm thinking. I was looking to go short here. Why? Because I have at least two things in my favor. I've got yesterday's low. Thanks, John. Yesterday's low. Can't copy this. There we go. I've got yesterday's low and the 20 EMA, right? Up here, what do I have? I've got a VWAP combined with 5-minute 20 EMA. So with two things here, right, backing me up, I may look to place a sell limit up here to get short, right? And this did produce a nice 20 points for us on the short. All right, so you can see as we come up here, we've got yesterday's close coming into play. Yesterday's close makes a hard rejection. Yeah, the market spiked through, but what did we hear about from Tim, right? We heard about these, what was he calling them, reversal bars or hammers? We sort of get a wide wick up here, indicating that it could possibly reverse. Up bar here fails, huge engulfing down bar. So I love Tim, man. That was so good for me. I love hearing that. And getting a refresher on candlesticks, because candlesticks are so powerful. So anyways, as we come back down here, this may have been a losing trade for me, truthfully, because this is a trade setup I love. What do we have here, guys? The first time our 20 and our 50 crossed over, the first time we pulled back to the 20. Gosh, is this not trading or what? You get into this trade right here and you're like, oh man, this is beautiful. Let's go. This thing's moving off the VWAP and off the 20 EMA. But what happens after that, right? Whoops. Okay, it went down and then just busted through everything. So we have to have, John, this is very much discretionary manual trading. To be honest, I'm not sure if I'll have a black and white trade setup that I'll even offer in this webinar. This is mainly just, we're trying to define the rules. Now, why might you not take this trade, John? If you think about that, what do we have? What trend do we have on the 5-minute chart? A bearish trend, right? So we might have rules that say we're only allowed to take trades with the direction of the 5-minute EMAs, potentially, right? Yeah, that's right, John. And if I get into the chart trader at the end, I'm going to show some specific ways to do trade setups with the chart trader. But I just want to discuss trading today. I'm not even talking about my chart trader much. You guys, again, everything I'm showing you guys will be summarized on my website for you guys to make easy decisions about what you think has value for you, with a 40% off coupon at the end here. So again, if we're watching this, here we did get a winning trade setup. If we're taking the first time the cross occurs, so you get the crossover right here, if you guys see that, then the market pulls back into the blue. This was a very nice trade, very slow, and it's 11:24. So I'm coming up on the end of my own particular rules about when I'm allowed to trade. But this here long, in between the 20 and the 50, could have paid you up to the previous high, which is what I like to do with these trades. If I'm getting in this trade, I'm trying to ride it out to the previous pivot. Okay, this trade over here, the short, as it pulled back into the red, this is a big stop. I don't know if I would have survived this stop, but then you did get a move down into this zone before it moved back up. Let's discuss stops. This is the concept I have for you guys today on stops. I use the ATR. Okay, so how do you, thanks, John. I just love seeing you here, man. You're always supporting me. That means a lot to see some of my customers, and you've also been, recommended my products and things. So appreciate you being here, man. All right, man, I'm ADD, if you guys can't tell. So looking at a stop size, this is the ATR. What is this doing? Okay, so the ATR at the time of this entry is 16. That means that you can expect a 1-minute bar on average to move 16 points, okay? So I'm using that. A lot of times what I do is I use that to determine my stop loss size, because you really want to think about varying your stops as the market varies, right? So just as an example, I might take 16 and multiply it by 2. So my stop would be 32 points. And then if possible, my target in this case would also be 32 points. So let's say I get short here, okay, at the 50. Short 90, my stop in that case is going to be right up here at 22. That's a big stop though. Most of the times what I do is like 1.5. I'm doing 2 for simplicity, but if I take 16 multiplied by 1.5, that's a 24-point stop. And you guys can see the ATR is varying. Why is the ATR dropping as you go into lunchtime, right? Because the volatility drops as we move into lunchtime. Why does the ATR begin to rise in the afternoon? Because in the afternoon, trading picks up again. See the ATR right here at 220, when I started my presentation, is starting to rise. We're getting more movement and price action. Okay, so these are a few of the indicators I use. John already mentioned it. The indicator that's drawing the shade between these moving averages, this ATR indicator, this is actually showing you a prediction of the future of the ATR and when it has spiked yesterday, or you can select 1 week ago as well. So that's something I'm still working on. It's available for purchase as well, but the ATR with a future prediction, you guys see this, how it's like drawing into the future to predict kind of what the ATR does normally, so you can kind of see in advance when a move might be expected. All right, so I don't know if I'm getting too advanced here, but I mean, that kind of covers like my chart. You know, I wanted to see if we could together come up with more trade setups, but I don't know if we have time for that. But generally, the idea is you're wanting to have multiple things in your favor when you're taking a trade, right? But just the simplicity of this trade setup, where after a crossover, you're taking the next pullback into the moving average. So the blue, you're buying in the blue. Works pretty good, right? Do you guys agree? Same thing right here. Again, we're not trading, you know, we're not trading over lunch. It's fine. Same thing right here. Cross down, sell the red, small little winner. This is terrible price action right at the noon hour, but still. So I'm showing you guys this because I'm emphasizing what is a trade step. Well, trade step would be after the moving averages cross, the first time it pulls back, buy it. And then of course we could code this too, but why don't I code this? Because I think anything totally black and white over time doesn't totally work, right? Some of this just takes your own eyes and your own intelligence to see the chart based on experience. Maybe let runners run when you see the market starting to move, right? An automated system is going to always take generally the same profit target too, right? So trying to help you guys see the charts and believe that you can see the charts and make good trading decisions. Look at this. What do we have here in this area? We have a lot of, and guys, this is easy to point out after the fact. Like, I'm calling myself out, right? Hard in the moment, easy after the fact. But I hope you'll take these indicators and go work with them, study them, and see if you can come up with something of value, right? VWAP, 200 EMA, remember? This white one is the 200. You've got your 5-minute EMAs kind of about to cross up. It's kind of cool to see, right? They're approaching a crossover. Of course, they cross over here. They actually officially cross, but the market's finding support here. And really, it all of a sudden took off after finding that support. These are all really tough trades. Buys in here, and really takes a lot of patience, you know, just to get 10 points on the NASDAQ. But then it finally exploded. You know, maybe I need to consider like breakout trades, right? If I was trading the way some of these guys have been saying in these presentations today, this is a really nice breakout. After the fact, easy to see, right? Pull back to the 20 again. Right now, the 20 EMA again is finding support along with this here previous low. All right, so I'm gonna conclude this part of the presentation looking at like indicators and setups. I just want to spend some time talking about my chart trader and my trade copier. Cool. So we're gonna be on the charts though for the rest of this presentation. I'm not gonna spend much time just in a PowerPoint, but just to show you guys a few points. The enhanced chart trader is what it is. I call it the enhanced chart trader. What it is a suite of execution tools for both entries and exits, and it allows you to build the perfect chart trader configuration based on your trading plan and your needs. All right, so not everyone in here is a beginner. Some of you are going to see this, you're going to be like, I need these tools because I will use these right away, even though Joel didn't even talk about it, right? Ready, aim, fire. So look at this. We talked about trading moving averages. One thing you can do right away, you can attach orders to plots. So watch this. If I hit buy click, I've got my 30, 30, 30 stop, 30 target. And I can right away click on the 50 EMA. And when I click, immediately this order is attached to the 50 EMA. Now I'm sitting back in my chair, watching the market play out, and this order is going to move up and trail every time the 50 EMA moves. You guys cool with that? One little feature built into the enhanced chart trader, okay? Break even button. We're going to be able to show without and with commissions right here easily, okay? Standard market and more customizable limit order placement buttons, all right? Can't possibly cover everything, but let's just go through real quickly. This is the basic tools. Again, on the left is Ninja Trader. I guess I never addressed why I have that up on the left side. There's really no reason to, other than like having this chart wider just doesn't really benefit us much. But it just here so you can compare the standard chart trader to my chart trader on the right, okay? I think just something as simple as like the green and the red just helps your eyes see where am I buying and where am I selling, right? Let's get a little bit more advanced and look at the essential tools. Watch the panel. As I click to this next one, we're going to see that position sizing is added. So now I can plan my trades out. As I hover, these buttons are quickly changing my ATM from 10, 15, 20 points, 25 points. I can adjust these. So I can begin to adjust my stop loss before I get into the trade. Right now I've got size on, so I'm doing position sizing. There's no way we can possibly cover what is position sizing, but I have a whole video on it. So if that interests you, you can go to my website and watch that video. All right. So this is the essential tools. We've also got advanced exit orders. This is going to be where you can build and customize any trailing stop. You can also use the concept that I've been talking about today on the ATR. So automatically setting up your exits to be calculated based on the ATR. And start putting your questions in if you have any, because we are coming up on 8 minutes left in the presentation. So Renko and range. If you guys trade Renko and range bars, Renko bars, you know that there's always a point where it's going to reverse. So if I want to go long, just hit this, and my order is already placed and ready to go when this long bar closes. So I think even possibly looking at Renko bars with the trade setups, I, of course, didn't have an ATM selected. So there is a prevention in here that will prevent you from doing that, because who doesn't want to have an ATM selected, right? We always want to have a target and stop plan, okay? But yeah, that's Renko bars. So I'll close that. Same idea with range bars, right? Have your order placed in advance before the bar closes. You always know where it's going to close. Pretty cool. Close bar entry orders, ability to enter on a bar close. Signal, ability to enter on a bar close with a signal. Not even going to talk about this, but you can reach out if you have questions. But these are some stochastic signals that I personally don't use. And then bracket. All right. Place a bracket immediately, one click. So this is good for news events. You can also place it as the bar closes or immediately. So that's my enhanced chart trader in a quick 5-minute display. Trade copier right here. So this is my trade copier. I do not have any Apex accounts right now. just one evaluation to just to use the data. But I have a trade copier. I'm not even gonna show you how to use it because we don't have time. But literally we could just, I say that and then I'm gonna show you. The master accounts up here in the brown, you're selecting follower accounts here. You can delete accounts, select follower accounts. You can see I've got 12 accounts selected. You can size, micro, mini. You can even select like a different ATM for each of the accounts, which is very unique. You've got risk management options, daily loss, daily goal over here. As you saw with Apex, you can see how far you are from being funded or failing the account from closed. So pretty good stuff in here. If you guys need a trade copier or you have issues with an existing trade copier, which is a pretty common thing my customers are telling me, I would love for you to look at my trade copier. And I didn't even think about this, but some of you in here might be even new to trading futures. So I hope it hasn't been too much here. But yeah, these are futures. This is the NASDAQ, the S&P. We're talking about prop firms here, and just a great way to trade. So you can reach out to my team if you want help with that stuff. And we've got David and my dad and myself to answer questions. And yeah, like John said, the trade copier is going to close you out automatically when you reach your goal. Check this box, and it's going to close you out when you're at funded status on the evaluation account. So I want to wrap this up. I'm going to give you guys my offer right now. Okay. So the link is in the chat. You're going to want to go to that page right now on my website. This is what I have. I'm giving you guys 40% off everything. So some of you may want to go all in on the chart setup that you saw. And so with this package, you can get every single indicator and more that you saw to build your chart exactly the way mine was set up. I call it the support and resistance suite. So you're getting the key levels indicator, price action indicator, which I'll show you in a moment. Actually, I didn't show you that. A couple other indicators, that trend indicator that shades the area between the moving averages, and then the ATR indicator, all for $8.95. Okay, that's what I call the support and resistance suite. Let's look at that indicator real quick. Right here, this is another support and resistance indicator that I developed that some of my customers love. Gosh, it caught the low right here. That's beautiful, man. But if you hover over, you see it's combining 60-minute, 5-minute, 240-minute, daily, and weekly. So this level, any level that's yellow in this chart means that it has a weekly zone, a zone in it with a weekly high or low. Red means it has a daily high or low, and then it's confirmed. So let's look at this one, for example. This is a daily high or low confirmed 2 times on a 240-minute chart, confirmed 3 times on a 60-minute chart, confirmed 7 times on a 5-minute chart. And the last time it was hit was Wednesday morning, this morning at 6 o'clock. How cool is that? So anyways, let me get back to the slides here. I don't have much time to go over that, but that is my price action confluence indicator. So you're getting the key levels indicator and the price action confluence indicator. And as a bonus for today, the MA's trend indicator and the HR indicator, all for $8.95, okay? Quickly jumping through some more slides. My trade copier right here, available at $175 at a 40% discount, or with the risk management features and the trade copier for $295. Basic chart trader tools, if you want to be able to, just like I did in this presentation, attach your order to an indicator plot, $115. Basic chart trader tools. The essential tools, which includes that position sizing and a few other things. And then lastly, one thing I want to give you guys is the professional chart trader tools, or one thing I want you to consider, because with this, I'm going to include every feature in my enhanced chart trader and the support and resistance indicators. So you'll be able to set your chart up exactly like my chart. And you'll have every single enhanced chart trader feature that I built at one bundled price, $23.95. So I know I need to wrap up. A couple more things: customer reviews, the top of my website, and here is your offer. It's going to be on the page in the chat. Let's take a look at the website real quick. It's all right here, you guys. Super easy to take a look. The discount code, all right, all the links. I'm going to leave these offers and this coupon code valid through the end of Thursday, October 17th. But guys, each of these links, more information, has more videos to watch so you can learn more about each product. Your support and resistance suite is right here. If you want to go all in, professional chart trader tools is right here. You'll buy that, and then I will add the extra products to your order. So yeah, I just want to say thanks for your attention. I hope everyone is having a great fall. This is some of the best trading weeks of the year for the next 6 weeks or so until Christmas. But such an honor to be here. Some of my customers, John, thanks for being here. And I hope to hear from you guys. Last thing, I promise. Bottom right corner of my website. This is going to be the best way to communicate with my team. Hit chat with us, all right? And then hit chat with our team, and we're going to be available to help you. Thanks, Anthony. Thanks, Traders Corner. What an incredible day. And I know we've got a couple more great presentations coming up.
Joel Wyse, you did it again. Thanks for being here, Joel. Ladies and gentlemen, that was Mr. Joel Wyse of Affordable Indicators, a man with a plan. Thanks for making such an incredible offer for our audience today. Amazing how powerful your tools are and indicators are. Ladies and gentlemen, I have to mention the online reviews that Joel Wyse at Affordable Indicators has are absolutely incredible. If you want a tremendous discount on some of the most powerful Ninja Trader tools, Mr. Joel Wyse of Affordable Indicators has them available. His members are loving his products. We have put his link in the chat box. Joel, it is always a pleasure to have you on Traders Corner. Thanks again.
Hey, I like that. The man with the plan.
You're the man with the plan.
I hope that's true.
That's up to you to make it true, to continue to make that true.
You're right, man. You're right. Well, hey,
yeah.
I'm sticking around for Jim Simmons. Thanks a lot, Anthony.
You're welcome, dude.
All right.
Well, ladies and gentlemen, that brings us to our last two presentations of the day. Up next is a seasoned trading professional with over 14 years of experience in trading the markets. Over the years, he has tenaciously studied charts, strategy, and trade plan development. And since his own enrollment into Neurostreet's coaching and training, he has found his way to consistent profitable trading for several years now after facing a grueling 10 years of break-even anguish. He is a highly sought-after guest speaker for virtual events worldwide, tasked with educating and sharing his insights on how other traders can pull themselves out of the mire and into consistent profitability with discipline, proper money management, and a greater focus on the big picture. Here to present Get Funded and Stay Funded as a prop firm trader in 28 days or less is Mr. Jim Simmons of Neurostreet Trading Academy. Welcome back to Traders Corner, Jim.
Hey, good to be here as always. Thanks for having me. How you guys doing out there? Hopefully everybody's having a great day. And can you guys hear me okay? See the screen just before we get too deep into it? You guys can hear me okay? Good, good, I assume. If you can't hear me, I guess you'll tell me eventually. All right, so what we're going to be covering today is the Striker trading system. What this is something that we actually just launched to our community yesterday. So now, just to give you some insight, ARC AI is a development organization as a part of our companies. It's one of our brands under the Neurostreet company. Mainly, we develop indicators, algos, things like that. In this session, we're going to be looking at a trading system that is done discretionally, but we're going to take all of the hard work and all the guesswork out of this, make it as easy as possible. So how many of you need a winning trade strategy? If that's you, then you're in the right place, and I have something very, very exciting for you. So stick around and we're going to dive into this. Of course, before we get too deep into the content, we do need to post a disclaimer. I can't guarantee results. Not something I can do, and can't guarantee performance, and we're here for educational purposes. Okay. Great. So who is this for? This is for traders looking for better and consistent performance. Anyone who's in need of winning strategies, anyone who's sick of getting stopped out, beginners who don't have any track record or experience, or struggling traders that want a better use of time and capital. Maybe you want more time freedom. Maybe you're hungry to get to the next level. If that is you, then we got you covered. If you are someone who has your guard up, or you think you know everything, or you're small-minded, negative, maybe unwilling to learn, maybe looking to get rich quick, making excuses, blaming somebody else, no time, no capital, not willing to let go of the past, or expecting a handout, this is not for you. And I would kindly ask that you tune me out for the next 45 minutes, because you're going to get nothing out of this. Okay, so I assume that most of us are not on this list. So we just put this out there just to keep it cut and dry and let you know what we're after here. So we start off with the vision. Why did we get into trading? Odds are you got into trading because you want to make more money in less time. Now, I've never had anybody correct me on that one, so I think we're probably okay there. But the question is, what would your life look like if you could make 1,000 to 5,000 a day regularly, and you trade for 1 to 3 hours? That is the reason that we got into this industry, right? What we're going to look at today is how to use institutional levels for futures trading. Now, I hate using this term. I hate it. The reason is because everybody says that, and most of it is nonsense, to be honest. But in this case, I know it's going to sound crazy, but it is real. And so we're going to actually go over that. And we're going to look at how institutions, maybe not necessarily just banks, but institutions hedge on the futures market, and where they're hedging on the futures market, and how to identify that. Because if you know where the market is likely to respond and provide volatility, then odds are that's what you want to trade, right? Because that's where the market's going to move. And we need movement to make money. But more importantly, we want the market to move in the direction which we thought it was going to move. Okay, so we're going to look at how to do that. So in the next 60 minutes, well, 45 in this example, we're going to look at some revolutionary trading methods that have changed how we look at the market. You're never going to have to second guess your trades again, and you're going to be able to day trade like clockwork with little to no drawdowns, day in and day out. We'll show you the power and the why behind this system. We'll demonstrate the power in the trades. I've got numerous examples to show you. We're going to show you how to exploit fundamental catalysts that move the market, and the exact step-by-step framework. Okay, so that's what we're looking at today. Now we look at these, tycoons of trading. What do they all have in common? Well, first of all, they're wealthy beyond measure, but they all understand the fundamentals of the market. What causes the market to move? And it's not just orders and volume and all of that day trading stuff that we just get so hung up in, an order flow and all of that. And that is on a micro level, but we're looking at a macro level. If you're one of these traders, odds are you're moving considerable amounts of money. And so as such, you need something that you can understand where you can do business. So when we look at traders like Ray Dalio as a prime example, now, these are traders that understand that the fundamentals are what is moving the market. It's what's driving market sentiment and directional sentiment. And when we look at the different asset classes, maybe you're here, you trade stocks, options, maybe you trade Forex, crypto, maybe you trade futures. I don't know what your trading background is, but when we look at the different asset classes, we look at what drives each market. In stocks, the news is a fundamental catalyst. You got earnings releases, mergers, acquisitions, new regulations, whatever the case might be. And so what the stocks traders are doing is they're using scanners to identify which markets are going to be the strongest markets to trade each day. right? Which ones are moving up the most for the day? And obviously you want to trade those. In Forex, the major market movers are going to be interest rate decisions, which are decided by the central banks internationally. You've got other factors like major releases like GDP, CPI, PPI. Those cause major moves too. And then you have other international news events, things of war or supply or demand just changed, whatever the case might be. Crypto is digital. It operates in its own ecosystem. It's built purely on sentiment in the market. And then futures is actually built on hedging by institutions, large companies, and so on. And that's what we're going to look at today. Those of you that understand options, you're going to recognize some of the things that we're talking about today. Those of you that are trading futures and maybe haven't dabbled into options, we're going to show you how you can use options level data as a fundamental catalyst that moves the futures markets and moves the markets significantly, okay? So that's what we're looking at here. So we can identify at any given moment in the market where the open interest is in terms of options trading puts and calls, and we can use that to our advantage, and we're going to show you some examples of that here. So here's an example of a level. This is on, looks like the NASDAQ futures, 20,075, and we can see that the market comes into this area and the market rejects massively out of that area. It is by no surprise because we can see if we look at this chart here, there's a massive level, the largest of the day right there. Here's another example of an options level that we can plot out on the futures market. So when we're looking at this from a day trading perspective, these are not small reactions. These are very, very significant reactions. As an example here at 2640, this is going to be on gold futures, huge reaction, and actually punched out the highs off of that level as well. So the opportunity is there to get some really, really big trades. You can also trade a little bit beyond those levels. Sometimes it's not a cut and dry to the tick and move. And so we use entry patterns that help us get into the market once the market has confirmed that it is respecting those levels, and ultimately that the market is going to react off of that level. Okay, so we can teach you that as well. Here's another example of another entry pattern. This was using a 5-minute chart for entry coming out of the level as well. So if you are, odds are, if you're struggling with anything in futures, odds are it's on this list. These are the top struggles that day traders face. Money, maybe you don't have enough to trade. Maybe you can't pass evaluations or stay funded. Trading strategies, maybe you don't know what to trade. Maybe you're strategy hopping because something works for a couple weeks and then it doesn't. And so you keep jumping around to try and find something else. Maybe you're an emotional train wreck. You trade based on fear. You trade, and you self-sabotage yourself constantly. Maybe you don't believe in yourself or believe in your system, or maybe you are struggling to enter the market correctly, or you just can't develop the discipline that you need to do things the same way. How many of you can relate with these things? If we look at all of these, typically, a lot of these can trace back to one thing. Anybody have an idea what that might be? If we look at tracing this back, a lot of this stems from trade strategies. I'll just go ahead and change colors. Actually, it'd be easier to see. Trade strategies. The reason you don't believe in yourself or in your system is because you don't have a strategy that works for you. The reason you strategy hop is because you don't have a strategy that works for you. The reason that you're emotional is because you're fear-based trading because you don't have a strategy that you believe in. The reason you struggle to develop discipline and do things the same way every day, regardless of what the market presents, and just simply follow your plan, is because you don't believe in your trade system. Money is a different thing, but if you can't pass evaluations and stay funded, it's because you lack discipline, and that is because you don't have a solid trade strategy that you believe in. So we can pivot this all back to the trade strategy. So how do we get to the point where we believe in the trade strategy? Well, the first thing is you have to have something that you can see, and that way you can believe it. Okay, so if you are struggling with any of those things, we get it. We completely understand. We've been there, done that. we've been right there before. We've blown accounts, we've failed evaluations, we've lost funded accounts, spent tons of money on systems that don't work. We've spent good money on education, and we've also faced the turmoil and aftermath of financial troubles, following the accounts. We know what it's like. The fact is, it's not entirely your fault. Okay, these are symptoms. This is what most traders are facing. You are not alone in this. There are many traders dealing with this. But the problem is that you've really only ever been exposed to retail trading methods. And you haven't yet completely learned what is really driving the markets, and that is the fundamentals. And we're going to look at how to identify that. So when we look at the Striker trading system, this is an opportunity to uncover the hidden fundamentals for futures trading. If you knew that within a 99.7% accuracy that the market would stay in a certain range for the day, would that be helpful to your trading? Right? That would be immensely helpful. And we have that data, and it's been proven. We can know that when the market comes into a level and respects the level, that the market is going to give us significant follow through off of that level, offering us the opportunity to manage risk and scale profit. We can look at options data for institutional hedging with futures. This is not something that is just like, oh, this is kind of an indicator or a shiny tool that we came up with. This is the exact data that major institutions are using to hedge their positions. We're going to talk about what hedging is as well. This is going to show exactly where the banks are trading and why. And it's not just a cute thing that we're saying. It's a simple and efficient system, huge trades, huge possibilities and probabilities. And I believe it's the future for a lot of traders. This is one of those things that when I learned this was one of those moments in trading where I was like, man, this is one of those things. It's one of those core principles that I learned that I knew was going to stick with me for many, many years and was going to impact my trading for many years to come. And I think it'll do the same for you. Actually, I'm pretty sure it will. So pretty remarkable. But here's an example of a trade I took. This was on NQ, and the level here you can't see with yellow. Let me change this to black. So 20,400 is the level, right? Now, obviously, there's a massive level here, 20,500, which is above where price is. So we're not there yet, okay? But we have this significant level at 20,400. So what do? We plot it on the chart. We use an entry pattern to get into the market. I entered the market here on that candle based on an entry pattern. This is a really quick entry pattern. It's what I like the most, to be honest. And scaled profit to where? The next considerable level. Now we have little levels in here that we could look at scaling out and things like that. But to me, it just made more sense to go with this level. So that was my target and got a nice profit off of that. Didn't have to take much heat. The stop goes below the low. Down here, I mean, this is like, I don't know, just glancing at it, that's like 3 to 1 at least, risk reward. Pretty nice trade. And here it is again. We got a level here at 76. This is the level. Now, obviously 75 was the major level, but that got broken. That's down here. It's no longer resistance, it's now support. The resistance is up here. So we enter the market. This one I got in a little faster based on an entry pattern. Stop goes above the high of the market. Got in right here and took target at 75.53. 75.50 was right about there. So I just decided to just go ahead and take that one based on these lows in here that kind of responded. Okay, so another great trade. And you start to see how powerful these things are. There's 75, there's the level itself. The market overshot and then it went up to 75.50, which 76.50, sorry, it's kind of hard to see, it's really small. So that's actually not, it's actually not the level. That's okay. It is a level nonetheless, and this trader got into the market here and was able to scale out a little bit and ultimately took a trailing stop and got out of the market on that one. So again, really great trade opportunity. What we're going to look at today is really a lot of trades. We're not going to go too much into community posts and some of that because it's just going to take more time than what we have available for us today. But we will look at some other trades coming off of, again, this level here, waiting for the right moment to get into the market based on entry patterns. That entry pattern presented here, the trader got into the market, scaled profit here, and ultimately took a trail stop there. Here's another one. Again, here's the level, waiting for the right opportunity to enter the market, got back on a comeback, and ultimately took a trail stop on that with some good profit. I believe, just looking at a lot of trades can be helpful because just seeing it that's where the power is. I could talk about it all day, but I'm sure you'd probably just rather see the trades. So here's a level at 20,000 even on NQ. In this case, they used a exponential moving average cross and then took the trade here. I know it's hard to see the fills, that's why I'm drawing on the chart. And exit here for profit, and then ultimately took a stop on the remainder on a trail stop. Another one, again, these are pretty small, pretty tough to see, but entered here, exit there, exit break even. Re-entered here, exit here. So I mean, just scaling profit after profit after profit. There are not very many stops on this system. Obviously, you're going to take stops with anything, and that's just trading. Welcome to it, but a lot of really great trades. Here we go, another level, and they took trade here based on those levels, and you see it over and over. Here we go again. Levels right here at 20,000 even. There's the entry signal, and then there's the target, and ultimately this trader was able to trail the stop all the way up and has the ultimate target up here around that 20,150 and below. Okay. So these are all levels that we pulled off of this options level data, and ultimately that's what we're trading. We're trading based on the fundamentals that the major institutions are using to hedge their positions. We took it a step further though, because looking at these kind of things, there's some room for subjectivity, right? How many of you like subjectivity in your trading? Odds are none of you. Odds are you want something that is foolproof, something that you can just get into the market, you know exactly why you're getting into the market, you know exactly where you're getting into the market, and you know exactly what you're expecting from the market. And there's really not any guesswork involved, right? That's really what all traders are looking for. Take the guesswork out, tell me what to do so I can make money. So what we've done is we are able to extract the data, and we'll provide all the details on how to do this stuff, but extract the data and enter that into AI, and then have AI tell us exactly where to place our levels and analyze the data for us. So there's no subjectivity. You enter literally based on what ChatGPT or AI is telling you to do. So this is exactly what we did. The AI in this case told us that the second best support was 20,250. And obviously 20,300 was already broken a long time ago, so it wasn't relevant. So this was the next level. The market's trending, came through, used that as support, and got a huge trade off of that. Okay, so we can take all of the guesswork out. So all you have to do is get the info, export it to ChatGPT or AI, and then trade it, and then trade the levels. Here's another one with the buy and the sell, and then here's another one off of this level. You know, short changed it a little bit, but still pretty close. It's within a couple ticks actually. And the trader got in and took profit, and then took profit at the moving average. Could have actually held on for more, to be honest with you. But it's counter directional, so take the money and run, right? Strong support, open interest is strong in that level. So, you know, ultimately the trader took this level. It's 2,200, overshot a little bit. This is a pretty quick chart, so still enough range to get into that trade. There's another one, 75, based on crude oil. There's the level, there's the trade, targets, stop above the high. Lo and behold, more winning trades. So you have a choice as a trader. Do you want to continue to do things in a way that is complicated or difficult or makes it challenging? You want to take the hard way, or do you want to make it easy on yourself? You know, I think all of us obviously want to take an easier way to do it. So what we are doing with this system is, this is something that We're not going to just, give you the system and make you learn it on your own. We will train you on the system. We'll teach you exactly what to do, where to do, when to do it, and then we'll teach you the entry patterns, and then we're going to give you all of that, and then you can also trade with us. And so we are actually going to be trading this system together live. We actually do now, as of this week. We are trading this system live every day. And if you decide to pick up this system, you'll have access to trade with us every day in the morning. Well, not every day, but Monday through Thursday. Monday through Thursday from about 9 to 11:30 every day. And so you don't have to even just do it on your own. You're not left to your own devices to try to figure this stuff out. So as you are still learning and getting a feel for the process and going through the materials, you can trade with us and take the same trades we're taking. And the results are excellent, really, really solid. So we will be trading this in our trade room moving forward. Obviously, you'll need the system to understand the trades, though you're certainly welcome to come and hang out in the trade room and try to figure out what we're doing, but odds are you're going to want to know what we're doing, and so you need the system. Our obligation as a trading academy, as a developer, is to bring our traders the best possible trades with solid performance, the best performance. And in looking at all of the different systems that we've traded over the years, and there have been many, this is the best system we've seen from anything that we've done in about a decade, which is a pretty bold thing to say. Most traders will think at this point, I've heard that before, and I get it. I totally get it. So what I would encourage you to do is to keep an eye on this. Come into our community, check it out. I can promise you that this is the best thing that I've seen that we've traded, and it's pretty remarkable. So it's outperformed everything. The assumption here for our traders is that they all want to make more money. That's the assumption, and so far we haven't been wrong on that. So if we can bring them a system that will make them more money, obviously that is the goal. I thought I had a lot more trades in here, but that's okay. Interesting. Let's do this. Let me pull up a trade that we went through today. Let me do that. And then we have plenty of time for questions. This is actually shorter than I thought it was going to be. Let's see. There we go. Let's download this one. We can take a look at what we traded today. Anybody have any questions so far? Feel free to type them in the questions box. I think that's, as far as I know, the only way to do that. How do I open the image? Thank you. There we go. All right, so what do we got going on here? So we are extracting the data from CME, which is Chicago Mercantile Exchange, and based on futures. Anyway, so the level that we're looking at is 70. Why are we looking at trading 70? It's the biggest. You can look at this and go, which level do you think would be the best? 70. Okay, so if 70 is a level, we're looking for support coming out of these areas. They swept liquidity coming out of that. We got our entry signal. There's the trade. And then there's the opportunity. This was at about 11:30, a little bit after 11:30 today on crude oil, and good reaction there. This one would have been a break even. It looks like up here they got in, got out. Actually, might have been a quick profit, real quick profit. So, but it's really that simple. Again, we put everything into ChatGPT to make it even more foolproof. So, obviously we can all look at this and go, 70 is a good one. We'll trade that. There is more to it than just that. Those of you that are familiar with gamma, we use that as a factor, not gamma exposure, but gamma itself. And we can show you all this stuff and how to do it. But again, we just take all this and we can enter it into ChatGPT and it'll tell us what to do as well. The levels they're amazing. So what else? What other questions do you guys have? Anything else that I can share with you, or do you guys want to go ahead and look at pricing and how to get involved and all that? Good. I don't see any questions coming in, so I assume we are good to go. So with this system, this is launch pricing. We just released this literally this week. So here's the pricing. What do you get access to? You're going to get access to pre-built workspaces for NinjaTrader, TradingView, TickBlaze coming. Obviously, you don't have access to that yet. That's another story for another time. Live trading, real results, support anytime you need it, strategy system manuals based on the theory behind things, strategy cheat sheets with a trade plan. You're going to get access to a private VIP members only Discord where traders will be posting levels and highlighting trades and things like that. You will also get access to our live trade room, so you can come in and trade these levels with us. So you don't have to try and figure it all out on your own when you're first starting out. And you're welcome to trade with us as long as you like. The CME options training guide, strategy guide, chat GPT extraction process. How do you use AI to determine what levels to trade? Okay, so that's all built out for you as well. And actually, let me send this to everyone, entire audience. There's the link. Video training tutorials, and then a 3-day live trading masterclass. So we actually kicked this off today. Of course, we recorded that, and you would get access to that most definitely. But the live trading masterclass is going to be tomorrow and Friday. We are going to continue that masterclass. My assumption is, knowing the response that we got off of this system, there will be more. There will be more masterclasses that we will hold on this system, and so yeah, so that is coming as well. Okay, bear with me one second here. Cool, interesting. Yeah, so that'll be the next 2 days, 8:30 to 11 in this case. Just for the next couple of days, we're kicking off a little bit early so we can get ahead of the market, get levels plotted, and so on. So what we're going to do is deep dive on the system, process overview, how to understand all the options levels, and then how to use AI for analytics and accuracy. And we'll go over the cheat sheets together, daily trade activity, and so on. Another fun fact, we have a love it or swap it guarantee. What that means is that if for any reason you're just not thrilled with it, it's just not for you, we will swap it out for anything in our ecosystem. We've got about 100 tools available from Arc AI. We also have Academy, education stuff, lots and lots available to help you out. So if for some reason you're like, it's just not for me, that's okay. You can certainly trade it for something else, though I think you're gonna love it. I'm pretty sure, because I mean, obviously we're all looking for better trades. We're all looking for more consistency, and that's exactly what you're gonna get with this system. So, so that's kind of it in a nutshell. And then I'll paste that link in there one more time. So I'll keep it pretty short and sweet. We'll open this up for questions. Pricing is $14.95. It's a one-time cost. You don't have to pay anything else beyond that. So once you get it, and you've got it, and you can know it, learn it, and make a bunch of money trading off of it. So obviously I can't guarantee that, but if you do what the system is telling you, you're probably going to see some good things. So of course I can't guarantee that though. All right, what questions? Anything? Anybody have anything? That was kind of a quick one. Didn't take as long as I thought it was going to, actually. Yeah, I mean, if nobody's got any questions or anything, I think we'll just go ahead and conclude it. I don't see any reason to drag things on. We'll make the most of your time. We'll give you a little bit of extra time back to you, and we'll let you go about your day. And be sure to visit the link there and check it out more. There's some. We'll also most likely send you guys an email with details and videos and things like that on the system as well. So be sure to join our community so that you can hear more about how the system is doing. Sorry, my voice is kind of going. And we can kind of keep you up to date on the performance of the system and everything else. But yeah, it's been solid. We've been trading this for, gosh, about 2 months on our own before we released it, and it's the results are fantastic. They're really the best we've seen. So it's pretty exciting stuff. You do not want to miss it. I would highly encourage you to give this a shot and to check it out more. So.
Thank you, Jim.
Absolutely.
Those setup, yeah. Did you have more time? I know you have more time. Do you want to add anything else?
You know, I think we pretty much covered it. You know, I wanted to keep it short and sweet, show off the
It was
system a
good.
little bit, show off what we're doing and why it works. This is the only thing that I've seen that really can highlight where the big institutions are moving the markets, and it works. And it's one of the few things that I've seen that actually does that. So I'll just kind of leave with that.
Thanks, Jim. We appreciate you being here and sharing that with us, especially with all this volatility going on right now.
Yeah, absolutely.
Those setups and strategies look great. Ladies and gentlemen, if you are interested in avoiding all the common pitfalls that traders fall into and want to learn how to stop failing prop firm evals once and for all, and finally achieve consistent results, then Jim Simmons and his team at Neurostreet Trading Academy have a solution for you. And we've placed their special offer in the chat box. That was Mr. Jim Simmons. Is it Simmons or Simons? I always get it wrong.
Yeah, that's okay. It's Simmons, the other guy, the billionaire guy that unfortunately.
The billionaire, that Joel Wyse guy said it the
Oh,
opposite way then.
No, not him. The other, there's a Jim Simons.
The other one.
And,
Yeah, the Jim Simons. Hey, I
he's
thought you guys
the billionaire hedge fund guy, but he actually just passed back in May. But yeah, mine's Simmons, he's Simons. There you go.
Thank you, Jim. That was Mr. Jim Simmons of Neurostreet Trading Academy. Thank you so much for sharing this incredible opportunity and making such a generous offer today for our audience. Jim, great presentation as usual. And please come back and see us on Traders Corner.
For sure. Thanks for having us. Take care.
Thank you, man. Well, ladies and gentlemen, we are down to our last presenter. And I hope everyone is listening closely because he is incredible. He's a graduate of Syracuse University. He's been trading the financial markets for the past 12 years. He wears several hats over right line trading. He is a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the right line trading community. Here to present AI Auto Trader How to Build Wealth Hands-Free is Mr. Rory Powers of Right Line Trading. Welcome back to Traders Corner, Rory.
Hey, Anthony, thank you very much. I really appreciate that introduction. It's always such an honor, really a pleasure to be on Traders Corner. Thank you very much for having me today. Thank you.
We love having you.
All right. I hope everybody still has a little bit of attention left. And man, what a great afternoon, just filled with incredible information. Jim Simmons, Joe Wyse, Tim Racette, Marina, the trader chick. I always love being on Traders Corner. Really, trading is my passion. And I have a really exciting presentation. That's why I'm asking if you could just give me about 30 or 40 more minutes of your attention. My presentation today is on the AI Auto Trader. This is a fully automated strategy that really uses cutting edge technology. It leverages AI technology, uses pattern recognition, and it continuously optimizes its own parameters to adapt to ever-changing market conditions. This is a screenshot, an image actually. This is a live chart of the workspace, and this is a system that will simultaneously trade 6 instruments, really an unlimited number of instruments. We're using it on 6, and my presentation today is I'm going to show you a little bit about how we were able to accomplish these results, just like you see on my screen today. So I'm going to switch my screen real quick, and then we'll come back to the charts. My PowerPoint was acting up just a little bit. Okay, I just want to get the CFTC out of the way real briefly. It's important to know that I'm not a licensed trade advisor. If you're not familiar associated with the risks with trading, please consult with a licensed financial advisor. This presentation is for educational and demonstration purposes only. So with that being said, I want to start off, and I always see other presenters use testimonials, and I always squirm in my chair. It's a little cheesy, I feel. But the first thing I do when I go to Amazon and I'm ready to check out, I say, well, wait a minute. Before I pull the trigger, let me see what other people's experience has been. And I think that Marcy, who's one of our members, her testimonial not only is 100% genuine, but I think it's going to be an experience that will be very similar to your own if you decide to come aboard. And I'm going to keep it the testimonial short because I know it's been a long presentation and I want to keep your attention. But what Marcia's experience was, and it's important to know that she was a complete newbie. Okay, we have a beautiful community of traders that range in experience level anywhere from professional to complete newbie, you know, somebody who's totally green that doesn't know what a futures contract is. That was Marcy. She came in not knowing what a futures contract was, had never traded a prop account, and she asked me, you know, what I thought. You know, I have the privilege of answering the phones here at Right Line Trading, and she called in and inquired about some of our products and services, and told me she was a newbie, and you know, if I thought maybe a discretionary system or an automated system would be the best way to go. And you know, it's a difficult at first. You know, it's a difficult question to answer because you don't know what somebody's interests are. But knowing from experience what most of our newbies have to go through to learn to be successful and consistent and profitable can be very time consuming, frustrating, and expensive, to say the least. So I immediately recommended the automated system. And Marcy picked up on it like somebody I've, you know, was really absorbed the information very quickly. She was very eager to learn how it worked and how to trade. And I think that's one of the secret ingredients to her success. But let me say this, as a complete newbie to getting 16 funded accounts with Apex, it took her about 2 months, 60 days. So she took about, I want to say about 60 or 70 evaluations and got 16 funded accounts and maintains those funded accounts, maybe even more important. So now you have a brand new trader that within 60 days of trading has 16 funded accounts and is getting results that would have normally taken somebody else on a discretionary basis years to be able to accomplish those goals, those accomplishments. So she talks about in her testimonial how the system, the AI auto trader, shortened her learning curve, how she was able to achieve 16 funded accounts, and she was very grateful for our team. And it's important to know that it's not me alone behind the screen here pulling the switches and flipping the levers. I'm part of an extremely talented, experienced team. I think one of the main things that distinguishes Right Line Trading from our competitors is we actually trade the system on the right edge of the chart every morning. You know, we develop software, so obviously our goal is to provide our members with an edge over all other retail traders. You know, being able to have a system that helps predict the future direction of price is very valuable information. And our live traders do a great job of leveraging our signals on a live market. If they have a bad day trading, there's no hiding from it. There's no hiding from it. So we have 3 live traders, our futures traders, Mr. Craig Emery. We have a great prop trader, David Kushner, and our options trader, David Wyse. All 3 have extremely distinguished performance records, track records. Behind the desks, you know, we've got several team members we have several team members that have their master's degrees. The owner of Right Line Trading, Mark Miller, has an MBA, and he's a U.S. Army vet. And I could say he's a great guy. He's a God-fearing man. And he's brought, most importantly, those core military values. And he's brought those to our team, and he insists that they shine through in every department here at Right Line Trading. And what I'm referring to as those core military values is honesty, transparency, and integrity. And that is at the forefront of our company's policies here. So along the way, we've really been blessed. Over the past 14 years, we've really built a tremendous following of traders of all experience levels. And if you decide to come aboard today, you're going to be part of our trading family. And our trading family, as I mentioned earlier, ranges in experience level from anywhere from the complete newbie to a professional traders who are actually in this niche, that loved our software and purchased it, and they are very active contributors in our community, and we're very grateful for that. So, you know, sometimes I always say there's power in numbers, and sometimes hearing from other people what's working, even sometimes more important, what's not working, so we could kind of sidestep those speed bumps, is very valuable information. Anthony did a beautiful introduction, but I just want to introduce myself, the kind of put a face on the voice that you hear in the background. My name's Rory Powers. I'm a Syracuse University graduate, and I reside down in South Florida. My passions are trading, of course, and saltwater fishing. I love to go fishing. I live down by the Florida Keys, and I'm proud to say that my best catch, the best catch of all time, was this beautiful woman here that I call my wife. And God is my witness, is my wife. She's a beautiful Haitian American. She's a half marathon runner, and you can see the legs on her. She can run fast. It's a miracle I caught up to her. But anyway, we have two beautiful kids. We have a 5-year-old and a 19-month-old. And the other picture is my other passion. Family is always first in my mind, but I love saltwater fishing. On a recent fishing trip, Mark Miller and Sergio Oluque Rodriguez, he's our software developer. We went on a fishing trip and we caught a beautiful grouper and some snappers and a few other fish. So saltwater fishing is really my passion. So the genesis of the AI auto trader, and I'm going to jump to my next slide, because the genesis was frustrations of inconsisent results. And man, that's really our as traders. I've had the privilege really of talking to so many traders over the years, and we all share in these common, you know, pitfalls or speed bumps or frustrations in our trading journey. If you've had problems with consistency, I can assure you that you are not alone. You're not alone, and it's important to know that. And 99% of the time, it's not your fault, and it's not my fault. I'm the biggest culprit. Let it be known to everybody here that I'm a little different than the previous presenters, because I can't say that I'm a great trader. In fact, if I have to be completely honest about it, I would have to say that I'm a terrible trader. Why am I a terrible trader? Well, they call it in trading emotional problems. You know, when I first heard somebody say that, you know, hey, you probably got some emotional problems. I thought to myself, you know, I pictured a guy laying on his psychiatrist's couch with his feet propped up, you know, telling the good doctor how it all went wrong in his life. But that's not what they're talking about when it comes to trading. When it comes to trading, these emotional issues, they're human. What it is our human emotions, okay? Human emotions is our biggest pitfall as traders. To give you a perfect example, I'm somebody that loves to squeeze my stop. If I see that P&L, and that's my big problem, is I look at the P&L. If I see that P&L start running up those green numbers, man, do I get excited. And the first thing I do, it's almost a reflex. It's a reflex. I grab that stop and I drag it up and I lock in that profit just to get wicked out and watch the trade continue in the direction of my entry. And I've left hundreds, if not thousands of dollars on the table, or vice versa. If a trade starts going against me, even if the technicals are all still lined up perfectly, I'll bail out on the trade. I'll see that P&L turn red and I start squirming in my seat and I start sweating a little bit because I don't want to lose my money. Very simple. But these emotions, and I was right here on Traders Corner when Chris Vermeulen, Chris Vermeulen did a study. He's a professional trader. He did a study on personality traits as it relates to our trading. And what he found was, as humans, we all share about 10 or 12 personality traits. We all have a different degree of each one of the traits. There's the emotional, there's an analytical, there's a driver. There's 10 or 12 core personality traits that we all share with a certain degree of each one of these traits. Well, come to find out, Mr. Vermeulen had found that 10 out of 12 of these personality traits just don't lend well to being a good trader. So listen, I'm going to blame it on my old man here, on my genes. And I was just, my genetics, it just doesn't lend well to being a good trader. And listen, the benefits of this AI auto trader is it eliminates all human emotion. Listen, so that's really the big one, is those human emotions get eliminated. And there's also a few other problems that are mentioned on my slide, but it's important to know that it all leads to the same place, that cold, desolate feeling of blowing a trading account. I've said it before. I've gone to bed, at night talking to myself because I blew out another trading account. And there were days of glory that I did extremely well. And I thought that I had turned the corner on my trading career, only to find out a few days later that the same thing happened again and again, which really, if you think about it, is the very definition of insanity. If we continue to do the same thing and expect different results, then we may very well have emotional problems for real. So this is the genesis of the AI auto trader, and it has become not only my commitment but my team. We work extremely hard at this to bring forward a product of value. So if emotions are getting in your way and have been getting in your way of your trading career, stay tuned, because I'm going to show you a solution. We've narrowed it down to two things that we believe is going to create trading success. Number one, we have to have the proper tool set. Remember, we're competing against the other retail traders. We want to have something bigger and badder and more powerful than the other guy, the guy that we're trading against. Unfortunately, we're in a battle. We're in a war. So we want to have a weapon that's more modern, that's more technologically advanced, that's more powerful to get the job done. Imagine, just as an example, imagine trying to do a mathematical problem, and you have to multiply four 5-digit numbers and then divide it by 3 more numbers that are 3 digits long as well. And if you had to do it on paper versus punching it in a calculator, well, obviously, if you can punch those numbers in a calculator, you're going to get the answer in 1 second. And the guy who's using his own, smarts, he's going to be struggling. He'll come up with it sooner or later if he's sharp, but he's not going to get the answer not nearly as fast as using a calculator. Well, that's kind of what this AI auto trader is. It's a calculator that's processing an enormous amount of data and making the decisions for you that are all data driven with no human emotion. So ideally, we want to have a more powerful tool. And because we suffer from these personality shortcomings when it comes to trading, we want software that can automatically get us in and get us out at the most ideal, most opportune times. And that's what I'm going to be showing you with the AI Auto Trader. You know, it's important to know that we're in the midst right now of an AI revolution. I've heard other people, you know, equate it to the invention of the automobile. Really, I think we're just scratching the surface of the full capabilities of artificial intelligence. I watched a conference a few months back. The gentleman who's the CEO of NVIDIA, his name is Huang, and he talked about this new technology. NVIDIA happens to own like 90% of the market share of AI technology, of the chips. And we've seen NVIDIA in just this year alone go up 200%. So we're just scratching the surface on the capabilities of this AI and how different businesses can leverage it to become more efficient and increase production. So the benefits of using our AI Auto Trader, I've really just touched on them, but I'll run through them real quickly, and then I'm going to go into detail about how this system can help you. Number one, it eliminates all your human emotions, just like I had just mentioned. We have proprietary technology that I'm going to explain very briefly that will optimize the placement of your stop and your profit targets. Now, I was listening to the presentation, and I heard one of the presenters say, you know, an automated strategy, you know, is a little unreliable because it'll only do well in certain market conditions. And that's a 100% accurate statement. But this new technology that's come out now has changed all of that. That was always the knock on automated strategies. They're only good in certain market conditions. If the market's trending, man, I make a bundle. But the minute it gets choppy or it's ranging, I get chopped to pieces and I can't make money. It's inconsistent. And it's important to know that the technology that we've integrated into this system will dynamically, automatically optimize its own parameters based on market conditions. Okay, that's the big difference. Not only is it going to optimize the placement of its stop and its profit targets based on the average true range of the market, it's also going to optimize the trading hours that it trades. And a little bit more about that later. That's really interesting topic. So the self-optimization of inputs is huge. And this technology that I'm going to show you today does just that. If you're a prop trader, stick around. I'm going to show you a system. I like to refer to it as prop trading on steroids. Whether you're trying to pass an evaluation or once you've passed the evaluation and you want to sustain funding, we've got some customized templates specifically designed for prop traders. So a little bit about what we're trading. As I mentioned earlier, we're trading 6 instruments leveraging the AI Auto Trader. We're using extremely liquid instruments. The bid-ask spread on these instruments is minuscule, minute, very liquid. We're trading the futures index equities, the ES, which is the 500 futures. These are all futures now. The NASDAQ, the Russell, and the Dow. It's also looking at crude oil and gold. So we've diversified our portfolio of strategies to really keep a finger on the pulse of the market. And what I mean by that is, you know, our software is designed to take trades in the direction of institutional money. Listen, they're the ones that are controlling the market. They control which way the market's going to go, up or down, just because of the sheer volume and money that they're putting in to their orders. So we want to follow along in the direction of the trend that they're creating. What we've found is that we're trading in a very news-driven environment where market conditions can change extremely fast. Throughout the week, if you follow, you know, your charts, you know, on Forex Factory, I look at the calendar every morning before I start trading, and I want to know at what time which report is coming out so I could take the necessary precautions. And so what I'm getting at is what happens is when these economic reports come out, these large institutions, they want to transfer their assets, their equity from one asset class to the other based on these reports that are coming out. They want risk to be at the lowest. They don't want to take any risk. So they're going to, based on these news reports, put their money where risk they deem as being the lowest. So we have a system that keeps the finger on the pulse of the market and is only going to trade the most probable entries on a number of different instruments. So I want to highlight some of our most profitable ones. The ES, the S&P 500, we've got a strategy that's trading a 5-minute bar, and we also have one trading a 30 range, a 30 range bar, and a 6-unit Renko. We have 3 different data series to trade the E-mini. The one I'm going to show you now is called the cash register. And this one here, and I'm doing a recap of the month of September. And this has been kind of the norm on a monthly basis. The results I'm showing you are based on one contract after commissions. So after commissions were deducted, trading one contract on the ES on my 5-minute strategy, this strategy in the month of September was able to pull in $3,591.44. We have a member of our community named Robert. Robert is also a professional in this niche, and his expertise happens to be in strategy optimization. And he shared with our members a strategy that he spent quite a bit of time on optimizing with his tools. And he shared with our community a strategy that in the last 30 days now is up over 17,000. But when I did this slide, he was up $14,600. Now listen, it's important to know that these are not back tests, okay? This is data that's on a live market. And I think that's very important to distinguish that. This data is all taken on a live market, and this happened to be shared with us from one of our members. So $14,604 with that 30 range. Another one of our more powerful strategies is on the NASDAQ. And man, you could take your pick on the NASDAQ. We've got some really powerhouse strategies. We've got our retirement plan strategy. That trades on a 2-minute data series. And then we have a little bit more of an exciting strategy that trades on an 8-unit Renko. So different data series, a little variety, but the retirement plan, right around our average, trading one contract, $3,126.76 after commissions. And that's the NQ retirement plan. Now, a lot of people ask me, hey, what does this look like on back testing? Because you can back test these. And we did a back test. Actually, Robert, our member of our community, who is the gentleman I just described, ran this back test for us from January 1st to August 15th. It made about $39,000. Back testing is not as reliable as forward testing, and I just want to put that out there. So we really don't put that much weight in the back testing, but we do average about $3,000 a month, or have been, trading one contract on those strategies. So let me just highlight our prop trading program. We have our custom prop trading templates, and I'm going to start with the evaluation. The evaluation, if you have any questions, if you put them in the questions panel, I'm going to get to them. I'm going to do my best to get to them before the end. That's very funny, John. John says, I'm not gonna repeat that, John, but that's funny. Okay, so if you have a question, I promise you, as soon as I'm done, I'll get to it. So back to the prop trading. Everyone knows if you're a prop trader, most prop accounts, there's 2 stages that you have to go through. Number 1 is the dreaded evaluation, where you have to make, on a $50,000 account, you have to make $3,000 before you lose $2,500. So you got $2,500 of wiggle room to make $3,000, okay? And that's your evaluation. And it's a pass or fail. You're not going to make any money. You're either going to pass and move on, or you're going to fail it and have to repeat it, okay? We've come up with a strategy that really significantly shortens. Remember Marcia, 16 funded accounts in 60 days. And one of the ways we were able to significantly shorten that time to get the PA account or the performance account was with this one-day pass templates. These are templates that will take the maximum number of contracts. For example, a 50,000 account, you could trade 10 contracts, and it will take the minimum amount of ticks necessary to reach your profit goal. In this example would be $3,000 or 60 ticks. We need 60 ticks trading 10 contracts. So what we do is we run our AI technology. We find the time of the day that this strategy is the most profitable, and we let it run for that 30 minutes out of the day, and we go to pass the evaluation with one trade. All right. So that's the spirit of the one-day pass. To give you an idea of the performance of our one-day pass templates, in September, number one was crude oil. Crude oil had a 77% win rate. We have a few others that are right around 50%. We have them on all the instruments. And we share in our Discord community every single week what the percentage is of the win rate. So you know which ones are hot and which ones are not. So with a 77% win rate, and I'm somebody that likes to, kind of under promise, but over deliver. I want to over deliver. So let's say, and I'm just trying to do the math now. Let's say we bought 3 evaluations and they were running an 80% sale. Hey, Rodney. We were running an 80% sale on Apex, and we were able to get the accounts for $33, which is, normally what it is. So we buy 3 accounts for $100, and let's say our win rate's 33%, 1 out of 3. In reality, I think it's higher than that, okay? But if we were to pass 1 out of 3 for $100 in one day and move on to our PA account, well, hey, that really saves us a lot of blood, sweat, and tears, and it gets us to the next stage very quickly. So we have those one-day pass templates for prop traders. This is our NQ, which was about just under 52%. It was 51.85%. And then once you get funded, we change up the strategy just a little bit. We want to sustain the funding and maintain it, sustain it. We want to get you payouts without blowing out your account. So obviously we're not going to be as aggressive. We're not going to scale it up to the 10 contracts. We're going to trade maybe one contract, or maybe even some micros. And we're just going to get you a nice modest gain each day without taking a big risk. And that's what the PA templates are designed to do. In the month of September, trading one contract, our PA template made $1,780. You could see a beautiful equity curve with very, very little drawdown. Drawdown is our enemy, trading prop accounts. So we have these prop account templates that are part of our portfolio. So I'm going to do this. This is the part of my presentation where I kind of explain the logic, because I think it's important. And a lot of presentations don't do this, but I want to do it because I want to show you the logic and the technology that we're using. So this AI technology that I had spoke about earlier, that will put your stop and your profit targets in the most ideal places. It leverages pattern recognition. Wow, what is that? And it optimizes your trading hours. Well, how does it do that? How does that work exactly? Well, it's important to know that we didn't know either up until a few years ago. We were in collaboration with really a world-renowned AI lab. and we went to school and we learned it. You know, Sergio, God bless him, he's our coder. You know, he went with, you know, over the years, I've been working with Sergio for going on a decade now. And, you know, he could code complex algorithms. He does code based on mathematical modeling. And now it's evolved into leveraging artificial intelligence into our code. And how do we do it? Let me show you. Let me bring over the results first. Every single one of our bots runs in tandem with what we call a drone. The illustration that I'm showing you is in the month of October, it broke down by the half hour of the day, what times of the day that it did the best, okay? And these red bars, obviously, they represent, those are the times of the day that the strategy got killed. These green bars are the time of the day that it did well. And we run that over the course of several months. And this time optimization we've learned is a very powerful tool. So with each one of our drones, let me back up just for a minute. Each one of our bots runs in tandem with a drone. The drone is going to do basically what you would picture a drone. You picture a drone flying up above a plot of land and scoping out the land, you know, to see what it all looks like from above. Well, the drone does the same thing in the market. We have the drone taking a trade with a huge stop and a huge profit target, and it's sharing a database with the bot, and it's telling the bot what the average true range of the market is. And it's looking at, in NinjaTrader talk, which is a little hard to understand, it's the maximum forward excursion. What is your maximum forward excursion? And what is your maximum adverse excursion? How much heat are you taking on the trade before it went forward that much? And looking over a 30 trading sessions, it's a lot of data. I mean, it's a tremendous amount of data. But using that data, it will automatically, dynamically place your stop and your profit targets in the most ideal locations. Now, what we've learned is in this fast-moving market is not to do such a far look back. Is to do a little bit of a smaller look back to allow it to adjust a lot quicker, is what we're doing now, and we're having a lot of success doing it. So if I go to my strategies and I bring over a new strategy, what it's going to do, to give you an idea, is automatically it's going to add in trading session hours based on performance. So not only is it telling it where to place its stop and its profit target based on the average true range of the market, now it's also telling it, hey, between 1 and 2 o'clock or 2:30 in the morning, over the course of the last month or so, it's been crushing it. Not so good during these times, but then again at between 9 and 10, or 10 or 10:30, it does well again, and then it has a third hour over here. So what it will do is it will add trading session hours automatically based on historical performance. And a lot of these really correlate with the London Open, I found. Usually about an hour after the London Open or an hour after the New York Stock Exchange opens, and then going into even the Asian Open at night. We get some really good times of the day on these on this diverse portfolio of strategies. So this technology is going to only trade when historically it does well. The other parameters that I wanted to highlight was not only our pattern recognition, which is extremely powerful. It's important to know that we trade this system live every morning on YouTube. The owner of Right Line Trading, you know, one of the core values that he's integrated is transparency. You know, how can you be more transparent than actually trading it, you know, on a live market every day on YouTube? And that's what we do every morning. And I want to invite everybody here today. Join us tomorrow at 9:30 at the market open. It's completely free. We do it every day. Join us and see this system run on a live market. And let me tell you, the results it gets, you just can't do it on a discretionary basis. So the pattern recognition, you know, the markets are very symmetrical. Throughout the trading day, there's candlestick patterns, such as the engulfing pattern with the bearish engulfing, the bullish engulfing, a hammer, the Harami cross. The system over the course of time learns these patterns and knows whether to exit the trade or enter a trade based on certain patterns that constantly form during the course of the trading session. Now, almost, you know, just as important as where we get into the trade is how we manage the trade. What Sergio has done was he has coded directly into the strategy parameters this trade management feature. So it's not looking at your charts at all. Everything is off of the strategy, including trade management. So this trade management that we have has a number of ways that we can lock in profits. We can go for very ambitious profit targets and lock in profits along the way. We had one of our members just this week share with us what we call the NQ scalper. And I'm going to show you the performance on the NQ scalper. But these trade management features that we've integrated, it gives you a lot of the benefits of trading multiple contracts without the risk. If you're going to trade a 2-contract strategy, the downside is on your loss, it's double. So if you take a loser, I'll put that in for you, Susan. If you take a loser on a 2-contract strategy, you lost twice as much, okay? So what we've done, in essence, is we've taken all of the benefits of trading 2 contracts and eliminating the risk. And what I mean by that is we could take 1 contract on the NASDAQ and let's say put a 50-tick stop loss on it. And we could do a very ambitious profit target of, say, 250 ticks. We could trail the trade by a determined number of ticks. Maybe we want to trade it by 50 ticks and let it mature that way. We can go to break even. Let's say after 100 ticks, we wanted to go to break even plus 75, and we want to lock in 75 ticks. So now our stop is at plus 75. But listen, we still have 250 ticks. We've got 175 more ticks to go to our profit target. Now we have what's called our profit window. If we come within 50 ticks of our profit target, our stop is going to fly down 50 ticks behind price. So we're never risking more than we have the potential to make on a trade. And that's very important to being able to lock in those profits as that trade matures. So we've got very clever ways to manage these trades and lock in profits. Listen, you know, I can't tell you how many members and traders I've talked to. I'm going to put it in, Ricky. You're asking, I have quite a few members asking for the link so you can watch for free on YouTube. And I'm going to put it in the chat box. Just give me a moment. So you'd be amazed how many people say to me, Rory, listen, I've got 10 accounts and I just want to make 100 or 200 bucks a day. And that's my profit goal. And that's all I want to do is make 200 bucks a day across 10 accounts and I want to be done. And you know what? I don't want to have to look at my charts or change anything or babysit. You know, I just want everything done for me. And, you know, so that, you know, that's a high order. You know, that's not easy. So with these parameters that I've just showed you, and with having the ability to put a session profit target limit, so if I have for my session profit target $200 and I don't want to risk more than 200, as soon as I make or lose $200, my system's going to automatically stop trading. So we've got some really great trade management features, and I'll just revert back to my prior statement. Entries are very important, but listen, just as important are how we're managing these trades. And man, we've really taken it to the next level. So what difference has this technology made in our results? That's where the rubber meets the road. That's where the proof is in the pudding. With these candlestick pattern recognitions on YouTube just yesterday, we made $4,000 using it on our NQ scalper, trading one contract. This one here in September was up $5,635 trading the NASDAQ, just exiting the trades, giving it a huge stop, a huge profit target, and just exiting on pattern recognition. Did extremely well in September, $5,630. This is the closed loop technology that, processes an enormous amount of data to optimize your trading session hours. So here's the NQ scalper. Mr. Steve, another member of our community, has shared with the community a strategy that yesterday in YouTube Live made over $4,000 just in the last month, because now it's gone just about a month. He's just under $20,000 trading this strategy. It does trade two contracts. I want to put that caveat out there. It's not trading one. It's a two contract strategy, but it's very clever. What he does is he goes for 25 ticks on the first contract, and his stop immediately comes to break even. He's on the second. No, excuse me. The stop is still at minus 25. So even if that second contract comes back and stops him out, it's a break-even trade because he took 25 ticks of profit on the first contract. But it's important to know that you're in the trade once you reach 25 ticks on a runner that could potentially make you $1,000 with no risk whatsoever. And man, has it done it time and time and time again. With those trade management features that I highlighted just a few minutes ago, man, we're really turning out some big numbers. So let me go over my special offer. I know I'm coming right up to my limit, and I know it's been a long day. I want to respect everybody's time, and I also want to put that link. I want you to join me tomorrow, and I'm going to show you. I'm going to kind of remember I told you I'm a terrible trader. Right after I do my offer, I'm going to show my P&L for the last month. So if you come aboard, we're going to do something special for Traders Corner. We always do. It's important to know if you're not somebody that's very proficient at NinjaTrader, if it's all Greek to you, don't worry. We have a team of professionals that not only is going to do a white glove installation, but we're also going to provide you with ongoing support. And what I mean by ongoing support, it's important to know we're not going to send you an email with instructions how to do it yourself, where you'd have to be a Joel Wyse to figure it out. You'd have to be a genius. We're going to remote in, and we're going to do it for you, okay? Ongoing throughout the lifetime of your membership. I always like to show at this point, and I saw Joel also. Joel has reviews, and I've seen him on Trustpilot. His members absolutely love him. And going back to those Amazon reviews, seeing what other people's experience is very valuable. Well, listen, on Trustpilot, we have about 100 reviews. We're at 4.5%, and people are raving about our AI Auto Trader and our tech support. Okay, and it goes on and on. So we've got excellent reviews. We're not going to leave you in the dust. Every week we do a live webinar now for our members in Discord. Charles does, and he goes over the basics. And you're never going to be left in the dust. We're going to include our prop trading templates. Normally, it's a $1,499 add-on for prop traders. Come aboard this weekend, and we're going to include them for free. All of the one-day pass templates, all of those PA templates, the NQ scalper, the ES30 star. We're going to include them all. We're going to include the full portfolio of strategies. Also, if you're somebody that likes to learn exactly how the system works and the indicators, we're going to also include our 2 masterclass modules. The first module goes into each indicator on your chart, each parameter in your strategy. The second one goes into the optimization process and how to build your own automated strategy. You're going to be able to join us, and I'm putting that invitation in the open. You're going to join us tomorrow or Friday, whenever you have time. We're there every day, and I'm going to bring it up over here real quick. Let me go to my YouTube channel. On YouTube, we have a tab here, right here, called the Live. And what I can do is I'm going to create real quick a link for tomorrow. I'm going to schedule the stream very quick, and I'm going to share it with you. So I want you to join me tomorrow at 9:30. It's completely free. You can click on this link and jump in, and I'm gonna showcase this system, and it's going to be tomorrow at 9:30 a.m. Completely free to join us. And I'm going to put this link right in the chat box for you. So if you decide to become a member, you're always going to be able, of course, to trade the system with us. And we stream the YouTube every morning at 9:30 a.m. Oh, let me put that into everybody. That one's just to the organizers. Sorry. And I've got to confess, I'm going to show you my results in a minute. And I use Joel Wyse, who was one of the presenters earlier. I use his trade copier, and man, I love it. It's just incredible. And I'm going to show you the results that I got using his trade copier. But let's get to the offer first. So you're going to join us on YouTube. I put the link in the chat box. And the special that we're running, we're doing the full Monty. We're going to do the full Monty for Traders Corner. We're going to include everything. What I mean by the full Monty is all ongoing updates, all of our strategy templates, full access to every channel in Discord. You're going to get the chart templates, the strategy templates, the prop trading templates. You're getting the whole ball of wax. If we got it, if it's part of the AI Auto Trader, you're going to have it the second you place your order. We do a monthly, annual, and lifetime membership. And what we're going to do for the monthly is we're going to discount it by 200. My associate Brock has just put a link in the room that if you click on that link, use coupon code if you want to try the monthly, it's save $200. Bring it down to $5.99 a month. If you want to go for the annual, it's save $1,000. Normally that annual is $34.99. Use that coupon code, save $1,000. It's down to $24.99. That's $200 a month. $200 a month, and you're going to have, let me tell you something, a real edge, real powerhouse of a system for $200 a month. You'll have a live trading room. You'll join us every morning and trade it together with us. For the lifetime, we're going to do 50% today. We recently raised it, but now we're bringing it back down for Traders Corner. This weekend only, we're going to bring back the 50% discount. Normally, the lifetime is $69.99, worth every penny. And use coupon code LIFETIME, and it'll bring it down to $34.99. Now, the reason I say it's worth every penny, this is what I want to show you. This is where the rubber meets the road. Right in our Discord chat, our members post their daily results. And Simon recently showed his results. He made over $16,000 trading in just one day. $16,000 in one day. Limit Up. Here's Limit Up. Very similar results. Just crushing it using these and the ABC Smart Stop. That's the pattern recognition. The Haymaker. These NQ30 range strategies are powerhouses. And I want to show you, here's Steve. Steve gave us the NQ scalper. Look at the date. This was just yesterday or the day before. You know, many weeks he's been on the NQ scalper. This was just in one day what he's making leveraging this AI auto trader. This is Suzanne, another member of ours, and she's using it in Take Profits, making really good money. So I want to show you, this is the last testimonial, Gary Sparks. There's a lot of other companies, and I don't like throwing mud on anybody. Anybody that I've ever been associated with in this industry is reputable and puts forward a product that they believe is truly going to benefit somebody. And I never throw mud on anybody. And I truly believe every single person that preceded me had that in their spirit and heart. But this testimonial, and I would never say it, but Gary did, and I thank him for doing it. He kind of showed us that he's purchased a number of different vendors' automated strategies, but he puts us on top of everybody else. From his own experience, Gary does not work for us, I assure you. From his own experience purchasing many other bots, he found that RLT kills it. And why he says that, let me show you. What I want to show you with Joel Wyse's trade copier. Let me go back to, well, I'll bring it over here. Using the trade copier, and you'll see if you join me tomorrow, this is Joel's copier, and I absolutely love this tool. But I've used this tool over the last month, and I put into my leader account recently has been the NQ scalper. And I carry it across 6 accounts. I've been trading these 6 accounts now for the past 3 weeks. And you can see the past 3 weeks, I'm at $15,942. And that's right off my control center. I always like to bring over my performance, just so you see that it's not smoke and mirrors. It's not BS. It's 100% true. Listen, knowing how I trade, I would want to see the proof too. But this is right off of my Ninja Trader. Each and every one of my Apex accounts that I trade live on YouTube Live are the only ones checked. And you can see that I've made $16,000 using this AI auto trader. Every trade has been taken using this trade copier on YouTube Live. So it's more than talk. It's for real. So I want to end my presentation by saying, listen, if you've had pitfalls, if you've had problems with consistency, if you struggle with human emotions in your trading, listen, it's not your fault. You just might not be using the proper tool. I want to tell you that I come today with a message of hope. This technology has the potential to be a complete game changer in your trading career. So I want to encourage you and invite you to come join me tomorrow on YouTube Live and check it out so we could trade together. I want to thank you, Traders Corner, and I want to thank everybody. Wait, I'm just 2 minutes over. Let me just answer just 1 or 2 questions. Really sorry, Anthony. I put the link in. Listen, if I can't get to your questions, because I see there's quite a few, there's a lot of questions here. If you'll put your name and your number, only I can see it. And Anthony can see it too. He's with Traders Corner, and he's seems like a really nice guy. But if you put your name and your number in, I'll give you a call and try to do my best to answer any questions that you might have. So I can't get to all of them. I'll just answer one of them. Regarding the rules of prop trading. Ernest asks that many future prop trading firms don't allow automated trading strategies, which is true. Ernest, I've seen that before myself, and we've done our homework on that. And what it is Ernest, what this is considered is a semi-automated strategy. Because our strategy, it's actually considered a self-directed strategy, because in the strategy parameters, we're setting all of the conditions in order for it to execute an entry. So this is not a black box system. If we're going to use our signal B, then we have a set of conditions that have to do with market structure, pivots, the VWAP, a lot of different conditions. We can make these strategies as conservative or aggressive as we want. But because we have the ability to self-direct and pick the conditions of the entry, and then once the trade is executed, our stop and profit target is projected on your chart, allowing you to manage the trade by yourself. That's what they call a semi-automated strategy. And it is allowed, and our members are all getting payouts as long as they adhere to those other rules that the prop firms lay out for us. So that's about all time I have, but I do want to thank you again for joining me. I hope to see you on YouTube tomorrow. Anthony, thank you so much again. It's really, it's always a privilege to be here, and I hope I'll get an invitation to come back.
Rory, thank you. Absolutely incredible. We are very happy with your success, and we hope that our members could join you over there, Rightline. You guys have many great tools. Congratulations to you and your team over at Rightline on developing such a sophisticated system. Ladies and gentlemen, if you struggle with human error, overtrading, inconsistent results, and blowing out your prop or live accounts, that would be me. It happens. Then Mr. Rory Powers over at Rightline Trading has a solution for you to get funded and stay funded. You can learn more by clicking on the link in the chat box. Thanks again, Rory, for making such a generous offer to our audience.
Thanks for having me, Anthony.
Thank you. We appreciate it. Well, ladies and gentlemen, that concludes our online trading summit. The staff at Traders Corner wants to thank you all for joining us today. It's been an information-packed event, and we hope you all enjoy the rest of the week. The replay will be on our YouTube channel. Let me put that in right now. All right, so you should be able to click on that link and then go to our YouTube. And we'll also be sending it out to our members. And have a nice evening. Thanks again for being here. We do appreciate you and wish you great trading success. So go out there, get that money. Thanks again for being with us today, traders, and have a successful trading week, month, and year.